being here. I'm William Rosenstack, or as they say, Rosenstack. Good morning. If any of you attended Jerry Seinfeld's recent show here in Singapore, can I see some hands? Anybody? Okay, a couple. Did you enjoy it? Yeah. Good. Then I know at least 5 of you, plus my employees over there, will find my New York sense of humor at least mildly entertaining. For the other 495 of you, my apologies for taking up the next 15 minutes of your life and lowering your expectations of what we're capable of. Not to worry though, the rest of this day will be much more rewarding. I stake my reputation on it. A little more than 6 years ago, former President Trump and North Korea leader Kim met here at Capella. Exciting, of course. I can't mention the Donald without at least touching upon the presidential debate that happened a couple of weeks ago. I've had the honor of meeting President Biden several times over the years, as my uncle was the longest serving U.S. Senator in New Jersey when he died in 2013. They were good friends as they both had an interest in mass transit and more particularly trains, something that our Chinese guests have bragging rights over, for sure. So I watched the debate with great hope. I was sorely disappointed in what I saw, as were most friends and colleagues in my highly unofficial poll. My sadness came from the realization that for the next 4 years, whoever is president will be rightly criticized for being incompetent. That will continue the ugly cycle of undermining every presidential decision, sowing more divisiveness in Washington, resulting in less stability, which has the potential to be uncontrollable force for manipulation, ugly consequences to say the least. Second, I was embarrassed because the perception it gives to the rest of the world. How can any other leader rely on a U.S. leadership that is unpredictable and unsupported by maybe half of the country? It's impossible they won't, which means in effect, the world's leaders will have to form new alliances or merely withdraw and focus on nationalistic policies, thereby devaluing the U.S. influence in situations where it may be needed. Back to a happier topic, though. Capella. The most important event here after the Trump and Kim meeting was in March of this year when the queen of essentially everything stayed here on the leg of her Asian tour. You know who I'm talking about, right? Who am I talking about? Taylor Swift? She increased the GDP by Singapore by 3% in Q1 and 0.2% in the year over year. That's pretty amazing. But if we consider this conference, and by extension, the people in this room can be more impactful on Singapore's economy and the region. Already before I took the podium, we collectively generated more than 200 hotel nights at Capella, St. Regis, Ritz. Supposedly a standard room here night is $5,000 tonight. Think of what we just accomplished. You guys got a great deal. In addition to the hundreds of thousands of dollars I've been generating in airline tickets, F&B, and possibly the local karaoke scene. Lastly, by my estimate, if we can complete 10 IPOs in 2024, then we've got her beat. So who doesn't want to be bigger than Taylor? Come on, I do. Let's get moving. Hold on, I got a bit off track. It's supposed to be an opening speech welcoming you to the 2nd annual ORY APAC conference, and instead I've been babbling on about Jerry Seinfeld, Trump, Kim, Taylor Swift. So again, welcome. To those of you who traveled the world to be here, to those of you who braved the MRT and the humidity, thank you. We truly appreciate that you've chosen to share your valuable time with us, and it is an honor. To our co-host Nasdaq, specifically Bob and Hiram, thank you once again for trusting us with your brand. We know it's the best in the world, and we're always proud to be associated with it. To our sponsors, we appreciate each and every one of you and your generous support. We really do. Diamond, we have Ascent, E.F. Hutton, Creek & Chew. Platinum, we have Bird & Bird, Bowstead Securities, Edgar Agents, HTL, One Stop Assurance, SOCC, and WWC. Gold, we have Mazar Group, Notified, Ogier, Rajah Tann Asia, V-Stock Transfer. Silver, Exchange Listing, Event, Albright, CNP, FA Corp, Migo, Skyline, Shook Lane & Bach, YY Accounting and Consulting, Enterprise, LMH, Rectitude Holdings, and YY Group. And a special thanks is deserving to the Law Society of Singapore and the Singapore International Chamber of Commerce, welcoming us as a member with open arms, even though we're the new kids on the block. We'll continue to endeavor to make you proud. As the opener of this year's conference, given my challenging task, I did what any New York lawyer would do when tasked with such a challenge. I asked ChatGPT to write the speech. It didn't go well. Over and over, I revised my request to arrive at something that was a smarter, more entertaining version of me. But instead, I kept sounding like some robotic New York lawyer making jokes about coffee meets bagel. Which, by the way, perplexes me. I mean, bagels to a New Yorker are not sexy. There's nothing sexy about a bagel. They're round, chunky, loaded with carbs, sort of like me. Don't get me wrong, I'm Jewish, and being Jewish, I know and love bagels. Really do. They follow us in the great circle of life, feeding our friends and family from our circumcision, ouch, to our bar mitzvah, mazel tov, including our post-wedding brunch, and every meaningful event, only sadly ending with a smear of whitefish salad at our funeral. Bagels are our comfort food. But to use as an invite to a romantic moment, I don't think so. If I approached my wife in 1987, my wife to be, in 1987 and said, hey, hot stuff. I mean, it was 1987. How about we get to know each other over a yummy, steaming bagel? It's unlikely that my coffee would have met her bagel that night, or any night for that matter. An analogy would be naming a US dating site using the name Durian. I love durian. Because I couldn't think of something witty to say involving a durian and dating. Who could? I asked ChatGPT to help, and this is what the world's smartest minds came up with. Why did they name the new dating site Durian Love? Because the smellier on the outside, the sweeter and more precious on the inside. I was concerned that the joke may not be as, hold on, it's okay, that the joke may not be as funny as ChatGPT thought, so I asked it to write another joke acknowledging that the prior joke failed. And after billions of dollars and literally trillions of calculations, this is what they came up with. Why did the durian-themed dating site change its name? Because after that last joke, they realized sometimes you just can't get past the smell. I mean, blame that on Microsoft. Okay. A life lesson I've passed on to my 3 sons is that trying to make someone smile is a wonderful way to show that you care enough to connect. After all, we are here because we want to connect more. What a wonderful goal, given today's world fraught with war, climate catastrophes, economic challenges, xenophobia, and general malaise. A world with a level of tension we haven't experienced for probably 60 or 70 years. Building bridges is a necessity if we want to ensure that there is a world for our children to inherit. To connect people, we need to break through the tough exterior that each of us has been building our entire lives to protect ourselves from its challenges. However, my hope for the next 2 days is that we approach each other without hesitation. We take comfort in our differences. We see them as a collective strength. It will be worth it, trust me. As every relationship begins with an introduction, and New Yorkers can seem unapproachable to an outsider, I thought I'd be uber efficient and get my part over with now. So here's me and our firm in a nutshell. Prior to 1992, I grew up in New York, went to college in New York, was a ski instructor and a fishing guide in Wyoming. That's all you need to know about me pre-1992. In 1990, between 95 and 97, I graduated from law school in New York, clerked for the U.S. Bankruptcy Court, and worked in a private equity firm as general counsel. In 1997, I joined a friend at a small securities law firm, and that's where I found my career path. 5 years later, in 2002, we started the predecessor of both Ortoli Rosenstedt and Ortoli Rosenstedt Yee. We were hungry, and our most valuable skill was creative problem solving. Fast forward to 2016, and Jason joined our band. He was young, but wise beyond his years, and quickly focused our resources in Asia. Shortly thereafter, superstars Grace and Yorona completed our senior Asia-focused team, and we began to run. Then the pandemic hit. During the next 15 months, out of the office, like many of you, we learned to adapt to the new world order of remote work, virtual meetings, Zoom, Nasdaq bell ringing. We also learned that our capabilities were not limited to time or space. That new knowledge led Jason and I to give serious consideration to opening an office somewhere in Asia. We wanted to be able to better service our current Asia clients as well as prospect for new markets. And in early 22, we came here during the height of the pandemic. Despite the challenges of traveling during COVID, we recognize the many benefits of Singapore, the world's most efficient MRT, Hainanese chicken rice, 5-star rated Singapore Airlines with the most beautiful stewardesses in the world for 19 hours. It's like a mini vacation, really. Kind, welcoming, intelligent professionals and friends. Over the next months, we came several more times and concluded that we could build a business here utilizing our New York attitude and our secret weapon, Jason. We signed a lease. We signed a lease but didn't have any employees. Talk about jumping first and asking, how deep is it? After. It took us another 5 months until we found our first. Ivan, where are you? Ivan's one of a kind. He took a job rejecting Sidley Austin before we even offered it to him. Jason and I left the interview, looked at each other, and simultaneously asked, did we even make him an offer? And then we started giggling. We were sold by his desire to leave a well-established pathway for future success and risk it all to join us, a relative unknown from the other side of the planet. We decided that he saw the world as we did, and we had no choice but to bring him into the family. Ivan rewarded us by working the next 6 months alone in the office on essentially New York and Singapore schedules without ever complaining. He's a tough man. Exactly 1 year ago today, Jason moved with his family here, exchanging the dirty, angry streets of New York, those are Jason's words, to the spotless, happy streets of Singapore. Our plan was quickly coming into play. We have continued to add talented, hardworking, creative problem solvers, both here and New York, and now have a capable, globally balanced practice, literally working around the clock across all time zones. Again, an industry first as far as I know. We have almost 35 lawyers with offices in New York, Singapore, Miami, and soon to be Hong Kong. We speak more than 10 languages. Most of our attorneys were either born in China, Singapore, or Europe. Of the 5, only 5 of us were born in the US. I'm a minority in the firm that I founded. I couldn't be happier. Like New York or Singapore, ORY is a true melting pot, and that's where our strength comes from. Singapore's our Asia hub, of course. We're putting our money where our mouth is. Our staff here has grown 800% in 1 year. We doubled down on our investment in Singapore by literally doubling our office. Our recently completed renovation at 20 Collier Quay had 2 objectives: building a law office that had the capabilities to house many lawyers and host clients in style, and create a space for the capital market community to call its home in Singapore. Our conference room, with a view of the MBS, carries the theme of East meets West, the essence of Singaporean culture. But our attempt to be creative doesn't stop there. We stop there. We now have our own branded cafe, ORY Coffee, with our lawyers serving as your personal baristas, and encourage you to visit for a cup of locally sourced roasted beans. Our theme is New York origin, local flavor. Can't forget the U in flavor to be a true local brand. Ivan cannot wait to serve you his specialty hand-dripped coffee. Where else can one get a kopi gao while the barista updates you on the status of your F1 filing? The coffee will be free of charge, but we just ask that you take a photo under our neon lighting signage and post it on your Insta account. And remember to use the hashtag ORYCafe. We've added something even more Wall Street, it's almost like an Apple commercial, in our office space, but I won't tell you what's here because that would ruin the surprise. You have to stop by and check it out yourself. It's worth it. As mentioned, we value creative problem solving as an integral skill for being an effective counsel. We taught our young lawyers how to be pragmatic in their application of the law. As a result, in 2023, our capital markets practice was involved in almost 20% of all Nasdaq IPOs, either as issuer or underwriter counsel, and this year, we are on track to exceed that, with a little help from our friends at Nasdaq, right, Hiram? Yeah, good. In just this month, we completed the first ever IPO involving a Chinese VIE entity in the post-CSRC era. This month, we expect to complete the first de-SPAC on Nasdaq involving 2 public companies. I didn't want to do that, but we're doing it. We continue to evolve, innovate, and deliver. Our collective brain is large and continues to grow both in the US and Asia. Our future plans involve Hong Kong, with the Singapore office on track to serve our clients the best coffee in the world. We now have our eyes set on equally lofty goals in Hong Kong later this year. Where many in the West see uncertainty, we see room for our firm to fit in, as Hong Kong's unique opportunities will complement our US and Singapore offices. By building a network that connects US, Singapore, and Greater China, we believe that we can offer our clients benefits that are truly one of a kind in the industry. To spearhead this, we have recruited Diane Fan from EY, whom you will have the pleasure of meeting in the fourth panel today, alongside of Jason. Stay tuned. Latin America. Continuing with our global ambitions in 24, I traveled several times to Brazil and Chile and Latin America to meet with our friends and partners. Targeting Brazil is obvious, but Chile is the unsung hero in the region because of its stable economy, underpinned consistent rule of law. There we have found sophisticated professionals that understand the value of global trade. Chile has proudly been considered a high-income economy by the World Bank since 2013, and with the world's largest deposits of lithium and top 5 of copper, gold, silver, and moly, as well as government incentives for tech development. I think it's a country built for the 21st century, and we know we have contacts at the highest levels, so that should be interesting. Our tagline for this year's conference is Connecting the World, but our more specific goal this week is to continue building bridges between Asia and the US. And through mutually beneficial relationships, we can do that. Our clients have partnered with us in ways beyond our legal expertise. For example, Oh My Home was in charge and handled our office renovation here. Please come by if only to enjoy our coffee and marvel at their handiwork. By the way, they completed our total reno in only 2 months so that we could show it off to everyone here. It's really unbelievable, given that I've done 3 renovations in New York and it takes forever. Global Mofi created the opening video you saw moments ago, and that speaks for itself. Rectitude Holdings moved and warehoused our office equipment and furniture during our renovation without a hiccup. By the way, they invite you all to attend their listing ceremony today and bring you the #1 lion and dragon dance in Singapore during lunch, so don't miss it. YY Group provides our cleaning services for our office, and you can literally eat off the floors, not that we've had you yet. Our tireless lawyers really went above and beyond their already intense day and night jobs to make this conference special. Ivan, Alex, Junling, Yvonne, Brian, Jack, and Yuen, without your help, we would not have been able to pull this off. Tag and Diane, thank you for dragging our Hong Kong relationships all the way here. And of course, without the New York team ensuring that every US component is handled with perfection, we would be out of business. So, Yorona, Tim, Grace, Crystal, Travis, Yuen, Richard, Jennifer, Zoa, thank you. Along those lines, I felt that Jason had enough to do as our managing partner in Singapore, head architect, construction foreman, visionary interior designer, and chief of furniture import. But no, he found time to supervise all of our Asia-based IPOs and the aspects of this conference too. Yes, he can take blame if things go wrong over the next 2 days. Okay? Go to him. I'm just a pretty face. Amazing. Thank you, Jay, wherever you are. Lastly, without Darlene and her staff at the meetup, all that collective hard work would have been wasted. They hammered out every detail and ensured that we're lined up for success with a smile, so thank you. Part of the message. You almost made it through. Congratulations. Another minute and no more of me. Last month, a white buffalo calf was born in Yellowstone National Park. This is noteworthy as the odds of this happening are 1 in 10 million. In case you're not familiar, a buffalo or bison typically looks like the big one. The Lakota Indian tribe has called the Yellowstone region its home for 3,000 years and holds the birth of a white buffalo as a sacred harbinger for change. The current, and they call this one Returns Sacred, Wahangli. The current Lakota chief, Looking Horse, holds that when Mother Earth is sick, these white animals are needed to reset the forces that bring peace and harmony to all. The chief believes that either we face disasters, illness, and false leaders, or we use this sign to decide to unite globally and return to a healthier planet. It is with this ancient message in mind that we reiterate our goal for this year's conference, to connect and really to heal. It is our sincerest hope that these 2 days serve as a conduit to strengthening old bonds, creating new ones from which global unity will bloom. We make this a mission of ours. A common Lakota prayer for the protection of warriors and loved ones about to begin a journey involves the term Mitako Oyasin, which roughly translates to all my relatives, or we are all related. The concept that we are all related to each other strikes me as especially poignant at this moment. To any Lakota out there in the audience, forgive me for my white man attempt to pass on this blessing in your native tongue. Wan ka, wan kan, han ka, kin. Mitakoya oyasin. It means may the Great Spirit bless you and keep you safe from harm in your journey, all my relatives. Let the conference begin. Thank you.
Thanks so much, Bill. So thank you so much, and we're so happy to see every single one of you today. So I'm sure you're wondering, right, like how am I going to follow up Bill's speech, referencing my favorite entertainer, of course, Jerry Seinfeld, not Taylor Swift. So I really appreciate Bill, and of course, each and every single one of you today. So you may be thinking, right, who is this small girl, but how does she have so much energy? So I'm Ivy. I'm really excited to be your MC for today. And of course, I was told that today we have guests from all over the world. So, just a show of hands, all right? How many of you here are from Myanmar? Hey, I was told that we had guests from all over the world. So I guess it's just me from Myanmar, right? So, but wait, how many of you are from the States? Ah, yes, I see a few more hands. How many of you are from China? All right, really good. So I assume the rest of you have been eating good food like the real Singaporean you are, all right? So today, like Bill mentioned, it's all about connecting the world at our ORY conference with speakers, sponsors, and guests like yourself from all over the world, and we're so happy you're able to join us today. Before that, can I just check my guests at the back, are you able to hear me? Just give me a little wave if you're able to hear me. All right, some of you are waving with your coffee in your hand, which is a good sign. So that means you can hear me clearly. All right, so today I was talking about on day one that we're going to delve into key market drivers, featuring robust discussions today with founders and experts on sustainable investing, regulatory strategies, fintech innovations, and most importantly, of course, global trends. But of course, before that, we want to thank our sponsors, like Bill, thank them as well, who really believed in our vision today and brought this conference to life. So first, Ascent Investors Relations LLC, Rajah Tann, Creed & Chu CPA LLP, Bird & Bird Wistad Securities LLC, Edgar Agents, HEL CPAs and Business Advisors, One Stop Assurance PAC, SFCC Capital Consultancy Private Limited, WWC, Mesa Group, Notified Audio, Rajah Tann, V-Stock Transfer, Exchange Listing, Albright Law Offices, Legal Corporation Limited, FA Corp, CNP, Shulton & Bart LLP, YY Accounting and Consulting Corp, Oh My Home, Skyline Corporate Communications Group LLC, Rectitude, SIC, and YY Group. All right, so that's our list of sponsors. Can we give them a big round of applause? So as you know, today we have a jam-packed schedule. It's really action-packed, and we don't want you to miss out on any of it. So most importantly, you will notice that you can also access an e-program booklet. And in order to do that, you can follow the steps. Oh, I thought the steps was on and everyone's taking photos. So to access the e-program booklet, you just have to visit our website at oryconference.com, click on the agenda tab, and all the way down, you'll see a QR code. So you can scan the QR code for event details, the topics we'll be covering today, and even the speaker biographies. 所以我想现在呢，首先热烈欢迎我们各位贵宾今天能够出席 ORY 亚美资本市场会议。我是 Ivy， 非常荣幸能够成为您今天的司仪。如果你想更加了解今天的，比如说流程啊、话题啊，或者是演讲嘉宾的背景呢，你也可以上 ORYconference.com 上的二维码，扫描二维码呢，你就可以下载今天的电子手册。好啊。 So today, day one, is all about connecting ideas, all about connecting our thoughts around, APAC and US and your IPO experience, right? But day one is connecting ideas, and day two, this is the part where I'm sure I'll see more smiles in the audience. It's all about connecting with one another. So you can look forward to a day of really fun party activities we've planned for you tomorrow. And now, without further ado, we're gonna get started today, right? I'm sure everybody is ready to kickstart the day with your coffee or tea in hand. Let's get started. So we have a very special guest who would like to give his warm welcome. He's from this small association that you may or may not have heard of, Nasdaq. Does that ring a bell? Yeah. I think some of us have heard of this, right? So let's watch this special video from Bob McCoy, Vice Chairman of Nasdaq Stock Market.
Good morning, everyone. Welcome to the conference. My name is Bob McCoy. I'm the Vice Chairman of Nasdaq, and I'm the Chairman of Nasdaq's Asia Pacific business. And it is really my great pleasure to be able to welcome all of you to this conference here in Singapore. Wonderful, beautiful Singapore. Quite honestly, I'm jealous that I can't be there with all of you. 400 plus attendees for the next couple of days, really enjoying beautiful weather. But more importantly, enjoying important content, learning from some of the great experts that you're going to hear from in the accounting, the legal, the banking communities, who are really going to share with you their experiences, their knowledge, helping you to understand the U.S. markets, how to navigate them, and how to most importantly navigate the process. So honored that we're really talking about the fact of how Nasdaq and our partners at ORY and really others in the ecosystem here in Southeast Asia can be so supportive of companies that are looking to do a listing in the United States or do a listing outside of Southeast Asia. The ASEAN region is really important for us at Nasdaq. We had 40% of our listings from Asia last year. We have over 400 companies from all across Asia that are listed with Nasdaq. It's our fastest growing region. Number two outside of obviously the United States, our domestic market. But we're also seeing so many investors who are interested in this region. They want to diversify their portfolios. They want to have companies that are fast growing. Some of small, medium-sized companies from this region who are in businesses that are tapping into the amazing total addressable market all across Southeast Asia, and also to be able to build businesses, fast growing, some of small, medium-sized companies from this region who are in businesses that are tapping into the amazing total addressable market all across Southeast Asia, and also to be able to build businesses, fast growing, some of small, medium-sized companies from this region who are in businesses that are tapping into the amazing total addressable market all across Southeast Asia, and also to be able to build businesses, fast growing, some of small, medium-sized companies from this region who are in businesses that are tapping into the amazing total addressable market all across Southeast Asia, and also to be able to build businesses, fast growing, some of small, medium-sized companies.
I can see some of you have heard that, and some of you are confused. A lot of you are not awake yet, so that's good, right? The information is so important, we have to repeat it a few times. So I hope you got the message loud and clear. But of course, right, that doesn't deter that we really appreciate Bob for sending us his warm greetings. And clearly he hasn't been in Singapore yet because he said that the weather is really beautiful. And I'm sure all of us can attest to the humidity, right? So don't worry, especially our friends from Europe, Peter gets it. So beyond this special greeting from Bob actually, we're really honored to have an exclusive dialogue session with another expert from Nasdaq where we get to debunk some myths around the IPO experience. I'm sure many of us in our lifetime of, in the business, you've heard so many different, questions and myths, and we don't know which ones are myths and which ones are, how do we separate facts from fiction? How do we really understand, right, this IPO experience? So this is why we're here today, and all of us are gathered here because we want to bridge that knowledge gap to provide the most accurate information for you. And here's how we're going to do it. We're going to have a really smiley man from Nasdaq, here in Krishnani, IPO Director of Nasdaq Stock Market, in this exclusive one-on-one dialogue with Jason Ye, Managing Partner of Otoli Rosenstadt Ye Private Limited. So without further ado, can we give a big round of applause to welcome Karen and Jason.
Wow, talk about if there's something goes wrong, blame it on me. Now you have to blame that on me. Yeah, refund please, Capella. Yeah. So thank you, first of all, for all of you for being here, traveling from the States, from China, from Hong Kong, from wherever that you came from. Really honored to have all of you here with us for this particular event. So my name is Jason Ye, and I am the managing partner of Otoli Rosenstadt Ye Private Limited, our affiliate office of New York law firm, or Otoli Rosenstadt LLP. And then this is Chris Mani, the IPO director of Nasdaq Singapore.
I'm glad to be here. Thank you so much for having us.
So, Karen, I'm sure that you see that there are a lot of IPO activity going on at the moment. So from a macro standpoint, maybe you could share for us. From the exchange perspective, what are you seeing in the market? What's the sentiment on the US IPO market at the moment?
Okay, sounds good. But firstly, I think big hand to Jason and ORY for organizing this conference. Beautiful hotel, beautiful location, amazing ballroom here. I cannot be more excited, so I can't wait to spend more time with all of you. But just in terms of macro IPO, I think we see a very strong pipeline in Southeast Asia as we go along. We've really seen the pipeline grow from a handful of companies about 4 years ago to a dozen of companies today, and we do anticipate a steady in IPOs in 2024 as well in terms of traditional IPOs, SPACs, or even business combinations. Now, the important part here is investors want access to growth markets like APAC or Southeast Asia. That wasn't the case 10 years ago. There was no way to diversify the portfolio and invest into other regions. Now they do, which is the most exciting part. So what we see is companies coming from various of sectors. So we see technology companies. Every company wants to be a technology company, be it a tech-enabled company. Anything to do with technology is of prime importance, and that's where Nasdaq stands in the middle of it. So we see all sectors coming, like fintech, healthcare, e-commerce, electric vehicles, even both automotive makers as well as companies involved with charging infrastructure. So in the first half of this year, we welcomed 66 IPOs, raising a total of around $9 billion US, total of 53 operating companies and 13 SPACs that were listed with us. And again, Nasdaq's leadership of 42 consecutive quarters as opposed to our competition NYSE. Now, some of the marquee listings include Waystar, which was the largest US IPO a few weeks ago. We also did Kaspi, which was the first IPO out of Kazakhstan, believe it or not. And this was the first ever listing, and it was one of the largest this year. We also did Astera Labs, which is the largest semiconductor IPO on the US exchange. But also, in addition to these IPOs, we've had several companies who've transferred their listings to Nasdaq. The biggest one was the Science Applications International, about $8 billion in market cap. The most interesting part of all of these statistics is 50% of all of these IPOs came from international companies. These are not domestic US companies. Now, this is very important for people sitting in this room, that there are companies internationally looking to get access to that capital. Now, some of the marquee names from international ones are Super High International, which is, I'm sure, everybody's favorite hot pot in this room. So is mine. We also had Marex from UK. We had Ferrovial from Spain, and I'm sure most of you would have heard of Webtoon from South Korea. That was a big one that came in a couple of weeks ago. Now, so the first half of this year is off to a strong start with several high-profile and sector-defining names. And looking back at the second quarter of this year, the market activity has actually reached its highest level for the first time in the last 3 years. There's a trend that we see, which will hopefully continue in the second half of this year as well. Now, the listings volume is consistent with our recently launched IPO Pulse Index. I'll talk about this in a bit of time, where we suggest that listing momentum should continue to increase as we go along in the second half of this year. Now, there's also a healthy pipeline of APAC companies with active F1 filings at the moment, which is the foreign private issuers. Majority of them are which are Chinese, but also significant companies coming from Southeast Asia as well. Now, an interesting fact, just to give you a macro perspective, in 2017, Nasdaq had about 15 IPOs from the APAC region. In 2023, which is considered to be a dull IPO market in that sense, we had 50 companies from APAC region in 2023. But that just goes to show the momentum and the increase of listings from the APAC region to Nasdaq.
And hearing that, it's interesting that you mentioned that we're seeing so many more companies from APAC region to get listed, wanting to list onto Nasdaq. And we as professionals are seeing that demand as well. So there are a couple of main reasons that we see. Number one, obviously, to access the global capital. Number two is for the brand reputation that comes with being a Nasdaq company. So what are other things that we can consider in terms of being a benefit of a Nasdaq company? And why do companies want to list on Nasdaq? So what are you seeing from companies that we deal with or we talk to on a daily basis?
Yeah, that's a good question. So I think firstly, issuers in this room need to understand why US listing, right? There are clear few benefits why would someone consider that. So it's the valuation and liquidity, it's the deepest capital market in the world. You get global branding and visibility, it's the regulatory gold standard, ease of secondary offerings, very easy to raise capital. That's the challenge with some of the local issuers in local exchanges. It's difficult to raise capital here. But with US, it's much simpler. We also have M&A currency, ESPP takes care of it, largest universe of peers, largest universe of analysts. So some of the broad benefits that companies look at US listing for these specific reasons. Now, I personally observe that most companies should believe and belong to the local market. But then each year, each country will have companies who choose to look outside. And when they do so, we believe Nasdaq is the best market because of our life cycle solutions, of ESG, corporate governance, and investor relations. And I think from a mindset perspective, I think a lot depends on the business model that you're in. So do the companies have operations outside the US? Do they get revenue outside the US? Do they want to be perceived as a global company? Do they want to expand out of their local markets? These are some of the questions that need to be answered by the issuers themselves, and most importantly, whether they want to be perceived as a global company. If yes, and if you want to have better valuation or liquidity, then Nasdaq is the best choice for such issuers. The truth remains that US is the undisputed home for listing and trading shares in the world's most dynamic and fast-growing companies. And that's how we've seen a big uptick in international companies coming on board and so forth.
So for a company that are looking to list onto Nasdaq on the exchange in the United States, and there are many of them are in the audience today, and from an exchange perspective, what have you been seeing that what they did well that made their process shorter and smoother, as opposed to a longer runways? Because we've seen companies sometimes they can get listed within a year, 2 years, 3 years. So what are some things that you think the company can think about before they launch their IPO effort to sort of shorten up the process?
A good question. So maybe I'll just touch back on what are the top recommendations provided by Nasdaq as to how you can, when you're looking at an IPO 12 to 18 months down the line, what are the things you need to start thinking about? So one of the recommendations we provide is to start preparing early. Behave like a public listed company much before you're public. Now start to build your internal controls, form an IPO team, plan your corporate governance structure, start reporting on the quarterly basis, so it becomes as a natural habit when you become public. Now, the first 2 quarters when you're public is super important because you get that, trust from the early investors. If you do not perform in the first 2 quarters, the confidence goes down. So it's super important that you have the ability to forecast your numbers, but also to deliver and execute on that strategy in the first 2 quarters. And also a reminder that when your stock, let's say, starts trading at $5 and then moves up to $10, there'll always be sellers. There'll always be people taking profits. you'll have to find buyers at every level of where your stock goes to. So having a robust investor engagement program is super important as you start thinking about an IPO 6 months, 12 months down the line. One of our other recommendations would be to attending conferences and meet investors prior to the IPO. So depending on the size of the sector you have, there's a lot of activity in the US. There's a lot of experts in the audience as well who can share that information. The idea is to get feedback from the investors early on. And you can change your strategy based on that feedback and go back to them to get that investment. A lot of companies get this wrong. They start thinking about their investor relations, they start thinking about their investor meetings much after they are public. They focus too much on the IPO, they focus too much on getting a deal, which is important. But at the same time, you've got to take that feedback, you've got to incorporate that strategy and go back to take that investment. Also, some of these conferences are organized by sell side. You can get some analyst coverage based on that, so it's always good to get that feedback early on. Now we walk the talk, so Nasdaq holds 2 investor conferences in London each year. This is a prime example of how companies listed on Nasdaq can get access to European investors. CFO of Apple attends 1 conference a year, and that's a Nasdaq conference in London. So it's super premium and a very highly rewarded and respected conference.
So it seems there's a lot of benefit being part of the Nasdaq family. And okay, so now I'm listed on Nasdaq. We always say IPO is always the beginning of the journey. So how can I maintain my success as a public company? What are some things that I've seen that help the company to sort of maintain their liquidity, the stock price, as well as able to raise additional funds?
So one of the key aspects of partnering with Nasdaq is we provide complementary investor relations services, but also a visibility proposal to our clients to get the issuer to be a household name in the US, right? So the exchange works with you closely to make sure that you're successful. Now, the prime example why Nasdaq is successful because the companies listed on our exchange are successful. And that's the ethos we believe in. That's the value that we believe in. 90% of our marketing budget goes back to the companies who are listed with us. If Apple, Nvidia, Microsoft, Google, all of these companies are not what they were and they wouldn't have changed the face of planet Earth in the last 20 years, Nasdaq wouldn't be where it is today. So partnering with the exchange in terms of getting those investor relations services, social media, or visibility proposals to get that household name in the US is something that we recommend to our clients. But some of the basics I would recommend is running an efficient IR program. And there are a lot of IR experts in this room who will tell you how it is important to deliver your story in the best possible way. A CFO is not only the one who manages the business or manages the finances, but he or the IR head should be responsible to tell the best story in the best possible manner. The other basic one would be the ability to forecast your numbers, and this is so crucial. When you take money from your early investors, when you tell a strategy, it's super important that you execute on that strategy. Maybe 6 months, maybe 12 months after, have a clear path of where the numbers are heading towards. Now, we did an IR pulse survey in APAC with about 900 respondents, and this is an interesting one. And these issuers were listed on all local exchanges and US exchanges, and we got the results, this was a couple of months ago, where there were 2 main challenges for IR teams that came up. One is secure capital from international markets. Second was attracting capital from the generalist investor community. In other words, how do you stand out? So on a high level, managing shareholder diversification, investor targeting, prioritizing correct regions or countries, overall managing corporate access for the issuers is getting more and more important. And as a core, it should be the core focus for the issuers in this room. Now, while we've seen post-MiFID II, brokers getting more expensive, they have a commission structure, they have their own relationships to leverage on. I'm not saying brokers are not important, but we are seeing more a trend where APAC issuers are doing it themselves. So they're building a corporate access team within themselves and targeting the right decision makers at these particular funds. Now, just at a high level, understanding the momentum, saturation, fundamental compatibility of that fund, most importantly, having people-level intelligence and meeting the right decision makers becomes of prime importance when you're managing a public listed company. So in my opinion, investor engagement is one of the crucial activities for a successful public listed company.
Great. So let's switch gear a little bit. Since I'm a lawyer and we represent a lot of issuers who would like to list on Nasdaq, I guess the focal point for my practice is what is the sort of current listing process for Nasdaq these days? How can we advise our client in terms of their expectations about listing onto Nasdaq?
So maybe I'll just take a step back and go through the overall process. I'm sure many of you know in this room, but you file with the SEC. If you're listed or domiciled outside the US, you are a foreign private issuer, you do the F1 filing, the best lawyer sitting here who can guide you with that. But along with that process, you also have the Nasdaq application process, which is also filed by the law firm, which goes to our qualification analyst team, who's based out of DC. They review the application. There are 3 tiers that a company can be listed on. There's Global Select, Global Market, and Capital Market tier. Based on the corporate and liquidity requirements for each of those issuers, you kind of tier them into each categories. But if you're listed on Nasdaq, you're listed on Nasdaq. So this particular tier is just a relationship between the stock exchange and the issuer. So once you and your law firm have kind of identified which tier that you belong to, you make an application, it goes through a review, a bit of a back and forth. It's nowhere close to what the SEC filing is. The process is much faster. But there's one small change which we've seen in the last 2 years, which is an allocation list review, which is an additional process that has come as a part of the application process. Now, I'll just give you some background as to why we did this and why this was important. In 2021, 2022, there were some stocks which were trading reserve, going up 4,000%, name stocks. The regulators did not like that. And it's not good for the market, it's not healthy. A lot of investors lost money. So the regulators wanted to put some, let's say, rules in trying to see where the investors are based. So there were a few months in 2022 where the regulators and the stock exchanges were trying to find out what's the best way to do this, and which came then a formal plan in November 2022 as a formal allocation list review or investor list review as we call it. As a part of it, the underwriter is responsible to send the allocation list to Nasdaq. The idea here is to understand where your investors are based, how much do they hold, does one investor hold more than 10%, just trying to understand that your stock trades positively. A lot of investors don't lose money. This is the general health of the stock market. And this is only applicable for companies who do less than 25 million, so it's more for small cap, micro cap companies. Which obviously we have 70% win rate this year, we have 86%. So a lot of companies coming to Nasdaq, so a lot of people feel this is a Nasdaq issue, which is not true. This is a regulator minded issue, and all the stock exchanges need to go through the same process. So we have capable underwriters in this room and lawyers who are working through the process. It's become a lot slower than what it used to be 3 years ago. But we are approving deals, we're looking at each case-to-case basis. And in the nutshell, I can only say that this is a very good, healthy start for the market, capital market.
Yeah, I think I would agree with that point, is that for this year, our team has already listed some companies, and our experience has so far been actually quite positive with Nasdaq. We've had companies coming out of Singapore, we had a company coming out of China, coming out of Hong Kong. So I think the allocation review process getting smoother and smoother, with the participants being more familiar with the process. So I think the overall sort of allocation process is moving towards a good direction. For the people that are in this room, who I think a lot of them, let's face it, sort of the big elephant in this room in terms of understanding application process. It is an issue that we have to deal with these days. But I think the exchange is working on this very hard, and we as professionals can only do the best we can in terms of navigating the path in terms of listing the company. So we can only ask the issuers and the company to be a little more patient with the professionals, with the exchange. Things will solve it on its own, but it takes a little time. I think we touched upon the listing process. And now let's look towards the future a little bit. For the next 12 months, how would you sort of feel about the market? I mean, obviously right now Nasdaq is marching towards 20,000 points, right? It doesn't seem interest rate is coming down quite fast, right? So what do you expect from the next 6 to 12 months?
think Wall Street is really scattered with forecasts of a range of outcomes on where the monetary policy is headed. Most economists now believe Fed will cut rates sometime later this year, and there are a lot of people, a lot of opinions out there, but the truth is nobody knows. And everyone talks about it, but really, who knows it? But the fact remains that we are in a higher interest rate environment where companies are not able to project the cost of capital as we move along, which makes it very challenging, and this is especially for high growth issuers. What we've seen in the past 2 or 3 years, the private company valuations have come down. A lot of companies have accepted lower valuations, and there is still a slight disconnect between company valuations and market environment in general. It is harder to find attractive deals due to heightened scrutiny from the investors, what is viewed as being reasonable in this current market. So as we look at valuations, we think seasoned, scaled, profitable businesses will likely be the first ones to test the market. We expect investor scrutiny on gross margins and understanding the value proposition in each deal will continue. So companies who really scaled up north of $300, $500 million revenue coupled with positive EBITDA profitability or partly profitability, those will be the first ones to sort of test the market and see how it goes. But we do anticipate more PE-backed deals to try and go out second half of this year, given their larger revenue numbers and higher profitability and less sensitivity around the valuations. Now, also remember the money that was raised in 2021 and money was free, that is starting to dwindle down a bit. So those in need of capital will also look to go out in the market soon. But specifically for issuers in this room, it is more about how you prepare for your IPO and build your internal controls to launch a successful IPO, which we've discussed in the past. But that's an overall view on what we've seen in the past. But we've recently launched an IPO Pulse Index, and I would highly encourage everyone to look at that index, which kind of talks about a few factors, how the IPO market will behave in the next 6 months or so, and it's based on certain factors. So 6 factors: year-over-year changes in the Fed fund rate, year-over-year change in the VIX index, recent returns, valuations in general, investor sentiment, and our own proprietary data. So we put all of these 6 factors into a model, which is a Nasdaq proprietary model, and we then tell you how likely or how many IPOs are going to get listed in the next 6 months or so. So the survey or the index right now has risen over the last few months, reaching a 2.5-year high in Q2. So things are looking very positive. We do have a lot of active filings, a lot of interest in companies. Interestingly, just last few weeks, we've had a lot of interest from some of the Chinese issuers. And we're talking about really big IPOs, which may go out this summer. So we are really excited about that and looking forward. But it's just not the market rally that's driving the results. This upturn in IPO index remains broad-based. So with 5 out of the 6 components contributing, in fact, the only component that didn't help boost the IPO Pulse Index was the year-on-year change over in the VIX index. Now this makes sense. Since volatility is already very low, it is difficult to fall much further. So this suggests that the overall IPO environment is positive and it should remain in an uptrend in the coming few months.
So one last question. I see that we have only standing room only for the crowd. 600 people signed up for this conference. There are many companies that are looking to list and are here. What would be your recommendation for these companies? We're here. How can they maximize value of a conference like this for the next 2 days?
I think we have all the experts in the room, and some of them really experienced, some of them coming with 30, 40 years of experience in the US capital markets. You have the IPO advisors, some of the best in the industry that have come here. You have the lawyers who give you the best advice. You have the bankers and the underwriters here. You have the auditors, you have the IPO advisor, IR advisors, exchange. So you have all people in one room, and you wouldn't find this opportunity time and again. So my advice would be ask a lot of questions. Don't be afraid to approach people. Be curious. Try to learn a lot, but it's all about relationships. It's all about meeting people and getting to know them, which goes a long way. And I'm very excited about the Rumors Beach Club party tomorrow. I love to party. So, I know Jason goes some of the best parties in town, so I'm looking forward to that, but also connecting with all of you and understanding where you are in the journey and how can Nasdaq support you. So look forward to connecting with you all, and I'm truly excited. A beautiful hotel, a beautiful ballroom at Capella, and we couldn't ask for a better venue and event here. So thank you so much.
And speaking about the beach party tomorrow, it will be a Bali-themed beach party. So then definitely come prepared in terms of the dress code. We did not expect you to wear a suit.
You will be the odd one out.
Yes. Okay, thank you so much for the time.
So I see that we are ending with something that everybody's interested in, which is the beach party tomorrow. So that's always great. But I really want to thank the one-on-one dialogue session, right? Between Kieran and Jason, because that really clarifies quite a few misconceptions that some of us may have. You know, some of the things they touch on include things like investing in investor relations, right? Trying to figure out how to run the company like a public listing company at this current moment before you're even preparing to get listed. So today, like Kieran said, we want to make sure you make the most out of the day, and he was talking a lot about preparing and getting ready for your IPO process. And one of the things that we'll do today for you is also the audit preparation workshop later. So right after lunch, so please make sure you join that. That's a very important and very critical step in your IPO process. All right, so just as the dialogue really provides us with a great overview of how the IPO experience looks like, from an investor relations perspective, to what are some of the main things and tools that Nasdaq provides you, as well as the partnership with ORY to make sure your IPO process is a successful one and an efficient one, right? So it gives you a really good overview of the IPO process. But how does the IPO process really look like for founders and the management team, like everybody here? A lot of us here are here to learn on the ground. How does the experience look like? What are some of the challenges? What are some of the stories behind this? And how did they get across to the finish line? So that's the question we'll be exploring in our first panel discussion of the day, Journey to the West, Insights from C-Suite for the US IPO experience. So with that, I want to say a big welcome to Jackson Lin, Asia Pacific Market Lead at Lambert by LLYC, Peter Goldstein, author of The Entrepreneur's IPO, Vincent Orr, director at Juni Limited, which, congratulations to Juni, because they successfully closed their IPO on April 19th of this year. We'll also want to invite Andy Wong, managing director at China International Securities and China International Corporate Management. And last but not least, Michael Fu, Chief Executive Officer at YY Group Holding Limited. Well, they also successfully closed their IPO on April 24th this year. So we're very excited to have them on a very exciting discussion on how the journey to the West is like. So without further ado, can I please invite my panelists to join me on stage?
Very excited to be here because our client directive can ring the bell today. Overall, very excited, but I want to say, like 3 years ago when I was a financial reporter before joining the Lambert as an IR professional. At that time, I actually covered a lot of business news, financial news, exactly from the New York Stock Exchange and Nasdaq Stock Exchange. So today, this panel made me feel like I changed my job back from the investor relations guy to media side. But I don't mind because today we have our esteemed guests. So Mike, Vincent, Peter, and Andy. So I'll give you time to introduce yourself. Let's start with Mike.
Okay. Hello. Test. Everybody can hear me? Yes. Yeah. Mike. Okay. I think I stand up better. Okay. I'm Mike, the CEO of the YY Group. As mentioned, I just listed on YY Group Nasdaq on 20th of April. So at beginning, okay, I just share a bit of the experience. Okay, at beginning, our share price is $4. Currently, is 80 cents. Okay, so this is one of the experience later I will be shared in detail. So basically, YY Group, what we're doing is we're doing online job matching. So on-demand staffing and commercial cleaning business. Thank you.
So hi everyone. Morning. I think first of all thank you Jason for having me, and it's actually nice to see many faces here, some old faces and many new faces. And unlike Mike, I'm not going to stand up because I'm too short. Even if I stand up, I don't see if actually there's any difference. I'm an executive director of Julie Limited, a Hong Kong company recently got listed on Nasdaq in April this year. Other than being the executive directors of Julie, I'm also having my own professional firm advising clients on the pre-IPO accounting, financing side. So yeah, I think I should have worked with some of you, and I'm looking forward to share more with all you guys. Thank you.
Good morning, everyone. Thanks for the generous attention you're giving us all and the invitation, Jason, for us to be here. My name is Peter Goldstein. I'm the founder of Exchange Listing and MS Capital. Exchange Listing is an IPO advisory firm based in the United States with offices in New York, in Miami, and in Europe. MS Capital is a specialized investor investing in bridge capital for pre-IPO and IPO expenses in public companies. I'm a career entrepreneur. Started my first company in my 20s. Took my first company public about 25 years ago. My first company to Nasdaq around 10 years ago. Currently, we advise and work with companies all over the world. I've had the benefit of being a founder, board member, advisor, investor, and so in addition to my colleagues here, I've had significant experience in working directly with the company listing and with the exchange, as well as the ability to advise select companies going public.
Morning, everyone. My name is Andy, and I represent China International Securities and China International Corporate Management. So the securities, we are a security brokerage in Hong Kong, and at the same time, we are also the IPO advisors, and we also act as investors for companies going for IPO. And I sit on a few boards for listed companies, Mingzhu Logistics being one of them.
Thanks very much. So now let's dive into our discussion. The first question I want to ask is Mike and Vincent, since both of our companies just listed on Nasdaq a few months ago. So can you please share with us some of the insights and the journey, like why your company got listed on Nasdaq? You can begin.
Yeah,
Mike.
I think I'm going to share some experience first. Okay, as mentioned just now, I think Hiren already tell all the benefits what we're going to be listed on Nasdaq. So I just share some of the challenge doing my listing. So firstly, okay, I think we need to thinking why we're going for IPO. Always remember IPO, we always say is 锦上添花, not 雪中送炭. Is in English, how to say is okay, is it is icing on the cake. It's not timing the assistance. So this must be very important. If you're looking for a fast cash or cash flow to running the company, this is the IPO not the best choice for you, because IPO process will take the timeline. Okay, I tell you, even so many professionals, they are sitting here, no one can guarantee you, or even Jason or whichever. Okay, by the way, I just tell you, if you want to choose a law firm, looking for Jason. Okay, Jason here. Okay, this will be the best law firm which I met, okay, in my whole life. It's really, okay, he never paid me for any single dollar come here. Okay, when I hear he had an arranged a meeting, I told him, I want to come here. I want everybody to know, okay, you want to save your time. You want to get the best experience looking for him. Because all this IPO process who plays the most important part is your lawyer part. Okay, your underwriter, whichever, your MA. Okay, all this is only the doing or last part or the doing or season part. Okay, for lawyer part, they are spending the most of the time or journey together with you. All these questions from SEC comments, all will be answered by them, will lead by them, which the law firm. Okay, the second point I think I come to, okay, I'm not so good on the speech. This is the first time I come to speak. Okay, on the second one, thank you. On second one must be get right consultant partners. Because the consultant partner to save you a lot of the time to share their experience, because they know what is the, like just now, Hiren was mentioned. Okay, because after pandemic, okay, the 2 years, Nasdaq was changed or some rules regulations. Okay, before 2022, they don't have our location list, but now we must submit our location list. If the allocation list is not passed, okay, we still cannot be listed. So, which they know all these changes, your consultants. So the third limit, okay, as mentioned, okay, we must working with the correct law firm. So the fourth one, okay, once you decided, okay, to IPO, okay, since the journey was start already, you must go ahead. Whichever any challenge, discuss with all these professional, underwriter, law firm, audit firm, work together, go through it. Don't complain. Because you complain, working together just make the situation become worse and worse. During our IPO challenge, we have 1,000 of the challenge. You can ask my CFO, okay, which is sitting in middle of the table, how difficult the process of the whole process. Okay, we're facing a lot of challenge, but we're working with all this law firm, okay, just law firm, okay, to solve all this challenge what we are facing. So this is my experience for the IPO. So if you go for IPOs, okay, IPO like just now Jason or Hiren mentioned, it's just a new journey to start. It's not the beginning of your success. So because you see, in the beginning, before we are private limited company, we just going to answer ourselves. Okay, every day, how is the business, good or not? This year making how much money? Okay, you need to answer yourself. You are the company boss, you are the company CEO, you just talk to yourself. You're happy, you're not happy, next year do much more. But, okay, if you come to IPO after IPO, you need to answer to everybody, answer to public, answer to independent directors. All these rules and regulations you must be followed. You need to answer to, okay, we choose a best IR form. We need to go for a lot of road shows. If the people, the situation will become to YY group. Okay, after we listing is $4. Now because, okay, we haven't go to enough or meeting or enough investors, they don't know our story. Okay, what is our story? I will tell you, or if you anybody you want to know, today the purpose I come here is not selling my company. Okay, you can come, okay, my company, our company is I can say is $1 billion company in next 3 years. Definitely will be $1 billion in next 3 years. But how we did, okay, because now currently we are only 80 cents. I will tell you, okay, YY Group in the next 3 years will be $1 billion company. I think most of you will start laughing. Wow, this guy was standing here bluff. Okay, but if you're going to got time, okay, you come to me or whichever, you come to my CFO, you know our story, you will believe definitely in the 3 years will be $1 billion company. But okay, the most important one, like just so Hiren shared, okay, we need to go outside to talk all these investors to let them know what we are doing, what are we going to do, what are we going to become. So this is just my experience. Okay, we're going to share. So doing the IPOs is not really, it's a new journey to start. We need to manage a two part of the business. One is offline business, okay, we're going to answer ourselves. Another is, okay, public business. We're going to answer to the public, we're going to answer to the share price. This is the most important one. Okay, we manage two ways of the business after we listed. So this is what we call, okay, like just now Jason was sharing, okay, it's a new journey of the starting. Thank you.
Thanks so much. Thanks, Mike. I really wish I could give you an hour or two to share your experience. You shared a lot of your experience inside, and there's one thing that I think I should remember is choosing a good partner during the IPO process is crucial, very important, and alternative, or Jason is the best. And this is good endorsement because my master's degree from NYU is public relations and corporate communication. So I think if you brag yourself, that is advertisement. But if the good comments come from your customer, your client, that is good endorsement. So thanks so much. Vincent, can you share your insight?
Yeah, well, I think Mike covered most of the point actually. But I think from my perspective, going for the IPO, well, I think like most of you, is try to take the company to another level, try to change the private company to a public one, to get it have a much broader base of investors, get the company more regulated. And when we decide the market we are going to get listed, of course, as a Hong Kong company, we think of Hong Kong Exchange, but at the time, I think we try to maximize, like what Karen said, is to maximize the valuations and also the liquidity. So that's why eventually we decide to go to the US to maximize our value. I think that's that's point one. I want to add to what Mike just covered. The other point, I just want to keep it short. The other point is, I think Mike covered all those partners, the preparations, the challenges. The other thing I want to add is about the mentality. For me, I think the IPO journey is, by itself, is challenging and also enjoyable. But the thing is, I think as the board, as a company, we just need to get prepared for the challenge ahead because it's just so different from running a private company, from the regulator perspective, from the accounting perspective, from like what Mike just mentioned, from dealing with your different stakeholders perspective. I think that's just drag all these resources actually into a different level. So I think mentality-wise, I would just advise if any of you are going for an IPO, you just need to prepare, get your resources ready, actually get your team ready, and actually just be prepared for those time you can spend at the journey. That's it.
Thanks so much. And I do agree with you. I think prepare for the IPO is kind of challenging. We need to be well prepared. So this comes to my second question to ask Peter and Andy. So you guys, both of you have helped a lot of companies listed on the Nasdaq in the US. From your perspective, what is the meaning transferring from a private company to a public company? Because there are a lot of pros and cons. So if you can give us three main good advantages to listing in the US, go that day.
I think the three main advantages were discussed earlier: access to capital, institutional capital in both debt and equity. Liquidity, of course, most investors are seeking liquidity, and it really is a second currency when it's properly supported and you have a liquid stock in the open market. The third would be the credibility that comes, especially for foreign companies. We've had the benefit of working with foreign companies all over the world, and going through the regulatory process, the transparency, the reporting, and of course meeting all the requirements for Nasdaq really carries forward into the international community for a multinational company. The last one that I'll add, beyond the top three, I think is often overlooked and not discussed, which is the brand awareness. In bringing your foreign company to the United States, and having the ability to ring the bell But beyond that, to actually create brand awareness and to educate not just the investor community, but your stakeholders, current and future, is one of the most valuable ways I could ever imagine to market and bring visibility to my company worldwide.
Thanks, Peter. I think the advantages, obviously, I think everyone sitting here, if you just Google advantages of going for an IPO, there's a lot. But I think I want to touch upon the access to capital that Peter was talking about on his first point. For most private companies, their first priority for going for IPO is obviously raising money. And going as a public listed company, it gives you access to, especially on the US market and on Nasdaq, it gives you access on a global platform. So you can access different, it provides you tools to fundraise, whether it's through public fundraising or through private pipes or through share swaps or through various different methods. But I think the key over here that as we transition from a private company to a public company is liquidity. Many private company owners and founders have a expected valuation of their company before going for listing. Sometimes they're undervalued, most often they're overvalued. And I think going to the market gives a reality check or gives a fair market valuation on their company. And at the same time, it allows the founders or previous investors the ability to have an exit strategy. That doesn't mean that when they list, they'll definitely dump their shares, take the cash, get out. But it gives you the ability to have your ownership become liquid. And I think that's very important. And companies looking for IPO need to keep that in mind, is how do you manage your liquidity for your shares post IPO, whether through its IR, whether through your own website, which I guess is also part of IR, but I think CEOs and company management need to look at this very carefully.
Can I just touch on one more thing that I think the entrepreneurs in the room are really interested in, which you brought up, which was valuation. This comes up in our advisory discussions. Every entrepreneur has a dream of where their valuation will be, and often it is overstated. And so for the entrepreneurs in the room who are trying to figure out how much is my company worth and value at the time of the IPO, my biggest counsel to you is that will get solved at the time of your IPO by the market. No matter what you think your company is worth, the market will set the reality of that. So you can go in with a range, maybe a floor, and obviously there's no ceiling. We all believe we'd love to have our $1 billion valuation and higher. But this comes up really often. I just want entrepreneurs to understand that's not really set by us. It's not set by the professionals in the room. It's not set by Nasdaq. It's not set by the bankers. It's really set at the time of going to market, based upon market conditions, based upon the company, its fundamentals, and of course, the historical financial performance. So it's an important note for the entrepreneurs in the room to understand.
On this one, I think it's just so important because actually, as a listed company, I just find it so important to engage with all of these investors, and that make it even more important to engage with like Jackson's, like the IR firms, because for me, I think it's just hard to. As a private company, you don't really have that concern because you just run your own business. You just have a few shareholders. But now, as a public company, you've got a lot more of investors, and it's just hard to engage every one of them to keep your share price in a more steady way. So, and also it's actually the expectations, because sometimes I think the challenge is once we've got proceeds, we just need to utilize the proceeds. Sometimes that proceeds would somehow impact the P&L. I'm not sure whether Mike will have those issues as well. So that kind of impact would actually need to engage, actually have a very useful or effective dialogue with the investors so that they understand what the company is doing and what's the prospect of the company. I think that's something I want to add.
Yeah, great. But I also have a question, like for example, we're now in Singapore, but a lot of Asian companies are listed in the US. And how to help those Asia-based companies to present themselves in front of US investors? There are a lot of difficulties, for example, language barrier, cultural difference. So from you guys' perspective, how should a public company do, like to present in front of US investors, let them to trust the company, know about the company?
For me, I think as an Asian company going to the US market, the first step is you just need to have that US experience. Maybe it's actually from your board. In one of the board directors may have that expertise in the US market. I think one of them may be that way. The other way is actually, of course, we actually need to have a good team of the professional teams, just like what we mentioned. They should have a very family skills or expertise in the US market. And then maybe we actually need to have a local presence in the US, actually, like maybe have a US office or US customs. I think that will actually make the whole thing more easier to connect with the US investors. See what? Anything to add?
We take a slightly different approach to this topic. And reality is that in this current marketplace, 25 to 30% of the investors buying stocks early in an IPO are retail. When I took my company public, that was zero. So the market continues to change. So our approach is to work, of course, with the IR professionals, but we begin this 6 months prior to listing or earlier. Begin crafting your story, not for your customer base, but for the US capital markets and the international investor community. Really sharpen, repetition is the key to mastery. So tell your story. Sharpen the ability to communicate properly who you are now and who you'll be in the future. Put out press releases, put out material events, continue to look through the filters, not just as an operator, but from the perspective of the market. So the pre-IPO communication, planning, the distribution of information about your company at least 6 months prior. So when investors go to look up your company, they can see a history because they don't know who you are yet. We want them to understand the credibility that you have and all the hard work that you've done to get to the IPO, which is just the beginning of the journey. A lot of entrepreneurs make the mistake of wanting to approach this topic after the listing. So we take a different approach, which just really start focusing on this parallel to the legal, the accounting, the audit work, the board, the governance. We put this as a critical component. From our advisory perspective, it's often overlooked. And I think from the aftermarket perspective, it will help you maintain better liquidity and better price protection in your stock.
Yeah, that's really a good angle because a lot of people think probably like investor relations or credibility build up that should be happening one day, but it should not. You have to prepare way ahead. And also like this, and you mentioned about the board. And also Andy, you are the board of directors of a few companies. So in my mind, I feel like, I don't know what's the role of the board, because sometimes when we draft the FWP, we just put their headshots and their bios on it, and I don't know what their roles. So can you share your experience, like what the important role for board?
Yeah, sure. But I want to go back to just the previous point just for a little bit. My advice for all the companies in the room is don't be shy. When you're going for a US listing, especially post-IPO, as Hiran said, Nasdaq is a global exchange, and all the companies are on the exchange are international companies. It's because the exchange is situated in the US does not mean it's a very US-centric marketplace. I think other than China and some countries, investors all over the world are able to buy and sell US shares very easily. So you have a market of investors that are global and international. So don't be worried about language or cultural differences because your IR company will help you deal with that. And I think a lot of my clients are worried, oh, is there certain things I can say or I can't say because now I'm listed, and because many of them from being a private company, are always reading about things that like, oh, I can't say certain things, but your legal and your IR will, that's their job. They will help you through it. And so don't be shy. If you have plans, if you have major things in your company, share it. And that's how you build up credibility, because it's through a back and forth relationship. Regarding the question about the board, I think throughout the years there are more focus on the board, and board becomes a very critical part of the company. You need the independent director to be one more, to be a majority, to be one more than your operating board. So I advise all the companies to, especially for small cap and micro cap companies, to really don't forget to look for good board members early on in the process, because throughout the IPO process, especially during the IPO and post-IPO, there are a lot of things that will need your board to be readily available. Certain things such as your secondary offerings, they may come during overnight, and your board members may need to agree to sign. And especially for small companies, when it comes to your auditing and certain IR disclosures, your board needs to be there behind your back and readily available.
Yeah, great perspective. And I think, again, often entrepreneurs who have operated a private company aren't used to utilizing a board. And a board really is a tremendous asset when used properly. So in addition to the independence, is to really look to board members who can add value. I've studied corporate governance in the US at Harvard. I'm currently studying it at INSEAD. And what's often done in the cultural is that people want to bring on board members that they know, that they like, and that are part of their network. We like to think now really from governance, not just from an independence perspective, but from value added, industry experts, other perspectives, diversity. So you have different opinions culturally and different opinions from a value perspective that can really forward the company's vision, supporting management, as opposed to just agreeing with management and agreeing to their perspective, is to really challenge, add value, and bring other resources and other perspectives and viewpoints that can drive the company to the next level.
Thanks, Peter. So due to time constraints, I think we have only one question left. So this question I want to ask Mike and Vincent, because your company has already listed on Nasdaq, and I think a lot of people sitting here, they're hesitating whether they need to make their company list on Nasdaq. So from your perspective, looking back, if there's anything that you have done differently during the IPO, what are they? Give some suggestions.
Yeah, for me, if I actually look back the journey, I will be much more aware about the timing. Just like what Jason and Harry mentioned, you don't know what changes ahead. Maybe it's actually regulations, maybe it's actually different market and sensitivity. I think these are all out of your control. So what you can do is actually just grab timing in a more precise way, because that's the only thing in your hand, under your control. So because actually what we just covered in Jason's sections, I think back in 2022 or 2023, I can't remember, there's some hiccup in the market because of the regulations change, or even now there may be some difficulties with investors, that kind of thing. So I think it's for me, we just need to stick with your timetable, start the whole package or start the whole project in a more efficient way, try to finish it in the quickest way we can. I think that would be the best effort to save cost and time. That would be the advice I would have to all the companies looking for the IPO.
Okay, I think for the IPO, we come back to the IPO. Okay, just now Peter and Vincent, they mentioned quite good points. We need to really prepare a lot before our IPOs. We need to really go outside to let a lot of investors to know us. Because if you decided to go on IPO once kick off already, the next things what we need is maintain our share price. Okay, how much is our share price? Whether our share price is going up or going down, it's all the people, investor, whether they believe us or not. Okay, you see, we always seeing a lot of the companies, they are losing money, but they having a few hundred million of the market cap. But you see, now our company is making a profit. We only having our share price will drop until the bottom. Okay, because the people, the investor, they don't know us. They don't know exactly what we are doing. For example, we go for IPO roadshows. Okay, I just been for New York for 2 times. We met a few group of investors. But after I met them already, giving them a presentation, what they telling me, Mike, your story is very good. I truly believe you can be $1 billion company. It's always, okay, like our underwriter was told me, okay, Mike, in Chinese he said, you 一直吹牛，一直实现. Okay, you always bluff, but you make delivery of results. This is the most important one. Okay, become a public company. After we public, it's always, okay, we need to go outside to tell everybody. You see, I'm first time come to the speech. But today, after IPO ready, I push myself, no choice. I need to come up to speak, to talk, to let more people to know us, what is YY Group. So after that, people make attention to your company. Then they make attention to your company, then start to research. Okay, maybe today they're not buying your shares. Okay, after they will follow you. Along the way, you have any changes, any results, they will watch you. When the time's up, they will come, okay, buying your shares. It's okay, like first time I go to New York for roadshow. Okay, then the investor, last week I think 2 weeks ago, I was just in New York. When I talked to another, the group of investors, okay, which is before the roadshow, I met them. Okay, they tell me, Ma, wow, you really have a good story, good business. I'm going to bring my whole team to having a meeting with you together. But I was shocked. Okay, I come to the first time of the meeting, I already told you our story. Now, okay, it's the second time you told me, okay, you are very interested, you're going to straight away buy the shares. He showed me on the spot, he buying 10,000. Mike, let me to start with the 10,000 share and the follow up and the watch you. Okay, the most important is really, okay, it's like whichever, okay, Kieran or Jason they mentioned. After we IPO, it's really a new journey start. Thank you.
Thanks, Mike and Vincent. Actually, Peter, you're the author of the book, Entrepreneurs IPO, so I really want you to share any suggestions that you can give the audience. And also, followed by Andy, if you can share like 1 or 2 suggestions, and then we can do some Q&A.
I'm really grateful to have the opportunity to be here in front of you, Jason, Bill, Dorona. You know, I've been fortunate to be able to be in the industry for a long time. I wrote the Entrepreneurs IPO because I am one. I took my own company public. I've learned a lot of lessons. I want to share that with you all. So Jason had asked me to bring books. I have a number of books. Anybody who's in the audience as an entrepreneur who would like to have a copy of the book, please just come see me at the table. And it's not just my insight. We have our colleagues from Nasdaq who have given information, from the professional community, market makers, investment bankers, you know, lawyers, auditors. So the goal here is to educate you as to what's possible. And what I'll leave you with is that I think especially here in Asia and the Asia Pacific region, people believe you have to be a unicorn. People believe you need PE backing or venture capital backing. Well, there are opportunities that have demonstrated that's just not true. That's a myth that has existed on Wall Street since the dot-com bubble burst 20 years ago. So you can access capital and grow your company as an entrepreneur while you're building and developing and taking through the different stages, starting off on the capital markets at Nasdaq and building. So please feel free to come and get a copy of the book, and I'm grateful to share that with you all. Thank you very much.
I don't know what would be a good advice. I think my best advice is Listen to the advice of your professional parties, whether it's from the lawyers, the legal side, or the auditing side, or your IPO advisors. Really listen to their advice. They have, I know the CEOs and the CFOs have of all companies have tremendous experience. But going on the IPO journey is a different game. I've seen a lot of company fighting with their legal team, fighting with their auditing team on certain things. But really, they have more experience in this than anyone else, and you've chosen them. So work well with them, listen to their advice. Yeah, I guess that's all for the companies.
Thanks so much, Sam, for the insights and experience you shared. And now we have some time for Q&A. So if any of you have questions, please raise your hands. So I'll call you.
Hi, good morning. My name is Vicky Swaminathan. I'm on Mobilution. My question is to Vincent and Mike. Why did you choose the journey of going to an IPO instead of a route of raising venture capital, angel, seed capital, Series A, Series B, and then an IPO? Why did you not go through that journey and chose the journey of going directly to
I think for us, we do have pre-IPO investors, we do have cornerstone investors before the IPO journey. But I guess go back to the basic questions for the PIB investors and the cornerstone investors. The valuations may be different from a public company if we actually get listed. But the PE will be different. So when we actually take into account how we approach or how we maximize the company value, that will be our key decisions. We do have that process, but we think after going for IPO, we can target for much higher PE ratios, much higher valuations. Yeah, I hope that answers your questions.
I think the most important one, you need to know yourself what you want. You want cash or you want platform? If you want looking for money, fast cash, you go for PE ratios. Don't go for IPO. IPO will drag you for 1 or 2 years. But if you go for looking for a platform, you don't short of cash. You're looking for a platform, you want to become a public company, you let more people to know your story, know what you're doing, what is in future, you go through this platform, you grow your business to international, so you choose the IPO. So for me, okay, I never go for any PE fundraising because they want, few million, they give me, or $2-3 million, they want me, or 25 or 30%. So which I think, okay, I'm not, I super value, okay, it's a multi-billion dollar, you come to give me, or 2-3 million, you want 20 or 30% of the shares, I don't want. So I feel the deal is not good, so I choose a platform, which I go for IPO. IPO, after we go for IPO already, especially in Nasdaq. Okay, Nasdaq, they give you a PE ratio, valuation is quite high. Okay, you go for this platform already, okay, it become international company. For example, currently we are operating in 7 countries. By end of this year, so YY Group should operating in 15 countries. So this is what we want. We want branding, we want more people to know us, because we want to expanding to our business to New York, okay, to US, to Europe. So this is the reason I choose IPO in Nasdaq.
Thank you. That was good. Thank you.
Thanks so much. Let's take 2 more questions. Anyone have questions?
Hi, my name is Barry Stein. I'm an equity research analyst with Litchfield Hills Research. You're doing a great job, by the way, Jackson. So my question is, and we've touched on this with some of the different panels, is the trading performance of companies after the IPO. So a lot of this conference seems like the process ends once you price the IPO, but there's more time after the IPO than there is pre-IPO. Jackson, I guess your answer would be, well, hire Lambert to do your investor relations. Mike, you were very candid. You said you IPO'd at 4. It's now an 80-cent stock. You have KCSA as your IR firm, which is an excellent IR firm, almost as good as Lambert. Peter, I'm going to get your book. I haven't read it yet. Do you have anything at the end of the book that talks about what you can do to support so you don't have your stock go at 4 and trade down to 80. We've seen so many of those. What's the panel perspective on supporting the stock after the IPO process? Thank you.
I love the question, right? Because it's reality in today's market. There's not a lot in the book. I wrote this during COVID, and a lot of these market conditions have shifted. The dynamics of today's market are different than they were a year ago or 2 years ago, right? We talked about 2021, be the peak market in 20 years. Now we're in one of the lower markets in the same time frame. So to me, it's an addition to IR. IR is typically focused on institutional investors, where you're having research and you're having analysts. They take time to watch and look at the company before they're going to start investing actively in the open market. There's a lot of downward pressure from, I would say, negative forces of short sellers or people that are putting in pressure on the stocks. So it's about preparation with the cap table, know who your shareholders are. I advise the entrepreneurs, know who your investors are. Engage in dialogue with them. But building a robust aftermarket program is often overlooked. It's very expensive to have a very dynamic program. And to me, dynamic is face-to-face, roadshow, old school, right? Non-deal roadshow. Digital marketing to attract and engage retail buyers from around the world. And that's just like any of the entrepreneurs in here understand, you need to have a marketing budget to run marketing for your business. This requires a marketing budget and a very specialized focus to be able to combat, because stock doesn't trade itself. And if there's not enough liquidity and you have sales pressure, it's unfortunately going to drive the stock down with negative forces that are shorting the stock or want to see the stock go down for their own benefits. So there's no perfect answer, but the best answer to me is prepare early, get your story out, have a robust, dynamic aftermarket program with a large budget.
I think on this one, I just got one pointer, is that the market is actually dynamic, but one of the reasons why the share price drop is actually some of the poor-listed companies, they actually diverge from the original plan. So I think one of the important is actually try to, well, even though the market is actually dynamic, but try to stick with your plan, try to stick with your original story, with your investors, so that they can be confident enough in your shares. I think that's another advice.
I think related the share price is too much factor going to affect the share price. I give you an example why our share price is drop. Because we are choosing wrong FA, wrong partners. Okay, we are giving free share to the FA. So the FA was this will be free. So the FA was after we IPO ready, the FA is trolling the share in the market. So because many investors they don't know us yet. So it's keep trolling the share price because without any cost. In initial all our investors buy our share is $4. But for the FA part, the MA part, they're getting the shares because it's free, no cost. So they want to throw in the share price into the market, any dollars, $1, $2, as long as 80 cents they are making money or so. So that's the reason, they are keep throwing the shares into the market. So everybody, investor was don't scared coming in. Initially I buy your share is $4, now your share will come $2, $1. Who dare to buy your shares? So because your supply and the demands, it's always come to supply and the demand. If your supply in the market is lower, buyer is more, so your share price will come up. If you have more selling one, less buyer one, so your share price was always coming. For example, now the selling price is $2. $2, nobody want to buy, then come to, I want to willing $1.50 to sell. So suddenly got the one person to buy $1.50. Then your share price was from $2 straight away dropped to $1.50. So this is always I say, when we're working with professional partners, we must really consider, whether we choose the right partners or not. Thank you.
Thanks. Apparently, there are some good partners like ORY, and there are some not that good partners. Let's take the one last question. Does anyone catch an opportunity to ask one more question?
Thank you so much. My name is Veronica here, and my question is to Peter and also Andy. So there are a lot of mechanisms to go for IPO, to go for Nasdaq, and a lot of advisors advise us to go through OTC or to go through PX or to go through many different kind of mechanisms. But somehow we do not know all these choices, which one is the best of the best. So to cut the journey short, can please give us the best advice that what kind of mechanism is the best for the current market? Thank you.
What specifically mechanisms are you referring to? I think if it's between IPOs or SPACs or through a reverse merger, is that what?
Yes.
Okay.
Yes.
I think if the company is able to IPO, that's the proper route.
But there are many mechanisms. There are many mechanisms in the market through OTC, through PX, through SPAC, and etc. So how do we know that which mechanism are suitable for us to go for the IPO or this in next step?
So my advice is still going to the true IPO way instead of a SPAC or through OTC. From my experience, I think the process, because the process is the same. You need to have your legal ready. You need to have your company audited. So the entire process is the same. However, throughout the past couple of years, I think there are a lot of sayings that going through SPAC is easier or it saves time, etc., etc. But I think we've seen the last couple of years that there's a lot of hidden hurdles in SPACs that a lot of people don't see until they are being de-SPAC. And what we see from the results is that the SPAC performances are not as good. So I think during COVID or a couple of years pre-COVID, SPACs were doing very well because on the market people were trying to grab them as a shortcut. But I personally don't believe that's the case. So my advice is if the company is able to go through the IPO process, go through that.
Yeah, I agree completely, and I think it's really important that the company has good guidance. Because if they make a mistake, it's very hard to undo or reverse those, and there's significant cost to the shareholders. We're big believers in only a senior exchange, and primarily as an IPO. These other alternatives have their place in the market, but if a company is able to go through all the proper steps, in the long run, they'll be much better. And the shortcuts aren't really shortcuts. They typically take just as long, sometimes longer, cost more, hidden costs, extra costs of capital, and structural components that complicate the future of the company. So doing it right from the beginning, having the right guidance and understanding the goals and the objectives of the company. There may be conditions where a de-SPAC or merger are appropriate. We're not big advocates on starting with the OTC to uplist because there's not much capital and liquidity there. There may be other reasons that companies would want to do that. But if the goal is to access liquidity, to access capital, and to be able to have the credibility of the senior exchange, to be able to list on Nasdaq, go through the front door to an IPO.
Thanks so much. Thanks Mike, Vincent, Peter, and Andy. and your insight and experience. I bet the audience has gained a lot from you, and thanks everyone for your time. Actually, yesterday I really took a long trip from New York to here. It almost took me about 30 hours, including the delay and layover in Beijing. But I feel like even though it's a long trip, I think it was worth it. And like the panel, Journey to the West, if any one of you sitting here are thinking about the journey to the West, even though there could be some obstacles and challenges, I believe it is worth it. So thanks so much for your time, and hope you enjoy the rest of the panel and the rest of the conference. Thanks so much.
So now, with all this panel discussion, right, we've talked a lot about the whole process of IPO, everything to prepare for it. Now we're going to switch our gears a little bit. We're going to learn about a critical subject that will transform the industry in the next few years. So this is something that Bill talked about earlier as well, about ChatGPT, about what's coming up in this line of technology. So today we will be talking about artificial intelligence, and I want to invite our leading expert, Dr. Yilei Shao, Dean of Shanghai AI Finance School, East China Normal University, to share more in this specific talk titled Prophecy of the Machines, the Rise of Artificial Intelligence in the Financial Industry. Ooh, super mysterious, but I'm sure she's going to give you a lot of clarity into this topic. So without further ado, let's welcome Dr. Shah.
First of all, thanks Jason for the invitation. So I'm very happy to be here. So as I was walking to the conference venue, it brought me back to my time at Goldman Sachs. Everybody is dressed so sharp, so good looking. It feels just like Wall Street again. So today I will talk about, we talk about a lot about the present, how to get to listing IPO. And I'm going to talk a little bit about the future. So we'll talk about the rise of AI in financial industry. So Ray Kurzweil has written a book called Singularity is Near. And guess what? This year he's publishing another book called Singularity is Nearer. So we used to think singularity is still 10 years, decades away. But right now with artificial intelligence, it is right here. First, give you guys a brief introduction of me. So I did my PhD in computer science from Princeton University. Then went to Goldman to become a banker. And in 2011, I came back to Shanghai and built my own company and sold it, made a fortune, and become a technology investor and researcher. So end of the last year, I decided to go back to academia and found the School of Shanghai Institute of AI Finance in ECNU. This is the first school that's researching the AI in finance, the intersection between AI and finance. So as most of you have already know that this round of the AI boom comes from ChatGPT, which is launched at 2022, 11/30th of 2022. So far, it's only been 18 months, but it has changed so many things in every single profession in our society. So this is a research paper published by OpenAI and the Business School of UPenn. They're saying GPTs of GPT. What is GPT? GPT is general purpose technology. So general purpose technology is defined that it will have massive impact to the society. It's defined by the US government. So in this paper, they're saying that GPTs already have human-level intelligence. So in this figure, we can see that the blue chart is GPT 3.5. The green ones are GPT 4. So they asked GPT to take all kinds of human college-level exams. And the result is most of the exams can be taken by GPTs. And GPT will get above 80 scores. So these exams include GRE, GMAT, and LSAT, AP test. So from this chart, even in 2023, we can see that AI is approaching human capabilities faster than we expected. So at the beginning, we think that AI will write things, will generate reports, but with the improvement of AI technology, it can solve math problems now. So most of the human intelligence, so our intelligence of perception, our intelligence of cognitive intelligence, are being conquered by AI. That's why everybody is talking about AGI. What is AGI? It's called artificial general intelligence. This is meaning one kind of AI can do all kinds of tasks. This is really what's amazing here. And what will be the social, economic, and policy impacts? So the paper said around 80% of the US workforce would have at least 10% of their work affected by the introduction of large language models, while approximately 19% of workers may see at least 50% of their tasks impacted. So this means the generative AI and AGI are affecting every single industry. Of course, it's affecting our financial industry. So next, I will talk about large language models in finance. What's happening? How are we using AI to change the finance industry? So case one, Bloomberg GPT. At March 30th, 2023, Bloomberg launched their Bloomberg GPT, which is 50 billion parameter LLMs, and built Scratch for finance. So right now, Bloomberg are enabling their clients and their employees to use large language model to access their data, to do analysis. And let's look at what Bloomberg GPT can do. This is, Bloomberg GPT has never raised any money, and is closed formed and currently valued at about $50 billion. So what they can do is sentiment research, named entity recognition, news classification, and among others. The next case I will introduce is actually the AI agent we developed in Shanghai AI Finance School. It's called Jason, because my analyst, he was an analyst, very senior analyst in Caroline, and he joined me a couple months ago. And we developed this to replace all the analysts just like Jason. So AI Jason is trying to revolutionize the real person Jason. So without further ado, I'll show a demo. So this is asking, China has a very famous listed company. They produce a kind of liquid which is white and red package. Do you know what is it? It says this is Maotai. And then Maotai is very famous. If we want to give it a loan, can you create analysis of the credit? So let's see how Jason is answering that question. And also give me charts, don't give me just text. So Jason showed that the capital structure of Maotai is very stable, and its loan ratio is getting better. It shows the performance of the capital structure from the past 5 years. Also, it shows the liquidity ratios, why it has a very good performance in returning the loans. Okay, so this analysis seems good. Can you give me a credit report? And everybody here knows how long does it take to do a credit report for a human being? 2 months at least, right? Look at how long Jason does it. 1, 2, 3, 4, 5. That's what you're getting. So Jason gives you a full-blown credit report, analyze the credit risk, and analyze the revenue and the profit, analyzing the future projections. And this is all done by Jason, AI Jason, with no human interaction. And we showcased this first at our conference, our annual conference, on May 31st. So within 1 month's time, one of the biggest Chinese banks signed a strategic agreement with us. They want to use this technology into the banking system. They see a lot of interesting applications. So let's look at, with the help of AI agents, and now we define these agents as co-pilot. They're not trying to replace human being, but they're going to be a co-pilot, generating a lot of helping functions for you. And the people will work with them together. So the AI co-pilot can do 12 tasks. So they can do, in credit, they can do risk management, they can find financial insights. In research side, AI agent can help you find trading strategy, trade prediction. In ESG, it's very easy to generate ESG reports and do green assessment. Also, in general scenarios, it can do model generation, it can do file model conversion, value pricing, financial advisory, expert analysis, and communication assistance. So with the help of AI agents, we're seeing conventional financial institutions will change the organization in their function. So it used to be there's a lot of leaders, and then there are senior management directors in investment, research, trade, sales, accounting, and legal. And each team has a lot of analysts working for the managers. And then with AI into the financial institutions, we'll see that the right part is the future financial institutions, how the future institutions will be organized. We don't need that many junior people. So we only need very visionary leaders. And then we need middle-level managers. And they will pair with very smart AI agents to work with them. And also they will have the computing platform to supply all the computation power and supply the vast public and private data lake. So we will see the transition from left side to the right side in very short time. So as I said, I showcased this in the last day of May. And right now, we're already talking to the president of one of the biggest banks. So this is going to be top down. And this saves them at least billions of dollars every single year because the huge size of the organization. So they will actually remanage thousands of people, putting them to the client-facing jobs instead of generating reports, customizing reports all the time. Okay, so as I said, in the future, every company will be empowered by technology. And I personally coined the word of AI finance. So instead of tech fin, we're entering into an era of AI fin. So artificial intelligence will empower every industry. Of course, it will empower the financial industry. So I was listening to Bill's remarks, very Jerry Seinfeld style of remarks. I was thinking, how do I follow after that? But I think I will still try. So Bill said that in this room of ORY family, we have 10 IPO potentials, right? So I think with AI's help, we have at least 20 IPO potentials. And then with AI's help, out of these 20 companies, every single one of them will be billion-dollar companies. So do the math. This room brings potential $20 billion market value. Congratulations to Jason and the ORY team, and I'm fully committed to make ORY a technology-enabled law firm. Thank you.
Thank you so much, Dr. Shah. see that, even just through a very simple demonstration of the potential that this has for our industry moving forward. So in our next panel discussion, we have learned, right, all these tools, AI, our panel discussions previously on what are all the hardware things we need to prepare. But I'm sure there's one question that's in everybody's mind, right? Okay, now that I know everything there is, having touched base on everything required for IPO, the main question is, when do I know when it's time to IPO, right? That's the number one question that I'm sure is floating in all of our minds. So in our next panel discussions, the conversations and insights will revolve around how we can better determine when it's the right time for you and your company to list in the US from a very holistic perspective. So for our panel discussion titled, When Are Companies Right to List in the US? Very straightforward panel discussion, right? So we are all clear on it. Let's welcome Janice Chu, Managing Associate Elgia in Hong Kong, Jason Liu, Managing Partner of HTL CPAs and Business Advisors, Tina Xia, Founder and President of Ascend Investor Relations LLC, Keith Moore, Founder of Bastard and Company Limited, Wei Tan, Deputy Head of Capital Markets Practice at Rajah Tann Singapore LLP, and last but not least, Yorona Ye, Counsel to Otoli Rosenstadt LLP, and a member of the firm's Asia practice.
Hello everyone, I'm Janice Chu of ORY. I'm stationed in Hong Kong. ORY is a professional law firm that provides BVI and Cayman Islands legal services and also corporate administration services. And basically we are a one-stop shop from helping companies to set up the offshore structure, the BVI and Cayman companies to providing BVI and legal services in the whole IPO process. Thanks to the support of Otoli and many partners and friends in this conference, we actually have the most market share in terms of BVI and Cayman legal advisors in US IPOs.
Hi everyone, I'm Keith Moore. I'm Executive Chairman of Bowstead and Company Limited. We're a diversified financial services company headquartered in Irvine, California, but we have offices in 8 countries, including here in Singapore. We're well-versed in the underwriting process and investment process for primarily small-cap companies throughout the world. 40% of our clients are outside of the U.S., many of them here in this region. We're proud to be sponsors for the second year of this amazing conference. Hats off to Bill and Jason and the rest of the Ortoli team for putting together, last year was great. This year is even more impressive with the attendees here. And so we're thrilled to be a part of it and appreciate the opportunity to serve on this panel.
Hi everyone, good morning. Can you hear me? Okay. That's a very huge turnout today, and thank you so much for inviting us today. I am Mui Hui, the Deputy Head of Capital Markets at Rajah Tann Singapore. As my title suggests, and you may hazard a guess, I handle listings of local exchanges as well as overseas exchanges such as Nasdaq. So in fact, the recent listings that actually you have heard of, YY Group, Rectitude, as well as All My Home were actually done by us, or as you were involved in them. Apart from Singapore offices, we do have offices in all of Southeast Asian countries. My CLO Malaysian colleague is also here as well. In case there's any Malaysian companies looking to list on Nasdaq, please approach us, and you know who to look for if you need legal assistance in this region. Yeah.
Hi everyone, my name is Tina, the founder and president of Ascend Investor Relations, came from New York. First of all, I really want to appreciate the invitation from Jason. We are honored to be the partner and sponsor to this conference. And we have been services as Investor Relations Counsel for US listed company for the past 8 years. And last year we have been helped 16 companies listed in US, including 10 Chinese IPO, 2 Hong Kong, 2 Singapore, and 2 Japan. So far this year we have been supported for 7 IPOs in US already. And we would like to take this opportunity to discuss with all the panelists as well as all the participants to discuss more about what kind of services that we could help the issuer to do before from the investor relations side, before and after the IPO. So I look forward to discuss with all the panels later. Jason.
Thank you. So my name is Jason Liu, another Jason. I just learned today, like on the last one, like AI is all called Jason, right? So I saw it's only Jason Ye, Jason Liu, and Jason Long, my partner at this event, but now we have an AI Jason. So I was born and raised in Taiwan, and I went to United States 25 years ago. I lived there for 25 years now. And I'm a chairperson for an international accounting affiliation called International Accounting Alliance. So this is a group that has 37 member firms in the world. So we have several in U.S. And these are PCAOB registered firm. We also have member firms in Asia, Southeast Asia, Japan, and Singapore and Malaysia. And with my partners in U.S., we own two accounting firms, two firms. One called HTL International. It is a PCAOB registered firm, and another one is servicing private industry called HTL CPAs and Business Advisors. And at the beginning of this year, my partner Jason Long and we took over the operation of another U.S.-based PCAOB registered firm called TPS Thayer. So right now under our umbrella, there are three firms under our full control. And thanks for Yorona, Bill, and Jason to give me this opportunity to be on the stage with these wonderful panelists.
Thank you. So let's go straight into the topic. This year in 2024 so far, we have about close to 100 companies listed in the US through IPO. It's a 20% increase from last year. We are going to discuss, is right now a good market to get listed in the US, and what type of companies that investors are looking for. Keith, perhaps you can go to this topic first.
Great, thanks. Yeah, that's a really good question. And I probably have a little bit more of unique experience than many of you here, because I started out in the capital markets on the inside with a small tech company in the early 80s. I'm dating myself, but we used the capital markets to grow and build that business into a very large tech company. And so everything that I learned, in the first 20 years or so of my career, I applied when I started Bausted in 2006, which was really primarily to help small companies navigate the capital markets because it can be very challenging. And so there's certain philosophies that we believe at Bausted as a growth company. One of them is, as a growth company, your largest cost or expense is your cost of capital. So how much for how much? How much of my company do I have to give up for how much cash you're going to give me? And when you think about a growth company, and most of them don't have a traditional, a balance sheet that can attract traditional bank financing or debt financing, you're raising equity capital. So when you think about the needs of a growth company and the capital needs, it can be very expensive. And out of that growth, and we built our entire firm on this, taking smaller companies to the US capital markets sooner, is our belief that the cheapest source of capital resides in New York on Nasdaq and the NYSE. And why do we believe that? They're the two most efficient exchanges in the world. They have the most market participants, the most investors, the most market cap. And if you believe, like we do, that the most expensive cost for a growth company is your cost of capital, go to the cheapest source of capital, which is going public in New York or Nasdaq. And so if you need capital, there's always a good time to go public, in my opinion, on the US exchanges, because it's the cheapest source of capital. Now, there are times throughout history, and we're one of them right now, where the market really doesn't pay you, the entrepreneur or the business owner, for your growth or your value. And so small cap companies in particular are deeply discounted now. But having lived through 4 cycles, and this is a bad one, the time to be buying is now, because money is made on the buy. And I tell everybody that will listen to me, if you like a small cap company, buy as much of it as you can, because these markets cycle, and when we come out, small caps will be in favor. Right now, they're not. You know, it's the 7, big tech companies soaking up all the dollars. But there'll be rotations. Investors will come back into small companies. But that said, because investors are not really paying you a premium for your growth or your value, just don't raise as much, right? Don't overreach. Don't overraise, right? Because it's extremely expensive. But again, it's still a good time to go public. It takes longer right now because the market's a little more difficult. But again, it's the cheapest source of capital for your company. So we just, we continue to do IPOs and secondary offers. And oh, by the way, once you're public, once you're listed on Nasdaq or the NYSE, your access to capital increases exponentially. You will have no problem raising capital once you're public. Much easier than if you're private. And if you think about, while private companies are valued, they're valued at discounts to public companies. So why not become a public company so at least you get the public company premium on your valuation? So we're big proponents. Even though the markets are tough, it's still a good time to go public.
Thanks, Keith. Let's go into the accounting side a little bit. So Jason, what do you think are the accounting prerequisites or the criteria for the companies to go public? Let's say let's say internal process, internal controls, any of the accounting practice that you would look into it before the company's ready.
Yeah, actually, I've gone through this for actually a few cycles already, like Keith mentioned, about companies going public, right? So you have a reverse merger, you have IPO, and then you have SPAC, right? So in US, I think the market is very different from the other places. So if you are ready, I mean, you got you have professionals help you with legal, accounting, get everything set up, and complete the registration statement. You can pretty much go public if you clear SEC's comments and also Nasdaq's questionnaires. So, I mean, prerequisite, I think it's mentally you have to be ready, and accounting is not, I would say, like a different accounting standard. It's pretty much the same, like all over the world. And one thing different is that you have to be, before you go public, you want to make sure mentally you are ready, because of transparency and everything will be different when you are private versus public. And in US, a lot of companies thinking about, oh, I have to have internal control ready. It is not, because a lot of smaller reporting company, emerging growth company, they are not subject to these kind of requirements. They are exempt. So internal control is not really a requirement, but you want to have it ready, because when you become bigger, it will be subject to these kind of rules. And from accounting standpoint, I think you have to have a financing department, and sometimes you use a financial advisor, pre-audit team, and then hire auditors coming in to do the audits. And that it's not very different from wherever else in the world. So I would say it's just make sure, prepare your mentally ready to go to a different market and in the other side of the world.
Yeah, that's very true, Jason. I mean, for a company that get listed, usually the crunch time period is 6 to 9 months before the IPO, getting through the SEC filings, getting through the exchange. But many companies start preparing 15 months, 18 months, or even 24 months before the IPO. One important thing is to act like a public company well before going public. So from the legal side, I know now many companies use offshore entities to go public. Janice, do you have any take on that?
Actually, it's very popular for companies to use a Cayman or BVI structure as the listing vehicle for US IPOs. As of today, there are around over 600 listed companies in the US that uses BVI or Cayman as a listed company. The main reason for using a Cayman or BVI company as the listing vehicle is that Cayman and BVI are tax neutral jurisdictions. There are no exchange control in BVI or Cayman Islands. It means that money can go in and out Cayman and BVI without any limit. And there is no stamp duty for transfer of shares or share allotments. And for Cayman companies, you can even apply for a tax exemption certificate from the Cayman government for 20 or 30 years to guarantee that you will not be required to pay any tax in the Cayman Islands. And also, it's relatively quick to set up a Cayman and BVI companies. Once you have the relevant papers and documents in order, you can have a company set up within 1 to 2 business days.
Great. Mei Hui, so from the local law perspective, what do you look into it to make sure that the company is ready to go public?
Yeah, I think apart from obviously the US listing requirements and preparatory work for financials, I think what has been belabored over this morning is corporate governance. Obviously, if you want to be a public listed company, you need to start acting like one way before that. So good corporate governance is actually important to see whether you have board practices, what type of board practices, whether is it transparent, and things like that. And it is important because this actually inspires investors' confidence, and it will be good for you next time when you go for book building, etc., to have these board practices already established and in place. The other thing that we generally will look out for is whether or not you have legal or regulatory compliance issues in the past, or that if you have them, please resolve them, because it will be an uphill task for us to actually, or for anybody to actually list or to convince the exchange to allow you to list if you have a history of material non-compliances in the past. So I think that would be the second one. And obviously, for listing purposes, what we usually do is to consolidate business under a holding entity. So, for example, we will look to see if the founder holds his shares or his interest in companies through his own individual capacity, or is it through already a holding entity, because restructuring will have to be considered if that's the case. The other issues that we usually face, or we usually want the company to think about before they go for listing, would be whether or not the company or the group has operations in jurisdictions that may have foreign ownership restrictions. Because if they do, then we'll need to think about whether there would be creative restructuring to be done or creative thinking to be done to enable a listing of such companies on the exchanges. And of course, lastly, mental strength of your management team, like what Jason said earlier, everything is in the mind. It is a listing process. You will have to go through due diligence process, the drafting of the offer document, etc. So to have a strong and experienced management team in place is actually important. So I think all these would basically sum up what we would generally hope that companies will have before they embark on the listing journey.
Mm-hmm. Yeah, thank you. I mean, for companies that you still have to focus on your core, which is the local law, that have to get it compliance, sort things out before you can go to the next step. I want to turn the mic to Tina. You represented investor relationships. Many companies don't start IR program until a lot later stage of the IPO. Let's say, for example, when they prepare the PPT or doing the roadshow presentation, or even after the IPO. Do you see any value or benefits in going into setting up the investor relations program early on? Let's say at the beginning of the IPO. If that's the case, what kind of IR program you would recommend?
Oh, thank you, Lorna, for the question. That is a very good question. I think recently, I think everybody realized that for the U.S. IPO, especially for operation in Asian market, the deal size is not too big, and a lot of company, or we call issuer, engage us earlier before the IPO, because if we want to find the advantages or want to find the more investment highlights from the issuer, we need time to be engaged early. And then after we engage, we can have enough time to do the market surveillance. We will need the time to do the market research, to do the capital market, especially for the industry analysis. And we want to compare with the peers. We usually compare the peers is the same industry in US and the same industry in the market that the issuer located. For example, the Singapore company, right? They do the same thing and compare with the Singapore company, what is the market share and why we have the advantage to let the investor to buy the stock. So recently we were engaged more earlier than before to have enough time to do these things for the issuer. And then after we got all the data or all the information to approve why we stand like the market share, why we stand the high in the market. And then using this data, we can have the company to tailor or polish a very good story, good story with very clear business model. And we also emphasizing on the potential growth strategy to let more investors to know about the business and to know about the growing potential. I think that will be good or easier especially for the institutional investor. When you do the roadshow, they will easily understanding about your story, especially once you make an example to compare with the US company. For example, most of the investors in US, they know about the US market, but what they do not know is they do not know any information about the issuer, especially located in Asian countries. So what we need to do is we want to help the issuer to get more information or to present more through the way to compare with the US peers. That will be easier to help the investor to make the decision to invest the stock or not.
Mm-hmm.
So I think that will be very important.
Right, and probably can work with legal and underwriter to get a coherent story and deliver to the investors. Yeah, and Keith, I actually want to come back to you a little bit. Just when you choosing your clients, what is there certain size of companies that you're looking for, certain industries, any of the geographic area that you would more focus on in that respect?
Yeah, we're kind of generalists, but I think when we look at a potential client, we start with the people. We believe that deals are people and people are deals, and every client we have has been referred in. So because we have a pretty extensive network, we take a lot of credence in the referrals that we get. So that's always a good place to start is the people. But most of our clients are, as I mentioned, growth companies. So we found over the years that they transcend industry, geography, race, religion. They come from everywhere. And I think that's one of the reasons why we are in 8 countries is we kind of go to where people aren't. If I go to New York, there's 1,000 of me. If I go to Uzbekistan, there's 1 of me, right? And so that's why we were one of the first small firms to come into this region. There weren't many small underwriters, looking for clients here. It's great to see, and look, we're very collaborative. It's great to see that the industry is burgeoning here. My competitors are here. We work with them all the time. We're big champions of success in the small cap market. We don't care if it comes from another firm or us or somebody else. We believe that the more successes there are, the more attention is paid to this end of the market. And so we're very encouraging of the successes of companies that list and go on to, increase their market cap, get into the Russell 2000, 3000, 2000, and on up, right? And so we're big champions of that entire spectrum of the industry. So we start with the people. We look at the industry. We look at where the company fits within the industry. And hopefully they're growing faster than the industry. That's where you hit the proverbial, kind of riding the wave, where you can really increase your multiple, expand your growth value. And then we look at the cap table of all things, because sometimes we see companies with cap tables that we call busted. We can't fix them because of financings they've done previous to us. And then the last thing we do is look at ourselves in the mirror and say, can we get this done, right? So, because we're still a small firm, we're 110 people across the globe, but all we have is our time. And the economics that an underwriter earns is upon a successful IPO. And so if we're signing on clients and we're not successful, well, it's obviously not going to work for our clients, and it's certainly not going to work for our business as well. So we always look at ourselves like, can we get this done? And we're pretty choosy with the deals we get involved with. And then we just grind them out till we get them done. My partner in the business, a guy named Dan McClory, we were college roommates back in Eastern Michigan University in 1978. Back then, we were skinny cross-country and track guys, and we just pounded out the miles, and that's what we do today. We just keep grinding it out till we get these deals done. So, and that's one of the reasons why we're here, because there's a lot of great companies. I said it last year, I'll say it again this year. I got goosebumps seeing the crowd, hearing the stories, talking to entrepreneurs and businessmen and businesswomen. It reminded me a lot of the 80s and 90s of the U.S. And so that's why we're here again, because there's a lot of good companies that deserve capital. We know a lot of them are seeking it, but here there's a lot of them that deserve it. And hopefully Bausted and our competitors can help the companies in here ultimately list in the U.S.
Great, thank you, Keith. We're going to go into to discuss the challenge during the IPO process. Jason, do you have seen it? I mean, you have done a lot of IPOs. Any particular examples or any things that you came up to you that you encountered that you think it might be difficult? Sometimes it could be a cultural difference or just, merely of getting the financials done in a timely manner.
Yeah, personally, I have in different capacity, I took more than 50 companies public as an auditor, as an advisor, and sometimes on the board. And one thing I realized is that preparation is very important, right? So earlier I said mentally you need to be prepared, and then also you have to have the corporate structure, legal and accounting all get ready. I'll touch a little bit more on the accounting side. So especially for the foreign issuers. So in US, you can go public with US GAAP financial statements or IFRS. But like a lot of companies in foreign countries, I mean outside of US, I mean maybe have local GAAP. So for example, like PRC GAAP and Japanese GAAP, before they go to US, they have to convert into either IFRS or like a US GAAP for reporting. So that takes time. And but if you have a strong accounting team, you can pretty much do that quickly, because it's a matter of a cutoff issue. You just make sure you have right accounting system to keep track of the timing. And then it's reporting. Reporting is different. And again, for US listed company, transparency is very important. Something like related party transaction is always something the SEC look at very closely. So, it's really just disclosed and transparent. These are the two keys. A lot of companies, if you are private, you don't pay much attention to that because you're not dealing with people outside. But for public company, you're dealing with public investors, people buying your like stock, invest in the open market. So I think getting everything prepared early and hire the right professional to help, I think that's the most important thing.
Great, thank you. And Tina, so during the roadshow or test the water, how do you think the company can meet the investors' expectations?
I think that's a good question. Because we help the company to polish the roadshow story, and we want to help the company to improve their presenting to make sure that more and more investors can invest the stock. So due to the different culture, sometimes we also meet some problem. For example, like the Japanese clients, due to the language barrier, sometimes the investor couldn't 100% understand about the story, even if we or the company present in English. So that need a lot of help that as the IR agency, we will help them to make more examples that compare with the peers in US to let the investor know about the story. So that's happens so often that we meet the problem.
Okay, all right. And Mei Hui, from the local law perspectives, anything you've seen dealing with the due diligence issue or any deal breakers that you think might be important as part of the IPO process?
Well, there are a few. First things first, us as counsels, we will hope for all companies to have their corporate records proper and in place. That is the first dream hope of all of the counsels. But I think apart from that, some of the due diligence issues that we have seen would be, for example, if there's material litigation against the company, whether or not there's material proceedings against the company, etc. These are important because not only will these impact upon, for example, whether there's a need to provide for contingent liability, there will be reputational risks on the company as well, and all of these, all in all, may have a bearing on the suitability of the company to list. So that is important. But that is not to say that all litigation will then preclude or prohibit a company from listing. So I think what we are concerned here is more of material litigation, the materiality of it. The other thing that we would generally see would be matters in relation to their stakeholders or interest holders, or what we would say shareholders. And what we will hope in terms of preparatory work and what we would hope for companies is that before they embark on a listing exercise, they should get their interest holders, and by this I mean your exchangeable note holders, your bond holders, even your shareholders, to be aligned with the idea and with the intention of the company to go public. And this is important because during a listing process, the company will actually need to go through certain corporate action. So this will include things like restructuring, share swap into a Cayman company or BVI company, for example. Share split, and all of these that I've just mentioned requires consent or preemption waivers from all these shareholders or interest holders. We want to get them resolved first before it becomes a deal breaker in the middle or at the end of the IPO process, so that is important as well. Of course, the other bucket will be similar, but it will be more of your banking institutional investors or your banking contracts, major suppliers or major customers. Contracts with them typically may have a provision to prohibit you from restructuring or have certain clauses that prohibit you from changing your shareholders, for example. And given that a listing obviously contemplates that you would float some of your shares to have changes in your shareholding structure, you will then require consent or at least buy-in from them. So what we would typically ask companies to do is to prepare themselves for the discussions with these financial institutions that they have contracts with, your major suppliers and customers, to make sure that they are on board with these. Yeah. So these would be the major issues or due diligence issues that we see typically in a listing exercise.
Okay, thank you. Janice, for the offshore structure, more companies are using the dual class structure. Could you explain a little bit what's the dual class structure and what's the benefit of using this structure?
It is actually quite common for US issuers to implement a dual class AB share structure. One class would be the preference shares, which are usually taken by the founders or management of the companies, because it would allow the management and the founders to have more votes for each share that they vote. And then for the ordinary shares that are offered to the public, they are usually just one share for one vote. The main advantage of having this dual class share structure is that it allows the founders to retain a more significant amount of control of the company. And it also attracts companies to go listed because without undermining their control of the company. But companies that wish to adopt this dual share class structure would need to consider that whether this share class structure is actually attractive to investors. Because this dual class share structure actually creates an inferior class of shareholders that would have less control of the company. So it may not be that attractive to investors, even though it's to the advantage of the founders.
Great. And going to attracting the investors, I guess, Keith, you also seen many current companies have pre-IPO investors. Does that affect companies' valuations or doing any of the offering structures in the IPO?
Yeah, I mean, generally, when we see a client, they've already completed a couple rounds of financing, and sometimes we'll take them through another round to help cover the costs of going public, the audit, the legal, those types of things. And we're kind of simpletons in our approach. We like clean cap structures, common or ordinary shares only. You can do the dual class, as we see that quite a bit. And we don't like a lot of convertibles, convertible debt, convertible preferred, a lot of warrants. It just kind of clogs up the cap table. As a small company, I think it's best to try and keep your cap table as clean as possible, because there's many opportunities, especially after you go public, to complicate it. And you'll see all those examples once you do go public of all the different exotic financing structures that will be coming your way. But I think that pre-IPO raises are important to help offset the cost of going public, so that the company has more capital, to put into its, growing its business. And I wanted to touch on just one other subject that Jason and Tina mentioned about being prepared. You cannot be over-prepared to be public. And it's life-changing. It's life-changing for you, the entrepreneur, the businessman or businesswoman. It's life-changing for your officer and directors, your employees, for your customers, for your vendors, for your capital needs. And you cannot over-prepare for that. And start with IR early. Get used to putting out press releases. Get used to speaking to investors. Get used to having governance in place early. Make sure you're never late on a filing, right? That's a cardinal sin. Once you go public, you have to instill confidence in investors. Be on time with your public filings. So make sure you have CFO and an accounting staff that can work with your auditors to get your financials in on time. But there's a tremendous amount of clutter in the small cap sector. You have to rise above it. And the only way you can rise above it is about talking about what you're doing. And that is press releases, social media marketing, speaking at conferences. I cannot stress that enough, because the process of going public, you think about it, you spend 12, 18, 24 months to go public. You're going to spend, a couple $1,000,000 when you get all the way through. That's a huge investment, right? It doesn't stop once you're public. And it really starts once you're public. So preparation, I can't stress that enough. It's really valid that some of the panelists mentioned that.
Yeah, thanks for sharing. I think we're getting to the last question here. Also, everybody's getting hungry. Jason, maybe from you, any of the last advice that you would give it to private companies that in the IPO process?
Yeah, I think it's very hard for any companies to keep a full in-house group to deal with all the public company matters. So throughout the process, you have professionals. You engage these professionals to help you, to take you to the finish line. I mean, not actually finish line, but starting, right? Of a different journey. So I think my advice will be work with your service providers, trust their advice, and communicate with them as much as you could. And nobody knows everything, so if you don't know anything, you are not sure about anything, just ask. I think these professionals are dealing with the SEC and stock exchanges and investors on a daily basis. So talking to them and learn from them, I think that's probably, one of the things that every company needs to learn how to do.
Tina.
Oh yes, I think Jason said correct, and feel free to ask and prepare ahead of the time. And one more thing is I encourage all the issuers and their companies, management team to go to US before the IPO to check about the market, to see and to talk with the investor, to know what the question they are caring about, what is the aspect that the investor care about. So that's very important. So we encourage the issuer to go to Wall Street, to test the water, and to really realize what they care about. So that's my advice.
Yeah, I think there are a lot of things that have been said ad nauseum already for being prepared to go for listing and being prepared this and that. I think that is all correct, and I don't think I'll repeat that again. But I think one of the things that a listing applicant should think about is that listing is not supposed to be your end goal. It is not a be-all and end-all. Listing is a process. It is just part of your success story. You need to be prepared to know how to utilize and fully capitalize on the listing platform that will be given to you when you list. So I think that is important, because listing should not be just your end goal. It should be what your journey continues thereafter.
Thank you. Keith, I know you already shared, but any final advice?
Yeah, just touching on, once you go public, you get asked about your company, you get asked about your stock price, and it gets, it can be really tempting to, focus on your stock price. But I've learned over the years that execution is the key, that in good times and bad times, investors will find value. It may not be the month after you go public. It may not be 6 months after you go public. It may not be a year after you go public. But it will happen if you execute. Investors will find your value, and they'll start buying your stock. So it can be very frustrating, especially in markets like this, when your stock price keeps going down and you're working your tail off. But just keep doing it, execute, and deliver, quarter over quarter growth, revenue, profits, et cetera. And the market will eventually find the value. And when it does, it's very, very rewarding. I lived through that personally.
Right. Janice?
My advice would be start thinking about your share structure early, because if you start with a single class share structure and then you want to change it into a dual class share structure, or the other way around, in the middle of preparing for an IPO, it could take a bit of time and then cause a bit of delay, which nobody wants.
Great. I mean, from the US legal side, I would say disclosure, disclosure, disclosure. Just making sure everything is, accurately and timely disclosed in the, registration statement or any other legal documents. Take the time of building a team together, a good advisory team. That will help save time in the long run. So now we are going to take 1 or 2 questions due to the timing. If you have any questions, please raise your hand.
My name is Sanjeev. I'm from Movolution. I just wanted to check what is the right ideal revenue to say that the company is ready to go for an IPO, to list in the US. Is there a kind of a guideline which says if you are at this revenue or at this margins or the bottom line is so much, it's a good time to go and list?
Mm-hmm. Right. Thank you. Anyone want to take this question first?
I would just, the right time is when you're ready for it. But I think one thing investors look for is growth in your results and the trajectory of that growth. And if you're growing at 50 or 100% year over year, market will respond to that. If you're growing at 5 or 10% a year, maybe not so much. So I really think it's the growth in the revenues. A lot of times growth companies aren't profitable, but they will become profitable. But I think one thing investors look for is the trajectory of the growth for sure.
Right. Yeah, and it's also industry related. I mean, if it's biotech company, so maybe it's not making any money yet, or technology companies. But if it's traditional industry, then it's better to be, more sizable of the company and have a good couple $1 million of net income before it can go public. Any other questions? If not, we thank you our speakers. And if you have any other questions, want to dive into deeper conversations, please feel free to reach out to us. Thank you.
Right now, I want to invite you that it's time to get our hands dirty to work on a really crucial part of the IPO experience, something that's very daunting, but absolutely necessary, the audit preparation. So we know that it looks very daunting and a tedious process, but it doesn't have to be. So today you'll get to learn from our experts on the best way to streamline your audit preparation. But before that, the preparation will start at 1 p.m. sharp. So please be seated by 12:55 for our insightful discussion. And right now is the moment that I know you guys have all been waiting for. It is time for us to take a break for lunch. Thank you guys so much for being such a great crowd. We'll see you at 12:55 for our audit preparation workshop at 1. Enjoy your lunch.
relevant financial statement. And it starts right from the company itself. So the credibility gets built up if you have the right people doing the right thing in terms of preparation of those financial statements. What we also need to make sure, because there are so many stakeholders involved, and in the SEC, of course, is the key regulator, the clearer picture the financial statements present, the easier the process is going forward. Of course, the audit preparation, why is it important, is we have those GAAP compliances, the SEC requirements, and post-IPO, we always have those quarterly or half-yearly and annual compliances, depending on where you're registered. Some of the US IPO requirements, and it's important to understand, of course, the SEC requirements apply to the company and the auditor, but it's also important to appreciate the requirements that are on the auditors as well, right? So from an SEC perspective, of course, from a registration statement, you file your F1s and the S1s, depending on where you're domiciled. You have those financial statement disclosures under the SEC financial reporting framework. And of course, the corporate governance is an important element when it comes to your SEC requirements. The rest of it, post-IPO, you will have those quarterly filings and the annual filings and the disclosures required on basis of internal controls. But that's what SEC requires when you're presenting in your F1s and S1s. What changes from a PCAOB perspective, the focus shifts to the auditor, right? And we have to make sure, one, the auditor is a PCAOB registered firm if you're going into the IPO. The independent side of it, where the PCO, if you're doing an overseas audit, we have relevant people with the right expertise to kind of work on those PCAOB audits. And overall, making sure we're communicating and the internal controls weaknesses to those charged with governance as part of the PCAOB auditing standards. One of the very important elements I think Jason from the previous panel kind of referred to is identifying what gap you want to pick up. Like we have a lot of Singapore entities which kind of follow as part of the local processes, the Singapore financial reporting standards. And one may feel that the IFRS is really close to that, right? But it all depends on what company you're going to kind of take from a listing perspective. You have company domiciled in the US GAAP is what you kind of are looking at. So there are a lot of differences between IFRS and US GAAP, but we are going to talk about some of the key differences right now, just so you get a sense of what you are looking at from an audit preparation. And US GAAP is more rules-based, so there are specific standards, specific requirements, and specific formats that the company needs to follow in terms of their preparation. IFRS, on the other hand, is more principles-based, right? So there's no prescribed format. I mean, yes, you will have certain formats available in Big Four, but it's more condensed and it's less prescriptive, right? So if you understand the standard, it will give you the right guidance in terms of how you want to implement them. In terms of the areas that are key focuses, inventory valuation, right? We've heard about LIFO, which is last in, first out. That's acceptable under US GAAP, but not acceptable under IFRS, right? You've got development costs, the research and development costs. Again, in US GAAP, you have to expense them off. In IFRS, if you fulfill certain conditions, you could capitalize them, right? But it's important to fulfill those conditions. Intangibles, no revaluation allowed under US GAAP, but IFRS allows that. And revenue recognition, while it's converged quite a bit, but US GAAP has industry-specific standards, so there might be certain nitty-gritties that get followed there, whereas IFRS has one single standard which covers all the industries. So there's still a lot more differences. We've tried to cover a few, but that's important assessment that all of you as companies have to make sure we're well prepared in terms of preparation of the financial statements. Just to give you a glimpse of how the audit process works and what procedures are done, it starts from right at planning and risk assessment from an audit perspective. And as part of that planning and risk assessment, how companies work with the auditors is making sure they can share the understanding of the entire company, the environment it operates in, the controls that are currently prevalent, the processes that are there, the ID systems that are there, and all the accounting policies that kind of help bring the company to prepare those set of financials, right? That is a key element for the auditors to share what the requirements are from their financial statement audit perspective, right? From there, they complete their planning process and move to the actual execution, which again will involve sharing of samples. They will visit the field. If there is inventory involved, there will be inventory observation. So all that will need to be prepared beforehand before the auditor kind of gets to the field, right? Like Hiren said right at the beginning, we should start behaving like a public company if you want to go public, right? There's no two ways about it, right? We have to make sure we're already working as a public company, making sure we're doing the right things, and getting those financial statements well before the auditor even starts looking at it. Again, on the completion state, the standard of making sure the financial statements are in order, and we take that opinion from the auditor if everything goes well. Some common audit findings, and this is a key element that we've identified across all the IPOs we've done or audits of public companies that we've done. The revenue recognition, new standard came into place. There's still a lot of clarity that's needed by accounting firms, by the companies, and they engage external experts to get their accounting positions sorted with respect to revenue recognition. Segment reporting. Does the company have two separate segments? Non-GAAP measures. One of the most important elements is SEC allows you to give non-GAAP measures, something like an adjusted EBITDA, but it also wants you to give a reconciliation between a non-GAAP and a GAAP measure, right? Management discussion analysis, what's happened in the company for the financial years that's being presented. The risk factors, extremely important. Peter spoke about the story you want to tell, right? With that story comes a lot of risks that the company has to go through. So you're kind of explaining those risk factors and getting to how you're mitigating those risk factors for the future. Compensation, earnings per share, very technical matters, but really need to be disclosed appropriately how we kind of adhere to the standards the company has. We spoke about secondary offerings in terms of preferred shares and debt. So there could be conversion features that are associated with those debts, and that involves more technical aspects and making sure the standards has been adhered to. Are we taking into account the beneficial conversion feature? Similarly, is it a liability or an equity classification? Business combination, consolidation issues, related parties. All of this kind of falls under the key elements and that's what the auditors, as we have identified in a lot of companies that are public or going public. So things to kind of look out for. I think a lot has been discussed about how the IPO market has been, what went well, what hasn't gone well, so I probably won't delve into it. But again, we'll move right to the tips, practical tips and recommendations that we have. And the first one, we've been talking about it since morning, early planning, identifying what's your timeline, 12 months, 18 months, 24 months, 30 months. But you have to identify that. Identifying a strong team. And that does not mean just the management team. That includes the finance team that works with the team. That includes the audit committee and the board. That also includes all your external consultants, the legal counsel where the entities are registered, right? The underwriters, the legal counsel of the underwriter. But that's important to identify who works with you as a team to help you grow and go through the entire IPO process. The compliance of GAAP and SEC, I think that comes with, if you plan early focusing on that, specifically implementing a robust financial system and reporting process, that will automatically flow through. But it's important to kind of be compliant if you're able to kind of go from an IPO. Having robust internal controls. We saw in the last panel, Tann speak about corporate governance. And the key here is you need to have robust internal controls. You need to have a good corporate governance, which kind of is supplemented by your audit committees or those charged with governance from that perspective. Having the documentation, I think it's important. All that you do, you document it, retain it, so it's easier to kind of, when auditors kind of come in, they don't have to scramble through giving them what they really need from support's perspective. We've spoken about audit committees, timely and effective communication. We spoke about building a strong team, but it's important to communicate with them at every level, right? What is the timeline? When we will achieve the first filing with the SEC? Are we close to the effectiveness? What do we need to do from a comfort letter? All that kind of goes hand in hand. And get your entire working group together and have that conversation. It's extremely important and effective. Training and resourcing, I think that goes without saying. I think we've been talking about having the right people in the right places and the right external consultants. And post-audit preparation, I think one of the most important elements that sometimes get missed out is audit identifies a lot of issues we've done with the IPO, and suddenly you realize, oh, have we really carried forward that? Have we made changes to our systems? Have we done the changes that are required in accounting going forward? And consistently applying and getting better. So if issues are identified, make sure you're implementing relevant solutions and making sure that the financial statement system and processes are improved in that way, right? I know a lot of information to digest, but the key again goes back to what everybody's been talking about. Prepare, prepare, prepare. One other thing that I would also tell you is never lie to three people: your attorney, your doctor, and the accountant. As transparent you are, the better it is in terms of your financial disclosures and the IPO process. I think we have some time. So any questions?
Great presentation, thank you. Maybe we can get an interesting anecdote out of you. What's the biggest challenge you've seen? You've done a lot of clients. What's the worst horror story, the biggest challenge you've seen, so others can learn a lesson what not to do?
I think the biggest challenge that we have seen as auditors is companies feeling that they have the right team in terms of the audit preparation or the audit readiness. And because they start immediately, they want to start immediately, they don't spend enough time making sure that whether they've understood what the IFRS or US GAAP talks about. Have they converted their local books into IFRS or US GAAP? And they straight away go into the audit saying everything is great. They don't have a proper team with the right skill set to work through it. And that's what becomes a challenge, because the more we delay getting the right team, the longer the process goes, because we identify more issues, and then it comes to a position where it's not effective, it's not efficient for both sides. So that's building the right team is where the biggest challenge is from my perspective. Any other questions?
What do you think is the biggest difference between auditing a US-based company versus an Asia-based company?
I think the biggest difference, I would say, auditing a US-based company, are you asking from my perspective or from a company's perspective?
Could be both.
Could be both. Okay. From our perspective, it's just making sure we have the right, we know what the gap they're following, right? So essentially,
for us, if you do a US audit, it's about 3 quarters and an annual audit. If it's a foreign private issuer, they just have to have a 6-monthly review and the annual audit. The audit still remains the same. The review still remains the same. It's just about making sure the data and the accounting is understood and the financial reporting framework they are in. From a client's perspective, what's really key is the client feels that there's not many differences if there's a company in Singapore having an entity in the US and trying to implement US GAAP. If they feel it's pretty much the same. So from a company standpoint, GAAP becomes the real challenge in terms of implementing it the right way. So it's different. I mean, that's what I feel is the biggest difference that I see is companies want to make sure they can get more cost effective and utilize the closest gap that they can. For us, it's more about making sure the data and how the information is something that we receive.
How does the CFO determine whether he has the right team?
I think the right team is depending on how much experience they have from a US GAAP perspective, from a technical standpoint, or IFRS. Like, to give you an example, I think some of the CFOs in India, because Singapore financial reporting standard is so close to IFRS, it's easier to comprehend that, and people are much closer because a lot of companies have gone public from a Singapore perspective. When it comes to US GAAP, that's where they see a big difference. So it's extremely important we start looking at financial consultants who have that expertise, because it may not be always available in-house. CFO is looking at the bigger picture. I mean, you want people who can do, of course, the transaction level work, but also get those financial statements together, right? So that's where the external consultants are of great benefit, and that's what I would encourage people to utilize, because you might sometimes you might see that as a cost, but in a sense, you can save a lot of time that you spend later on in correcting a lot of things. So that's where I see the big difference.
How will the company need to prepare themselves for a multi-jurisdiction audit? So we are in Singapore.
Mm-hmm.
A lot of the companies in Singapore have many companies all across Asia.
Right.
So the first question is, then how does the company prepare themselves? The second question is, what would the audit process be like for someone like your firm auditing them in terms of the footprint, and how would that work with the company?
Sure. So the first question is about having a multi-jurisdiction, multi-location. Now, if you have multiple subsidiaries across the globe, the key is where is the accounting really held? Because if you're looking to take your Singapore company public, we want to know how do you consolidate at that group level. So I'm sure you would have local accountants to take care of the subsidiary accounting, but getting those, like if you have one entity in Malaysia, for example, they would have followed Malaysian GAAP, right? You need to ensure that how do you convert the Malaysian GAAP to maybe an IFRS, right? And then consolidating that at a central level. So you need to, if Singapore is your headquarter, you need to control that at Singapore, so that all the entities report to you, maybe in local, and then you do the conversion, or they convert it and then send it to you, so that consolidation can happen at that central level. So you have complete control at the HQ, which you want to take forward. Building on that, because that consolidation and the group-wide control stay at the holding company level, the audit team can kind of start from there. As auditors, when you're looking to go public, we need to audit the consolidated financial statements. We will not look to audit each and every entity separately. So how our process works is, as part the entire consolidation, we identify through our scoping exercise as to what balances are significant, What are the entities that are significant? And we focus on those entities. And when I talk about personally, there are people that are spread across different parts of Asia, right? So if we can deploy our own people, great. There's ability to utilize subcontractors, where sometimes on one specific location we don't have, but on all other locations we have people. The audit is controlled at the Singapore level, but we could utilize somebody else to kind of do small bits and pieces for a particular component where we may not have people, or we could fly there. So I think that's where how the audits gets managed. Even if you don't have presence, there are always options that can be explored. Does that answer? Any other questions? All right. We are still here. If you want to have a more deeper conversation, please feel free to reach out. And thank you so much for being a lovely audience.
Thank you so much, Encore. Look at that. It's all lit up. All right. We're really trying to mimic the atmosphere as much as we can. Right now, may we invite Mr. Hiren Krishnani, IPO Director of Nasdaq Stock Market, to share a few words. Shall we welcome Mr. Hiren?
Can you hear me?
Check 1, 2.
Hello. It's fine. Alrighty. Well, I hope you had a good lunch. I certainly enjoyed mine. And some of you may have missed the session, so just to be formally introducing myself, my name is Hiren Krishnani. I'm the head of capital markets at Nasdaq, based in Singapore, covering ASEAN region. Today is an exciting day as we welcome Rectitude Holdings, who is listed on Nasdaq under the symbol RECT. That deserves a big round of applause. Rectitude was founded in 1997 by CEO Mr. Zhang Jian, with significant experience in provision of safety and hardware equipment, which is the core of their business. Today, the company is Southeast Asia's leading safety and hardware equipment provider. Offering one-stop customized products to all their customers, Rectitude's products are very well accepted and reviewed positively by its users. With your great success and now being listed on Nasdaq, Rectitude is ready to take on the world with regional expansion plans. I think that deserves another round of applause. Today is a testament to all the hard work and dedication of everyone at Rectitude Holdings, and for your passion to lead and innovate. And this passion has allowed the company to provide access to their customers with high quality safety and hardware equipment. It is truly my great pleasure to welcome Rectitude Holdings to the Nasdaq family. Nasdaq is honored to have partnered with you on this listing. And we are very excited that you could all join here right for the first time in this beautiful Capella Hotel and this beautiful ballroom to celebrate the bell ceremony with us. We look forward to a very successful partnership. I would now like to pass it to the MC for the next comments. Thank you.
So much. Thank you so much for the wonderful remarks. And of course, next, we want to invite the man of the hour, Rectitude Holding Limited Chief Financial Officer, Mr. Chan Yong-Chien, to also share a few words on this celebratory day. Mr. Chan?
Thank you, Ivy. Ladies and gentlemen,
colleagues and partners, today is our big day for all of us. First of all, it's a very proud moment for the company, and we would like to also share this moment with everyone here on our milestone achievement. With many years of operating history in Singapore, today listing on Nasdaq marks a new chapter in the history of our company. By joining many of the world's greatest companies listed on Nasdaq, we look forward to engaging more closely with our investors in one of the world's largest capital market. The opportunities that are open to build our business leads us to become one of Southeast Asia's premier one-stop safety and hardware equipment providers in the Southeast Asia region for providing customized quality products to our customers at their convenience time. Our products are well accepted and supported by our users, and we play a key role in providing safety to our customers and their employees from workplace hazards. With our great success listing on Nasdaq, RECT is ready to take on a larger market with our regional expansion plans in Southeast Asia. We would like to thank my fellow colleagues, my fellow management, and board members for their support and effort. Without them, this would not be made possible, and we will continue on to build from our solid foundation to continue to deliver our core businesses. And let's give us a many round of applause for this moment. Thank you.
Thank you so much, Mr. Chan. We appreciate your heartfelt words as well. So now, on this special occasion, we're going to be taking a series of photos to commemorate it. So first, can I please invite Mr. Zhang Jian and Ms. Yu Kai? So I love that today we are all also dressed in a uniform color to celebrate this special day. So thank you guys so much for being here. Give us a minute. We want to make sure that everything is prepared perfectly. And also because later we're going to have a very special celebratory lion and dragon dance. So we want to make sure everything is done perfectly, all right? So on this special day, I just want to say, big congratulations. And you have your whole team here as well, right? So is the Team Rectitude team here? Can we give them a big round of applause? It's really great to have a team effort to support today's listing ceremony celebration. So in the meantime, as we're waiting for the slides to refresh, because I want to make sure, we give all the photo taking the honor that they deserve. So please give us a moment as we refresh this. My sincerest apologies. So I know that today, on this special day, we're going to be taking quite a few photos because the whole Rectitude team is here. Yes. Thank you very much. You know, we talk about the IPO process being very difficult, tedious, and this is one of the challenges that we'll experience on stage as well with the process, right? So right now, we have Rectitude Holdings Chief Executive Officer, Mrs. Zhang Jian, and his wife, Ms. Yu Kai. Thank you guys so much for being here. And first, we want to take our first set of photos by welcoming Ms. Zhang Caiqing, Vanessa, who is daughter of Mr. and Mrs. Zhang, to take a family photo together. Shall we give her a round of applause? Nice family photo to commemorate this occasion. Oh, more. This is a celebrity moment. All right, let's grab more photos. All right. All right, thank you so much, Vanessa. Thank you. And next, we want to invite the management team, executive directors, Mr. Tony Huang, Mr. Victor Au, Ms. Ang Xiu Sang, Chief Finance Officer, Mr. Chan Yong Xian, and Finance Manager, Mr. Chan Ka Chun. Give them a round of applause. Thank you so much to the management team. Your hard work over the years of IPOing and going through all the struggles have really paid off. Big smile. All right. Thank you guys so much to the management team. Thank you. Thank you very much. So can I invite you guys to maybe, you're staying? All right, even better. So we'll have more people to join in for this group photo, all right? Oh no, I'm not dressed in the right outfit. I shall stay beside. So next we have our independent directors who will be joining you guys on stage. Ms. Shirley Tan, Mr. Fok Chi Chuan, and Ms. Olive Ho Yip Singh. Will we want to grab a few more photos from the photographers? right, that's awesome. Thank you so much. And now for the long-awaited moment where we'll be doing the bell ringing ceremony, such a significant milestone, right? That we'll be doing together. All right, seems that, we want to grab a few more photos since we have the whole management team together here with us. So shall we invite the management team to come up again? We grab some more photos. All right, maybe we curve in a little bit. Yeah. Remember to give a big smile.女士优先哈，所以我们女士呢就站前面，然后男士呢就站在后面，好吗？大家靠近一点点好吗？It's truly a big family, and IPO is everybody's efforts together to build a company's reputation and to bring it to the IPO success. 大家靠近中间一点好吗？大家一起挤一点哦。你要确定你能够看到镜头，镜头就可以看到你。啊，站这也行啦，其实。 All good, everybody? Yeah? Shall we give them another big round of applause? The entire family of Rectitude is here! So right now, we want to get started on the bell ringing ceremony. Such a significant moment, right? For the Rectitude family in their IPO journey. All right, everybody, right now we're going to ring the bell together. We want to invite Mr. Zhang Jian, the CEO, to ring the bell. So everybody here, can we count down from 5 together, okay? So we'll count down all together as we ring the significant bell and usher in this milestone for Rectitude. Everybody, are you ready? They are definitely ready on stage. Is everybody else ready? Very good. All right, let's all count down together from 5, 4, 3, 2, 1. and now we're going to grab a picture with the Lion and Dragon Dance performance by Shichen Jingyong Dragon and Lion Dance Center for their show. So in Chinese culture, for a lot of our foreign guests here, you know, the lion symbolizes strength, stability, and superiority, while the dragon represents power, boldness, and excellence. So this dance for both the auspicious creatures are performed to welcome prosperous times, not just for Rectitude, but for all of us here in this place. So our dragon and lion dance will be going around blessing everybody. So I hope everyone's ready and out of your food coma, because it's going to get loud here. All right, looking good. All right, let's get started with the Lion and Dragon dance! All right, and now Mr. Zhang Jian and Ms. Yu Kai will be receiving the Jixiangwu together for a prosperous year ahead in the business. Shall we give them a big round of applause? All right, so without further ado, we're going to get started with our panel discussion. And may we invite Marcus Chow, partner at Bird & Bird, Charlie In, founder of Raffles Capital Limited, Seeing Eye, partner at Mazer Group, Monkid, founder and managing director of FA Corp, Sam Van, managing partner at SRO Partners. So these are our panelists. Can we give them a big round of applause? No pressure, guys, following up the lion and dragon dance.
Well, good afternoon. We had an exciting this morning, and also the wonderful lion dance that we just witnessed, as well as the bell ringing ceremony. And thank you again for this wonderful event, great turnout. And today we have an exceptional panel already this morning and this afternoon as well. And we're going to spend a little bit of time talking about Southeast Asia and why Singapore is an important place for the market economy and how does that blend into the global environment. So joining the panel, I would love to have them talk a little bit about themselves, a quick introductions. Perhaps we'll start with Marcus, and then we'll just go around.
Hey, hi everybody. Hi everyone. My name is Marcus. I'm a partner with Bird & Bird. Bird & Bird is an international firm. We've got a presence across most of Europe and some places in Asia. And we're not in the US, and for that reason, I work perfectly well with Jason. We would support them on domestic portions of US listings, and we have also been helping a lot of late, we've been helping a lot of Chinese companies relocate to Southeast Asia. So that's all within my remit as a corporate transactional partner. Thank you.
Hello. Hi, my name is Monkid. I'm founder and managing director of FA Corp. Before I start, I would like to acknowledge the wonderful theme of connection in this conference. I would like to relate a story, because this conference is also about stories. When Bill Rosenstock first showed up in my office, he showed up with a bag of frozen bagels. He showed up with a bag of frozen bagels from a Jewish cafe in New York City. Now, since then, we were so impressed by this New Yorker. I would like to assure you that you know, a gift-bearing New Yorker is for real. And we were so impressed by, you know, his gesture of connection that in our recent exercise of rebranding our logo, we have included a hidden circle. And that represents the circle of connection, circle of inclusivity, circle of friendship, which in this conference, I am seeing that the firm of ORLLP, Rosenstock, and Ye is perpetuating in a very meaningful way. So a little bit about my firm. We are a corporate service provider specializing in helping clients to comply with tax, accounting, and corporate governance. So in our business, we do a lot of special work on cross-border tax and structure. That is one of the specialty of our firm, because in any meaningful business, there has to be cross-border function, and there has to be cross-border value. Otherwise, there would be very few businesses with meaningful value without a cross-border element. So most of our clients are not yet listed. They are entrepreneurial-owned company, but they could be on the way to listing. And that's why the importance of compliance, of making sure that they are in compliance in every jurisdiction where they have an operational or investment presence. Thank you.
Thank you. So you let me go first. Yeah. Thanks. So thank you. I'm the managing partner of Mazer Capital. So Mazer actually has got multiple services, professional services. I run mainly as an auditor. So I've got another professional firm called My Millennium PAC as well. Maybe some of you are familiar with that as well. Yeah, so we help some of the clients on audit readiness, and we partner with some clients in helping them to get ready for the audit. Yep.
Thanks. My name is Charlie. I'm a Singaporean, 100% Singaporean, Shanghainese born, and spent 23 years of my life in China. And because of COVID-19, I'm landed back in Singapore. But in the next couple of months, I'll be landed up in Boston, because the way to go is to make sure that you're in America to help our Asian companies to get listed. And after getting listed, you need to really have feet on the ground to really maintain the stock prices. It hurts me to see my Singapore friends, companies, find it so difficult to get it listed on the Nasdaq, and then bomb with a share price less than $1, and you get a warning from the Nasdaq to really make good. So I would share with you, my background is essentially in personal finance. But I've graduated to the corporate finance area because I discovered that you make more money from corporate finance than in private banking. So, but in order for me to ensure that the investee companies that we invest in, they are valuable and they are up in the valuation, the key indicator is, of course, the share price. And you look at the market when you get listed and with allocation, and yet you still have share price collapse. There is a fundamental problem that we need to address before we even think about getting listed. And there are many of us here have been talking about how to really get to know your shareholder engagement, get to know them. Do not come in with a one-night stand, get them in the long-term marriage so that you know your shareholders, and shareholders will never leave you forever. Till death do we part. Those are fable stories that never come true, all right? So my firm essentially invests in 4 different processes. Number 1 is pre-listing, preparing you to list. And after listing is the post-listing, which is the most important part. And finally, you get fed up with the stock market, you may want to delist, or you may want to do a trade sale, and then you pack your bag and you go home. So that is a sad story, of which I have gone through that sad story. I've also gone through the happy story. So Raffles Capital, we started off in Australia, graduated to Singapore, and then 20 over years in China, and thereafter we're back to Singapore. So I hope that this afternoon I will share with you some of the things that we're able to experience and see how Singapore, you can use it as a good platform for you to get your firms listed in the United States and get a very good traction from the market so that you're able to maintain your share price or grow up your share price so that your personal and corporate wealth can be enhanced. And that's the name of the game. We do not list for the purpose of listing. We list so that we as a company is able to go out there and get more money to grow and expand our company. And at the same time, our personal wealth increases so that we are happy that we can make some money along the way.
Well, thank you, Charles. As you can see, this panel is impeccable. They have a lot to share. So a little bit about myself. I'm Sam Van. I'm not Singaporean. Although I want to blend in, the food is incredible here, especially with the Hainanese chicken during lunch. It's impeccable. It's really good. A little bit background about myself. I grew up as an analyst at Morgan Stanley. Spent 10 years at the New York Stock Exchange. Sorry, Hiran, we become friends now, so that's good. It's incredible experience. I spent time in the regulation side as well as the business listing on the Asia focus. Also I joined FINRA, which is a firm many of you have experienced as you go through the IPO process. Some are pleasant than others, so don't blame me for my past experience. So after that, I joined a Bahamas-based firm is a bank where we grow from $12 billion AUM to $42 billion AUM, focus on some of the things that Charlie have spoken about, wealth creation, wealth allocations, and also these little things that we toy with is called digital assets. So Tether was one of the largest clients. And then moving on from that platform, I joined Freedom Holding, which is a Nasdaq-listed company, roughly about $5 billion market cap. I left that firm recently because some of our great client demand that I need to pursue different opportunity and able to join me. So in some way, I'm an accidental founder, and I'm happy to embark this new journey. And also, as Ivy mentioned, people coming from the US, people coming from Asia, and also want to shout out to one of my friends sitting in the audience, coming from Spain this afternoon. So with that, I would love to kick off this panel to have a great conversation with 4 themes. And I'll go through one theme at a time so that this way we can digest properly after lunch. Shall we? So before we start, I just want to highlight some of these economic data, why this platform is important. Platform meaning today's conference. And also why Singapore. So we have to overcome that, right? That was great. That's for us, by the way. That's right, that's right. So just a little quick highlight. Many of you already know this particular data set, but I just want to highlight the importance of what Singapore stands for within Southeast Asia. Now, Singapore population is roughly about 5.6 million. It is debatable, as I understand. It can be 7 or it could be 6. So it's right around that range, okay? And then in terms of the GDP in Singapore, it's roughly about $466 billion on an annual basis. That is significant. So in terms of the GDP per capita, which is the earning of many of you have enjoyed in Singapore, employee of Singapore, it is one of the highest standards in the world, roughly about 86,000 in terms of annual income. So in terms of the diplomatic relationships around the world, they do have one of the best passports, which allows you to go anywhere except for a few countries. So I think 180 countries that you can access to. It's pretty amazing, don't you think? Yeah. So just a few more quick points in terms of the trade, financial and trade in the region. As you probably see where we are today in the Sentosa Island, Singapore FDI reaches roughly about $158 billion in 2023, which is roughly about 10% over from previous year. Now just think about Southeast Asia. There's roughly about 11 countries here in Southeast Asia. The total foreign direct investment is roughly about $238 billion. And Singapore itself already exceeds more than 50% of the FDI in this particular country. So more importantly, Singapore, the port, is the world's second busiest port in the world. And who would have guessed where the first busiest port is? Anyone else? It's actually China, but Hong Kong is very close. Good guess. And of course, Singapore also played a lot of important role in terms of the largest, third largest foreign exchange center, as well as a brain trust in Southeast Asia. So many of the great talents actually is from Singapore, and here you have a lot of brain trust here as well. So why don't we start the panel? So with that, these are general questions for everyone here. The rule is 2 minutes per answer, if that's okay, because Jason and everyone else here is trying to keep me honest. So topic number 1, strategic location and trade hub, a gateway to Asia. Singapore's strategic location at the crossroad of major shipping routes makes it an indispensable gateway for trade between Asia and the rest of the world. What opportunities does Singapore currently present for companies in other parts of Asia?
I'm going to start this off, Sam, and thanks for that. This is actually a topic that I've been speaking a lot lately in China about what Singapore offers to them and the promise that Southeast Asia holds, right? So everybody knows Southeast Asia as a bloc, right? Would have young demographics in their favor, rising economic growth, and it's likely, and on par to become one of the largest economic blocs in the world, provided geopolitics doesn't prevent it from doing so. So I think the question then is what kind of role Singapore plays in this growth? I think the statistics here are quite telling. Singapore is the largest recipient of ODI, overseas direct investments into Southeast Asia. At the same time, it is also the direct and largest dispenser of ODI into the region. So what does that say? What do those statistics indicate? First, they indicate that a lot of the money that's coming into the region gets flowed through Singapore, and then it gets dispersed into the region. So why does that happen? So I think there are obvious tax, legal, rule of law reasons, and spoken like a lawyer, rule of law reasons why that's the case. And I think all of that will continue, and evidently, Singapore holds promise for many Northeast Asian economies for a setup and for penetrating the Southeast Asian region. 2 minutes, Sam.
You're very good.
I think I recognize what Marcus has just shared. And lately, we have actually seen Singapore playing a role of sometimes there is a function, which is really flowing through of investment. And quite often, that's because Singapore has a very good network of tax treaties. So Singapore is an excellent location to locate your investment holding company. And if you invest through Singapore, you literally get a lot of double tax treaty, favorable treatment in the investing country. The country for which you invested in would typically have a tax treaty with Singapore, and that would mean dividend flow would generally be taxed at a lower rate in the country of source. And when dividend comes through Singapore, this dividend is not taxable in Singapore. And a Singapore company can pay out its retained earning as dividend without further tax. What does this mean? This literally means that dividend received from a foreign subsidiary can flow through a Singapore company and reaches its shareholder without suffering a single dollar of tax in Singapore. So that's what it meant, okay? Now, recently, we also have some challenges because OECD, the bigger members are your developed nation. They are finding it necessary to collect more tax revenue. So there are a lot of legislation that are out there that we need to take a relook. Two of those are Singapore and Hong Kong. Both have adopted this rule of taxing a pure investment holding company that derive gain from sale of a foreign subsidiary. All right, so that's like very topical, but don't worry, there are ways to avoid it. Yep. I think what it is politically, Singapore and Hong Kong have to legislate this legislation, but we know what to do and we know how to plan for the client to avoid having to subject such gain on sale of a foreign subsidiary to tax in Singapore or in Hong Kong. Now, there is also this other rule, which is the global minimum tax, and I believe everyone would have heard about it. Again, it is an effort. 15%, yeah. Again, it is an effort of OECD, which is really controlled by a lot of the developed countries, to impose their right to increasing their tax collection. So again, this requires some planning, and as you know, we all know that cross-border groups usually have to face a lot of challenges in the various changing law outside their jurisdiction. Now, one more very functional sort of role of Singapore is a wealthy family entrepreneur literally love to be able to live wherever they want to live, be wherever they want to be. Now, it is really very easy to set up a function of the business here and enable the family to move to Singapore as an employee of the company, thereby having the freedom to come into Singapore at any time. Right? So that is like, from the personal perspective, wealthy people just love the freedom to be anywhere at any time. So this is one of the benefits. And I don't have to add that Singapore is a safe place with good medical and education and all of those things. One other function would be very interesting because we have a client that wanted to set up drone manufacturing in India. They went there, but they found that the parts to make those drones were not good enough in quality. And they had to source from China. And it became a bit politically sensitive, you know, to be importing Chinese products into India. So what they did was to set up in Singapore, and China will sell to the Singapore company. Singapore will then sell on to India. So there are a lot of multiple roles, you know, that Singapore can play. I think my 2 minutes up.
No, that's exceptional.
Sam, I'm just going to jump in there quickly on a slightly legal point. Indian legislation has certain rules which says that you can't be investing or taking investments from neighboring countries. So no guess who those neighboring countries are. And there's a FEMA, which is the central bank's regulation, which is Practice Note 3, which prohibits this, and we have explored situations where Singapore is used as conduit for investments into India successfully.
That's great.
Yeah, they've almost said it all, you know. What do I say?
From audit point of view.
Yeah. Yeah, I think from the standpoint, looking at how clients, when they come here, it's very typical, like what Manwai has shared earlier. Coming from a tax perspective, they set up here. And the Singapore regulators actually come and provide a lot of, how would I say, passes and types, different types as you go along. Tech pass, one pass, you know, all kinds of passes that come in, because in a bid to attract everyone here. So it's very pro-business from that perspective. Okay, this sounds a little bit cliche, but yeah, this is how the local regulators actually look at the local environment here.
Go ahead, Charles.
So my take is, during COVID-19, some $5 trillion came into Singapore family offices. And of course, recently with all the debunker of the money laundering problems and all that, we will see that how many of the 5 trillion really flow into the Singapore market. The Singapore stock market, as an example, has only a market cap of $600 billion relative to the American market with the $54 trillion. So you find that in the first 6 months of this year, there's only one IPO in Singapore, whereas 5 Singapore companies get listed on Nasdaq. And of the 5, only one is not a casualty. And that one is Ride, a taxi company, a platform company. And they were smart to have an arbitrage listing on the DAX so that the DAX can buy the NASDAQ can sell back to the DAX, and then they play up and down among themselves, and they're able to achieve a miracle twice the amount of the IPO price. So from a modern perspective, what would Singapore be as a strategic location for listing? This is our subject today. I would reckon that if you are a merchandiser, you want to sell something, you definitely would have to go to a place where the market is there. People with $54 trillion or 165 million investors waiting to buy something that is sexy. Whereas in Singapore market, less than 200,000 people that's willing to go and buy your stocks. And in the Singapore market,
67% of the total market cap is related to our sovereign fund, Temasek. So you're playing mahjong between 4 guys, and that 4 guy happen to 3 guys that work for the same guy. And I do not know how you can grow this market. And somebody suggested in Parliament and said, look here, we should take some of the $5 trillion and institute them to invest at least 10% of the amount into the Singapore stock market. And at the same time, Temasek or GIC should match dollar for dollar to energize the market. Then we are going back to 1949 prior, almost like China. So I only know of one country that tells somebody to make the stock market to go up or come down. So I think Singapore is a democracy area. So I would reckon that the Singapore stock market may not be a venue for growing companies that are addressing the Asia-Pacific market to get listed on Singapore first. Then if I can take you back to history, we have a Singapore company called Creative Technologies that invented the sound card where Apple would sue them, and then they sue back Apple, and they won Apple. And Creative Technology was listed in America. And after that, they become the very interesting, the superstar of Singapore. And finally, the stock exchange invited them back to Singapore. And the day they got back to Singapore is the day that they went all the way down, 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 down. And I don't know why, you know, so maybe it's jinx or whatever. So you look at some of the other companies that are listed in America, and they get a dual listing on the Singapore Stock Exchange. And we also see the same fate, that is stock dwindling downwards. So what is the key takeaway? I explained to everybody, you cannot fight against the forces. If America has 165 million investors, we've got a $54 trillion market, why are we fighting against the tide? All right, so we have to package our Asia-Pacific companies in the way that the Americans can appreciate and like it. You cannot insist that this is an Asian or Singapore company and this is how we run our business, and definitely you suffer the fate of YY and company, all right, from $4 down to 50 cents or 80 cents. So you have to redefine the rules of the game and say, this is how the American markets will buy my stocks, and here I shall present it in the way that you like it so that you will buy me, and you buy me. So today, if I asked you, is an Apple an American company? I can tell you that Apple is not an American company per se, because more than 50% of the income come from Indo-Pacific. Without the Indo-Pacific market, it is no longer an Apple company. Tesla's growth, where does it come from? It's not. It's from the Asia-Pacific market. You look at Meta, you look at Google, Alphabet, the Magnificent Seven, Netflix, Amazon, where are their growth? You analyze and dissect their financial performance, you will notice that more than half of the income and profits come from Asia-Pacific. So now, I'd like to take one step further if you study history. The Americans came up with the Indo-Pacific strategy so that do not want certain countries around this region to become stronger or become more authoritative, whatever. Then you have the Europeans also came up with the Indo-Pacific strategy in year 2000. Then the Canadians came up with the Indo-Pacific strategy. So everybody come up with the Indo-Pacific strategy. Basically, it is to make sure that this part of the earth is safe. Why? Because 40% of the Earth's population is here, and the fastest growing region is this part of the world. And of course, Singapore is right in the epicenter of everything. And anybody who has anything, they would have Singapore as their baseline, as a HQ. So therefore, companies that are listed in America may not be an American company per se that rely on the American markets. They could have at least 40-50% of their income coming from the rest of the world, namely Indo-Pacific. So from a strategy point of view, from diversification and risk point of view, it is good risk mitigation that you do not put all your eggs into one market. So therefore, I urge all my Asian friends who are seeking a listing in the United States, first of all, you have to look and behave and act like an American company.
You must have directors and people who are all Americans, who can speak the American style of English, not our Singapore English, not the Chinese English, the American English. And you need to have directors that are able to present to the investors over there in the way they can understand. And they're able to party with them, drink with them, eat with them in the way they like it, not the way we want it. You put lion dance in front of them, they get panicked. I'm speaking from my personal experience. I'm a true blue Singaporean, but when I go to America, I cannot speak in the Singlish way. I cannot just eat my Singapore food. No way. I got to go along with them. So I hope that all of us here who want to seek a listing in the United States, we have to really go with the flow and make sure that your board of directors, your independent directors in particular, are Americans. Your board of directors must have very good understanding of the American market. Example, our BitDance TikTok CEO, which is a Singapore boy, but studied in MIT or studied... he studied in Harvard, all right? And we got guys who study in Stanford. If you never study in Stanford, at least you stand around Stanford, all right, at the coffee shop near Stanford or whatever. But you need to come across, and you need to have a home address in Stanford, MIT, Boston, or whatever, so that you come across as an American. You must have family there. You need to, so to say, party there. So I hope that this is the way that you have to present yourself. And as you need to be in the market to defend your position. Right, in all military national service we go through, you want to defend your country, you need to have your boots on the ground. All right, so then you can protect your share price.
So Charles, we have a lot to cover.
Yeah,
so keep that thought a second.
Sorry, get excited.
No, I do. I love it. This is great. Especially after lunch, right? This is like a dessert. No, I love it. And thank you again for talking about the Magnificent Seven, because where are they listed in terms of trillion value? On Nasdaq. So I truly believe in that. So the second topic, if I can move on a little bit, this is actually a great segue to it, is talking about the financial and business center, right? We touch a little bit on it, but at a very high level. A bridge for capital flows. And of course, Charles, you kind of mentioned a little bit, but I think there's a lot more that we can peel off the onion a little bit. So Singapore is a premier global financial center, currently ranked the top 3 by many of the world's respected financial platforms as published, offering a robust regulatory framework, political stability, and a business-friendly environment. Where is the city-state heading under the new leadership in Singapore? Or in America as well? So maybe there's a little bit political view, but would love to get your thoughts about some of these moving things this year.
Maybe I start after leave it to them, okay?
Yeah.
Okay, I will start it then after that. First of all, I do not belong to any political party. But I can assure you, Singapore is a very collective population. So we put our money into what we call our Central Provident Fund. And hopefully the Central Provident Fund and our government and all that will be able to manage the fund effectively. And of course, we have the government who have a lot of surpluses and all that from the people of Singapore. And they use those surpluses to invest intelligently into various investments. I'm proud to say that as a Singaporean, any companies in the world that are very exciting, that are going places and all that, our sovereign funds have their fingers in every one of those companies. All right, example, in the olden days when I was in China, all right, any Chinese bank that are about to go for IPO, the Singapore government will have some interest in them. Any companies, there's anybody out there in Hong Kong for their listing, I'm very happy to report to you, Temasek or some of the Temasek-related funds would have investments in all of them. Even companies that go crazy like FTX, right, they will have fingers in them as well. All right, so, and after that, when they lost $300 million, and they say, from a relative point of view, it's not a very big sum of money. So let us not quarrel over it in Parliament. But I can assure you that from an individual investor's point of view, Singapore has very little to offer. But from a corporate standpoint, from a sovereign standpoint, Singapore government, representing the people of Singapore, who pay very nice tax and all that, is able to engage and appoint the government to invest for and on behalf of the people. And they did it quite beautifully and intelligently and also very profitably. And nowadays, they're showing out their results. So therefore, from this perspective, as a young startup raising money, you find it very difficult to reach out to the sovereign funds. So therefore, companies have to go to places like America, where there are new regulations in America that allow small companies, even pre-revenue companies, to raise up to $75 million without an IPO under Regulation A+. Under Regulation A, you can raise up to $50. Under Regulations D, you can raise up to $20 or $30 million. All right? And after raising the money, then you file in your Form D. Your Form D is only 2 pages of information to file in. It is not a prospectus that you and I will have to write. All right? So therefore, if I'm a guy, a company, a young company, a startup who's trying to raise money and do not want to really get attacked by the VCs or suffer the VC winter, what do? I cannot go around presenting myself to the various VCs around this region. I have to go to the American market and write on Regulations CF, Regulations C, and Regulations D so that I can raise the $20 million, $50 million without a full IPO prospectus, and I can get the money. And after that, within 14 days, I file in my Form D to the SEC. So that is the name of the game, to raise the money and learn the process of public listing. So you list yourself on the private equity exchanges first, then you learn the corporate governance standards, disclosure, quarterly reporting, and so forth. And thereafter, when you find that the investors in those markets know you, you know them, the engagement is there, the relationship is there, traction is there, then you go for the bigger bang for the buck, $100 million raise or $75 million raise. So that's how you go. And at the same time, you allow your financial to float up all your profits, to float up all your revenue. And that is the name of the game, the slow path, but it's a learning process. So I would imagine that Singapore can provide this opportunity because our governance, our standard, our financial reporting, all right, and the way that our citizens are being brought up, we are a fine society, all right? So if you don't do anything right, you get fined immediately, okay? so essentially, Singapore is a good place for you to start your business and go to America to raise the money from a Singaporean perspective.
So, see, you want to chime in a little bit?
Yeah. So I think coming from having been in Singapore local regulators for a couple of years, so maybe just to share a little bit on what I see when I was in there. So basically the points where the policies have already been fixed for a long time. So newcomers come in, they're just looking at the policy, looking at how they can do it in a more innovative way. So if you talk about political stability, Singapore is the place to be. Yeah. So they're not here to radically change policies and all. Policies have been set in place for a long time.
That's great. I thank you. Maybe next time Charlie's running for office, maybe we can vote, yeah? Get the capital inflow, and then we'll make a decision from there. So Moonkit, maybe you want to share some thought as well?
I believe that while we have a change of prime minister, but the ruling party prevailed. So therefore, the policy that have been set in place would continue. And I must say that Singapore has a very, very premium group of civil service people who contribute significantly to the way that our country is run. And that really, really provide the element of productivity for businesses that locate themselves here. And we all know that productivity is the name of the game. Otherwise a big margin would be shaved off, or you would suffer from time to market and so on.
Are we a totalitarian society? This is the type of questions that I get when I speak to the left-leaning, liberals, friends that I have from the US, right? I was, Singapore, you're not a true democracy and all that. But the reality is that all of us have had that vote, and we all voted in the way that we did. There's something about governance by the people, for the people, right? So I think there's too much emphasis on governance by the people. I think it should be for the people. So I think the Singapore government has done a whole bunch of good stuff. Like, I could go on, but 40 years, 50 years from third world to first world, there's something to be said about this system that works. And Foreign Affairs recently picked this up as well and described this as the Singapore way. I mean, it's one thing for the government of Rwanda to be looking at Singapore and say, oh, I want to be Singapore in Africa. It's another thing for West-leaning left liberals to be looking at Singapore and say, maybe this is the way. I mean, we have no fractious bipartisanship, which goes to the root of society and all that. So everything is done on a pretty consensus, collegiate manner. An FT reporter who was in Singapore actually once reported, he went to a church service in town, and the pastor was just doing his thing, and then he went like, oh, I hope Singapore continues to have economic growth, for the next 10 years to come. And this was something that was given in the prayer. So I think he was a little bit shocked when that was said. I was a little bit shocked when I read that. But it was reported in the FT, and I think this is symbolic of the spirit of Singaporeans and how we want to make this place work, and why this is such a good place for people to come here and co-invest and grow with us. 1 in 10 Singaporeans, we are millionaires. I mean, it wasn't always that way, right? We were third world, and now every 1 in 10 people you meet are millionaires, US dollar terms. So I think there's something to be said about what's been done. The financial center that Singapore is not something that is happened by instant. It's something that has been constructed carefully with a lot of thought. That's all I have to say.
No, thank you, Marcus. And of course, Jason is not here pointing at Jason. He moved here too as well to Singapore, now Singaporean resident, right? So this is very interesting point as you raised up and thinking about how to position Singapore. And this is actually an interesting topic that leads us to the third place. It's called the Innovation and Technology Hub. Of course, you have a very good robust regulatory framework, great governance for the people, and now we talk about what is driving the regional growth, okay? So Singapore has emerged as a leading innovation and technology hub in Asia. The substantial investments in research and development, education, and infrastructure. The focus on innovation not only enhances Singapore's competitiveness, but also attract global talent and investments. Why is it only being discovered now, and what can we expect in the next 5 to 10 years in Singapore? It could be anyone. So maybe we start with Marcus.
Okay, let Marcus do it.
So we see quite a bit of this trend growing, and how we're living in a world of small yards and high fences. So we're seeing a whole spate of certain companies and corporates coming out from a particular nation to Singapore to set up shop here. And whether or not some of these companies would eventually find a way to list, and I strongly suspect it's going to be Nasdaq if they ever decide on a listing. It's a separate issue as to why they're coming to Singapore. So I think companies come to Singapore for all kinds of reasons. One of our clients, Shein, it's got its HQ based here, and TikTok, it's got its regional HQ base here. Tencent has got its regional HQ base here. So there must be a reason why they're coming out here. Is it just for the tax, perhaps? But I think it's also about the stability that Singapore offers, and the fact that Singapore is a party to so many international bilateral conventions and agreements that it makes a lot of business sense for them to be here. As to whether or not that trend is going to continue, I would say since time immemorial, right? Singapore has always been the epicenter of things. From the times of the Srivijayan empires, Singapore was at the heart of that Malacca route, to the time of the East India Company and to today, right? So I think it's not a blurb. I think that continuity has existed. The West needs to invest in a place where they feel like people are quite neutral. The East needs a place where they could relate to the West. Singapore is that place.
Monkit?
Yes, Singapore literally attract a lot of foreign interests because this is a great place to live. CEO love to be here. So they would somehow cut out a part of their functional activity to be located here, you know. And apart from that, I think we are rather innovative in the way that we deal with the changing world environment. For example, the global minimum tax does impact on the meaning of our existing tax incentive because it sometimes invalidate those incentives and nullify the effect. So the recent budget literally addressed this issue. So instead of continuing with the old incentive, we have reformulated it by giving tax rebate or investment tax credit of some sort that will make it cheaper for companies to continue to be here so that we're more competitive, but at the same time enable the global minimum tax rules to be met.
So for me, I felt it's more, I think Singapore, it's more of a luck. Yeah, so to say we're in a more stable environment here. In Chinese, what we say, 天时地利人和, right? That fortunately for us, during the period of post-COVID, we started opening earlier. Yeah, so then that's where, you know, everybody was looking at Singapore as a world to come here, being more stable. You know, Singapore is already open, right? Yeah, so that's how I felt. It's not so much that Singapore was, you know, suddenly founded. I think it's political.
So Charles, maybe a few brief words. We'll move to the next topic.
I'm relying on history to tell me what's going to happen to Singapore in terms of all the innovations and all the creative and new ideas. First of all, Singapore for the past 50 years, our education system does not emphasize on creativity and innovation. All right, we are being told to pass exams and pass very well. And because of that, the creativity and out-of-the-box thinking is almost zilch. Then, as a Singapore strategy, we send some of the finest brains out of Singapore to the top countries like America, China, and so forth. So as a result, a lot of these intellectuals and smart guys, the innovators, the technologists, the scientists, you find home in America, in China, in Europe. So, and those who come back, I'm not saying they're no good. I mean, they come back and then they go back to the same system. That is, do your job and do it well. Anything funny and creative, wait till you run your own business, then you do it. So as a result, there's not much of VC fund, so there's very little you can do. So relative to the world of medtech, science and technology, you know, Singapore will have very great difficulty to find the next breakthrough. But having said that, from time to time we have it, because friends like from India that comes in, a friend from China that comes in, friend from the Greater Bay Area that comes in, friends from California that comes in here. And again, because they come here, not because there are technologists here to develop the new innovation, because there is a certain attraction for the family, for tax and so forth. So as a result, they transport that technology and the idea over to this part of the world. So I reckon that it will still take many, many years. But as a pragmatist, I don't care whether the technology is in America or China, as long as you are home-based in Singapore and get listed on Nasdaq, fine and dandy. I'd be very happy to sponsor that deal. You see, so the key word here is, never mind whether Singapore is an innovation and a scientific center. It's important that Singapore know how to attract proven technologies, profitable technologies are parked in Singapore and then list in America to raise the money to fund the innovation and the progress of this company. And as a result, Singapore GDP improves.
Sam, I'm just going to jump in there. Charlie's touched on a really pertinent point. I'm just going to jump in to supplement a little bit about what he said. So I think in this world, I mean, it's been said, true or not, you know, America innovates, China replicates, the EU regulates. So where does Singapore sit in all of this, right? We are a small nation. We don't have Einsteins in our population. So And the random chance of getting the Einstein is just so random and so remote. So what do? Right? We invite the best companies to come to Singapore and add to our ecosystem. So EDBI has been doing a fantastic job at that. Did you know that 1 in 7 earpieces used globally is actually manufactured in Singapore? So no one knew that until my clients pointed that out to me, WS Audio. So I was like, wow, okay, now I know. So that's the strength of Singapore, just finding niche markets where we could make a difference to the world and staying relevant to the huge economies.
And many great talent also stayed here too, right? As you see it here. And thank you for that thought. So this is probably a little bit lighter of a questions for the audience and also for the panel. Let's talk about regional and global diplomacies, right? And how is Singapore facilitating economic cooperations? So with that, I want to touch the last topic. As an active member of organizations like the ASEAN, WTO, and APAC, Singapore advocates for free trade and economic cooperation. It's strong bilateral ties with major economies, including the US, China, and European Union, foster a stable and predictable environment for trade and investment. What role will Singapore play in regional and global diplomacies? So maybe I'll start with you, Charles.
Singapore is always a friend of the neighbors because we are the smallest of all. So therefore, we cannot afford to offend anybody. So what we do is extract all the funds in the world and then distribute out to the neighboring countries and hope that the neighboring countries will grow and develop and become better. So we have better neighbors. And then as a result, we benefit from that wave. All right. Example, if right now in Myanmar, Cambodia, Laos, Vietnam, all right, if they are growing in double digits and we are there, we definitely will benefit. And the most important thing is how to fund them, how to give them the technologies, the talents, the market territories, and the tranches of funds. So if we can address the 4 T's, I think Singapore become very useful. And we will become friends with the neighbors. And the name of the game is how Singapore can draw in the foreign direct investments via Singapore and then pipe it out to the ASEAN country. Then, if we can do something like this, we will succeed. If not, we have no relevance in the modern world. So 200 years ago, Sir Stamford Raffles came over in 1819. And then in 1828, all right, Bosted came over. So these 2 guys came over, they do trading. So right now, 200 years later, Keith running Bosted of America and Charlie In running Raffles Singapore, we are now collaborating and we hope that both of us can bring the money and the dough to feed the whole Asia-Pacific region.
So I know we're a little bit behind time for a few minutes, so maybe we'll have a quick 30-second wrap-up if it's okay. Monkit, would you want to have
I
to
feel
share
that
something?
as a significant global financial center, we run the entire, brand very well. So we truly attract a lot of significant fund managers who want to be based here. So that's the throughput of how funds are attracted to be channeled through Singapore to be invested in various other countries.
That's great. Marcus? Okay.
Yeah, I think it's like what Charlie said earlier, Singapore, it's more towards common or global prosperity rather than, single prosperity. Yeah.
So we do have room for a few questions. If you're open to have your question eagerly and want to bring it out, please do. There's a lot of good experts here. Yeah. And if you want to have a private conversation later on, there's also welcome as well. Any questions from the audience, whether you want to move to Singapore or trying to figure out your next step?
Yeah, that gentleman. That gentleman on the right.
Okay. Gentleman on the right.
On my right.
It's coming for you.
I think this is just a fantastic panel. You make a lot of great points. I mean, Singapore is a great investment climate, and you didn't talk about it enough, I think, but it's also the financial hub of the fastest growing region in the world, Southeast Asia. I come out of the US, I come to Singapore about 4 or 5 times a year. When I tell investors that I'm coming to Singapore, the question they always ask me is, what part of China is that in? And so my question maybe, for Charlie is, how do you educate American investors so they understand? And I think it's important because if American investors understood what this panel has been talking about, it would make all of these companies jobs trying to raise capital in the U.S. Oh, you're from Singapore. Now I understand Singapore. I think it would make their jobs raising capital if American investors understood the real Singapore story, not that it's some province in China. So, Charlie?
I share with you a practical experience I had. My law firm in the United States at that time was Northern Rose. So I was invited to their house in Silicon Valley. And the wife asked me, is Singapore in which part of China? I nearly had a heart attack. The husband runs Northern Rose, the leading Silicon Valley law firm, and the wife doesn't know where Singapore. So I said, why don't you watch Crazy Rich Asian? Then after that, I'll explain to you what Singapore is all about. Then she went to really watch the video on something. And the next day I met her in a house. Then she said, wow, the computer graphics is fantastic. You know that building? They use the computer graphics to make that building. I said, excuse me, that's Marina Bay Sand. That's real. And they couldn't believe their eyes. They said, this is Singapore. I said, gee whiz, all right. I'm not in Idaho or in Wyoming or in a smack right in the middle of somewhere. I said, this is real Singapore, because I can't blame the Americans who will never travel out of America and all that. So it is an unfortunate thing, but we as Singaporeans have no choice but really have to be a good brand ambassador to go out there and show people what Singapore really is all about and what it really stands. And of course, if we can, we invite them to really come and see us, and they will have an understanding that, wow, this is a place that really things really work. And to really sum up the point here, why some of our stock prices crash is because a lot of people don't understand. They thought that we are the proxy or the province of China. So when there is a little bit of tiff and disquiet between China and America, so they said this is a stock that will never make it and all that. So therefore everybody short it. So as a result, the short sellers are shorting the stocks because they have a certain perception. They have a certain prejudice, if I may. And our job is to find out and drill down who exactly are the sellers, and more so who are the naked short sellers, and they're going to take them to task and going to bring them up. Again, nobody is doing that. Nobody is defending your position. And as a result, everybody start bullying, and every stocks that coming out from Asia suffer the agony, with the exception of RITE as an example, because they know how to do the arbitrage. So from your point of view, I would strongly suggest that any Singapore companies or Asian companies that want to get listed in America, you need to have your boots on the ground. You need to have American representative, American partners to represent you. And that's the reason why Raffles collaborate with Bausted. Bausted is a 25-year-old company, all right, and they are in Irvine. They've done 500 IPOs. If I were to go to America and do an IPO, where are you from? Tiny little fishing village? Nobody will believe me. All right, because I hang out and do business together and partner with Bausted, I have a better sense of credibility. And likewise, Bausted, when they come to Asia Pacific, he walk into China, walk into Indonesia, Malaysia, our brand is there. So we are the local boys here. So we can really bring very, very good companies to be listed. So it's a function of man on the ground, and at the same time, really do whatever it takes to really let people understand you, and the concept of engagement becomes important. But not because I'm going to go for IPO, then I engage with you. It is because in the next 3 years I'm going to go IPO, I got to engage you today so that you will know me for the next 36 months. You will know me every quarter. I'm going to send you information. I'm going to disclose all my quarterly report. I'm going to share with you my management meetings. All right, although I'm not a publicly listed company, I will behave and act 100% like a Nasdaq listed company so that people have the taste and the flavor of what we are. And then from there, the investors will have a much better feeling about this company. I hope that answered your question. Thanks.
That's a great point.
Maybe I could add on. I think just for the sake of the Singapore companies here, because they tend to be a little bit more regulated. So, yeah, so that part itself, I think it's something which I think maybe the American guys should be aware of. Yeah, it's.
So what we'll do next is we thank the panel.
Can I just do a
yeah.
rejoinder for that? Sorry,
That's great.
It's for the purpose of everybody. When we talk about Singapore level of regulation, I give you an example. One particular investment bank has been accused of, let's say, money laundering and doing some naughty things and so forth. The Singapore government and Singapore Monetary Authority immediately, in less than a couple of months, find the culprits, find them, lock them up in prison. After they have been released from prison, then the American side only started to summon them to the court, started to go for the court cases and all that. So you look at the speed of execution of our regulation versus the time that American takes is a long, long time. So therefore, as a Singapore company, if you ever do anything naughty, I can assure you, in less than 24 hours, somebody will call you. I give you an example. When your stock behave in a certain manner that is abnormal from the normal trading, the stock exchange will write you a letter immediately, say, why is your stock having this problem? Suspend the stock for the time being. Until you give the reason, then we allow you to trade again.
Well, actually, there's a surveillance system, right? Nasdaq have a wonderful technology to monitor some of this stuff. And the point is just to facilitate the buy side and the sell side. We can talk about the market structure another day, but that's a very different conversation. So I want to respect the next panel as well, and I thank you very much for all your time. And please find them out in the audience and ask any specific questions you may have. Thank you.
Cheers. Thank you. Thanks.
Thank you so much to all our panelists. Oh, yes, of course. You guys should definitely grab a picture. Well, Charlie's definitely having a great time at this panel discussion. Thank you so much. Give it up for our panelists one more time. Thank you so much. Well, you know, I was sitting there and listening to this very passionate exchange, and I realized I came for an investor conference, but I left with a history lesson, you know. So that's pretty interesting. I learn a lot of new things every day. So thank you so much to all our panelists. So welcome back, everybody. So we really appreciate you guys being here, and we hope you really learned a lot from this passionate exchange, right, about the strength of Singapore in the global economy. Well, right now it's time for a poolside chat to learn about how to maximize the value of public company status with EF Hutton LLC. So just a side note, it is called a poolside chat. We just want to keep it casual, okay? There's 3 pools in Capella. I'm sure we're near one of it. So we're just going to go with poolside chat, all right? So without further ado, I want to welcome our 2 panelists, David W. Borrow, Chief Executive Officer of EF Hutton, and Scott Powell, President and Chief Executive Officer of Skyline Corporate Communications Group, LLC. Give it up for our 2 panelists. Oh yes, please feel free to take a seat. Scott and I had a very in-depth discussion about whether we should rephrase this poolside chat, but we decided to go ahead with it to keep it very casual and an intimate conversation between them. So go ahead, guys.
Test, test. All right, good afternoon, everyone. Hopefully all of you can hear us okay. Dave Burrell, CEO of EF Hutton, and I'm Scott Powell, President and CEO of Skyline Corporate Communications Group. We're here today to, as she mentioned, a poolside chat. I wasn't sure if this was inside or outside, but to talk a bit about the U.S. capital markets. Thanks to all the attendees here. It's great to see everyone. Dave, good to see you again.
Great to see you, Scott.
We've known each other for quite a few years at this point.
And 20 plus years at this point, so that's
It's been a while, aging ourselves, but I wanted to thank ORY and Nasdaq for hosting this wonderful conference. We're honored to be here, so thank you.
Great. So, David, it's great to have you participating in this discussion today. Would you please introduce yourself and your firm, EF Hutton, and tell the audience specifically about the firm's capabilities with regard to initial public offerings and follow-on offerings?
Absolutely. So I'm the founder CEO of EF Hutton. We're one of the largest investment banks in the world. We've been #1 in IPOs and listings both on Nasdaq or Nasdaq and New York Stock Exchange 2023. We're #1 in the world 2024. I think we were second to Goldman in 2022. Since founding the firm in 2020, we've I think taken over 100 companies public. We've done over 300 public offerings consisting of IPOs, follow-ons, secondary offerings, and the likes, raising approximately $20 billion. We've been ranked #1, I think, on this side, for SPACs with a large number of Singaporean sponsors, but also just in APAC in Southeast Asia. So we continue to focus on this side of the world and guiding issuers from all different types of regions here, not just Singapore and Hong Kong, China, but also some other areas like Cambodia and so forth that have been becoming more prominent. So we're very familiar with the waters. We have a great relationship with Nasdaq. We have a great relationship with New York Stock Exchange. So that's a bit about us.
Thank you, David. Maybe you could discuss a little bit about the state of the small and microcap IPO market over the past 12 to 18 months, and how does that compare with trends that you've seen previously?
Absolutely. So the IPO market's dried up after the 2021 boom, if you will. That was one of the most robust markets for about approximately 20 years. The IPO number of issuances in 2022 and 2023 in national exchanges, either Nasdaq or NYSE, which I think a predominant amount are at Nasdaq, 75+% or so, but especially in the small cap. But the number of issuances went down. It was two of the slowest respective years, I think, since 1987, both in deal size and number of transactions. So more recently, in the last 12 or 18 months, it's started to pick back up. It's really been 2024. You're starting to see a larger number of issuances. I'm happy to see my competitors having some IPOs being conducted because that just meant the overall marketplace has been improving. But it was after 2021, it was very tough sledding for issuers. The most important thing has been smaller transactions with lower valuations to get transactions completed. So the process itself, I think, has stayed relatively consistent in terms of the timeline. 3 to 6 months, I would say, was in 2020, 2021. You started to see a little bit of a slowdown as of late to more of that, 5 to 7, 8 month time frame from starting to getting the working group, having your organizational call, to actually IPOing.
Yeah, thanks, David, for those insights. So we've seen, healthy IPO markets, softer IPO markets. In periods where, as you just mentioned, the IPO market's a little bit softer, maybe companies are not raising the amount of expected capital at the IPO, or maybe not getting the exact valuation, the option is then to conduct a follow-on or a secondary offering, and EF Hutton's done a tremendous amount of those types of offerings. So how should companies think about the IPO transaction and a follow-on transaction?
Yeah, that's a great question. So with regard to the IPO market, a lot of issuers believe that is the end goal. But we like to refresh them that you're just starting on your career cycle within your enterprise of meaningfulness, both in capital raising and potential growth. So the first step is to be listed, and we've really emphasized on that where you're not necessarily getting, like you were in 2021, as I mentioned previously, a $100 million IPO or $25 million or $50 million IPO for all of your CapEx needs. But we've informed them there's a much larger, more robust market. Once you're trading on Nasdaq, you have the trading history, you have additional volatility that gives more comfort. It widens the net to the institutional investor base. So your IPO is just the beginning. I've seen 3 to 4x the amount of capital raised within the first year post the IPO of what their IPO size was. So.
Yeah, and maybe could you talk a little bit about the different options for that? Maybe a S1 versus an S3 or an F1 versus an F3, and how can companies sort of position themselves for that follow-on offering if they're not getting the expected IPO proceeds to fuel their growth strategy or plan at the IPO? Maybe you could just talk about some strategies to position themselves and different options that they have.
So when you do a traditional IPO with a domestic issuer, you use the S1 form to file with the SEC. With regard to the F1, that's just a foreign filer. We haven't really seen much of a difference, no downtick for being a foreign filer as you had in years past. Nevertheless, some of the restrictions that you have include not being able to actually file an S3, which is a shelf, for at least 1 year after going public. So your different types of filings would be a new S1 form, or you can conduct a PIPE. Either one of those are falling under the umbrella of a follow-on offering. Filing another S1 or F1 would be to pre-register securities, whether it's common, warrant, or anything in between, preferred, et cetera. So you're pre-registering securities. You can file confidentially. You don't have to flip public until you've already built the book. And that process typically takes, I would say, 4 to 6 weeks following your IPO, or once you have your org call to determine whether or not you'd like to do a follow-on offering. The alternative to that, again, in the first year, is conducting a PIPE. That could happen overnight. Typically, that is basically you would post-register of an offering with institutional investors, typically, securities that you sold in that offering. So instead of waiting 4 to 6 weeks, you do it that day. It's a little bit more expensive because you're not giving those investors tradable securities or registered securities, and then registering them after the fact.
Thank you, David, for those insights. And then maybe to sort of finish up on this particular topic, are you optimistic about the IPO market for the second half of 2024? Do you have any insight into what the market might look like for IPOs in 2025? And what catalysts do you see that could drive IPO activity in the U.S. and in 24 and 25?
So we're looking at the IPO market as continuing to be more robust than it has been. Every month that goes by has been positive, both in number of transactions and the deal size of the transactions. 2021 was, a great year, as I mentioned earlier, but it really hurt, and we had a 2-year pullback. Investors were weary. They were nervous to dip their feet into the waters, so they've been very slow to start to become more actively invested in the IPO market. In late 2023, we saw that I think 8 to 10 issuers, the predominant amount of them, if not all of them, going to Nasdaq, that were private issuers looking to IPO that had north of a $10 billion potential market cap. So these are the leaders in the space. You almost had no IPOs of that nature in 2022 and 2023. So with them telling, it was very telling to the street that IPOs were going to start to come back. I think also on a geopolitical standpoint, with the upcoming election in the United States, I think that gave some uncertainty in 2022 and 2023 into where things were. But I think the uncertainty has created a positive at this point, that there may be administration change, but either way, there may be some policy changes and so forth. So you're starting to see a little bit of pickup from the the 2 prior years that were very slow, just naturally, and then I think you'll see a much larger tick up once we know if it's going to be a Republican or Democrat in office.
Yeah, so once some of the uncertainty is beyond us, and probably some interest rate cuts or some signaling from the Fed that interest rates may be coming down a bit to drive money from fixed income back into the equities market, I'm sure would be also a positive catalyst for the IPO market.
Yeah, absolutely. We've seen SPACs start to come back. That's a yield-oriented based product, and I think everyone's expecting, perhaps even in this quarter, to have a rate cut, either to boost the Democrats on their election probability of winning, and also just to continue to get a little bit more of an outflow of transactions leading up to the election, again, to better the chances for the Democratic Party to be reelected.
I mean, since we're on that topic, David, about SPACs, and since EF Hutton is one of the global leaders in SPAC issuances, maybe you could help educate the audience a little bit about the difference taking a company public through a traditional IPO versus going public through a SPAC merger, and maybe some of the pros and cons of each of those strategies.
Yeah, so we have a number of issuers. I think we've de-SPAC'd 25 issuers. I think we've SPAC IPO'd about 75 companies, somewhere in the likes of $10+ billion has been raised. What we've noticed is that there's been a bit of tough waters to be able to merge in private issuers with the de-SPACs. There's a number of different moving parts that you have to be conscious of. The entire working group has to be very savvy. You have to have great counsel like ORY. You have to have bankers, IR firms following it, auditors, financial consultants, all navigating a merging of 2 companies. What we like to do with most of our private issuers is dual track it. Let's run down the IPO track. At the same time, you're going to be potentially exclusive or potentially speaking with a number of other SPACs to be able to merge into. But the assurities of such are not necessarily very high. We've seen a lot of deals unwind. We've seen a lot of deals not get the de-SPAC pipe that they wanted to get, or egos and personalities just not getting along, which is obviously very common on the M&A landscape. So we like to recommend to dually track for all of our issuers.
That makes sense. Thanks, David, for those insights. And then maybe just pivoting the conversation a little bit. I know there are a lot of private companies out here in the audience today from Southeast Asia, and a lot of private companies out networking here at the conference today. I know a number of you are considering listing on a U.S. stock exchange, on Nasdaq or the New York Stock Exchange. So, David, maybe you could just talk a little bit for the audience, for some of these executives thinking about listing in the U.S. What are some of the advantages that you see to listing on Nasdaq or the New York Stock Exchange versus listing in a local Southeast Asian exchange?
Yeah, absolutely. So I think it's known that the United States has the most robust capital markets place in the entire world. You have the most amount of institutions, the most amount of capital, and you have the most robust trading systems. So with regard to listing on domestic exchanges, local exchanges, there's no issues with that. We think that that's great to be in your own backyard, but at the same time, if you want the most robust capital markets and secondaries and follow-ons and having all these different types of tools, shelf takedowns, S3 forms, S1 CMPOs, which are confidentially marketed public offerings, or a registered direct or a pipe offering, all of these different avenues in access to capital, it's widely known that the United States is the most robust place to be able to access monies to help you grow your business. So we're not opposed to issuers listing domestically in their home exchanges, but obviously we recommend, and our bread and butter has been raising capital on the U.S. marketplace or in the U.S. marketplace.
And maybe just kind of following on that, David, if a company is listed principally on the SGX or Malaysian Exchange or Hong Kong, What would be some of the advantages to a dual listing, having the American Depository Receipt shares, the ADR shares listed on the NYSE or Nasdaq, and how should a company think about a potential dual list?
Absolutely. So depending on which jurisdiction you're in, if there's reciprocity between the exchanges from listing qualifications and so forth, can determine whether or not how streamlined it would be. That being said, we've seen a lot of issuers list on their home exchanges, not being in the United States, and they'll have their listing on the OTCQB. And for an investment bank like mine, that really limits you on the institutional investors in the United States. The U.S. institutions and people that are institutions worldwide that play in the U.S. marketplace, they really want you to be on a national exchange, whether it be Nasdaq or New York Stock Exchange. You also see a lot more volatility on those exchanges, which leads to cheaper cost of capital, larger capital amounts in your capital offerings, and just having more tools similar to a shelf takedown, which would be, or an ATM, which would be off of a shelf S3 form. So listing in the United States, making sure it's on one of the national exchanges is going to reap most of the benefits. We see some of the very, very large companies, I think it's like Nestle or someone like that, that does list on the OTCQX or QB, or QX I believe it is, and they have some volume, but they really don't need the access to capital in the United States. So those very large mega cap companies, it's arguable if it's necessary to be listed because they're not in the marketplace. But anyone that's between that 50 million market cap and billion plus to 2.5 billion, you should really be dual listing on one of the national exchanges to be able to attract all the institutional investors in the United States and abroad that play in the U.S. capital markets.
Yeah, I would agree with that sentiment. Dave, what are some of the best practices, in your opinion, for foreign-based companies to maintain and to generate visibility in front of U.S.-based investors? And kind of moving into my domain of expertise, how do investor relations activities play an important role here in maintaining and generating visibility with the U.S. investment community?
So visibility is extremely important, especially if you're a foreign filer that's listing in the United States. Just like any other home market, people in the United States want to see an impact in their local markets. Investors like to invest in companies that are in their backyard and so forth. So having that cross-pollination between you being a foreign company, but also having access to the U.S. capital markets and saying that you're going to start to want to have capital in the United States is really important. The best way to maximize it is having a good investor relations program in place. We typically speak to our clients and ideally have a certain amount of proceeds that are going to IR and marketing purposes so that we can attest to that when we're speaking to our investors, when we're looking to do the IPO. We can state that the company is looking to enter into the marketplace, understands the importance of having visibility and also volatility in the securities, which ideally gains you more exposure. With more exposure, more fairly valued, which ideally means your share price goes up and our investors make money. So investors, both institutionally and retail, like to see issuers dedicating capital to broaden their market awareness and provide more exposure on the issuer.
Right, because the initial public offering is not the finish line. It's one step in the life of a corporation or a company, and achieving an IPO, going public in the U.S., is obviously an incredible milestone for an entrepreneur, for a management team, and for the employees of that company. But you now have an obligation to your investors, to your shareholders that you brought into the company through the initial public offering, to communicate with them regularly, to give them updates in terms of corporate developments, through press releases, through attending conferences and giving updates there, through marketing the security to potential new investors, because there's a recycling of investors. Certain shareholders sell, and you need to be bringing in more shareholders as well. This helps create liquidity, builds the shareholder base, and generating institutional interest as well. So the journey continues. It doesn't end at the IPO, and investor relations and corporate communications is a critical part of that. And I might as well plug Skyline Corporate Communications Group. We are, I think, one of the leaders in the U.S. working with small and micro-cap public companies and pre-IPO companies, a lot from the Singapore and Southeast Asia region. We're down to just a couple minutes, David, so maybe we can open it up to questions. But are there any final thoughts, on the benefits of being a publicly traded company in the U.S. and why should companies here seriously consider listing in the U.S.?
Yeah, last thoughts are the United States has the most robust capital markets in the world, largest amount of capital access for issuers that are small cap issuers between that 25-50 million and couple billion. So if you're looking for capital or you're looking to grow your company, there's no better place than the United States, at least for now, to list. So.
Great, thank you, David. We've got a couple minutes, so I did want to open it up to see if there's any questions from the audience, either for myself or for David. Happy to answer any questions that you might have about the U.S. marketplace, process, timing, cost, advantages, and so forth. I know it's getting late in the day. Everyone's getting tired, but if anyone does have a final question, we do have a minute or two left.
Okay, great. We appreciate everybody's time. We'll be mingling at the cocktail reception, which is coming up shortly. So thanks, everyone.
Thank you, everyone.
Testing. Can you hear me? Oh, see, even my microphones are ready on the poolside hour. So, we're going to get to the fun stuff very soon. But, as just now during the poolside chat, they also shared really candidly about what are some of the challenges or what are some of their thoughts, right, around listing in the U.S. or even listing in the local markets. So we just want to say we really appreciate all of you for being here and being really eager to learn, because we are now down to our final panel discussion. There we go. All right, so previously, we had a very interesting, very candid conversation around Singapore's power in the global economy, right? But I think we're also omitting one other powerhouse in this Asia area, which is Hong Kong. So right now, we want to explore that in the next panel discussion on competition or collaboration. Financial institutions' view on Singapore and Hong Kong. It's going to be a showdown. I would love to hear a more honest, candid conversations. And if you have any friends who are outside, please ask them to join us for our final panel discussion. And they're going to learn a lot of insights when we discuss about Singapore and Hong Kong. So right now, I want to welcome our panelist, Ted Teo, Chief Representative of East West Bank's Singapore Representative Office, Jovi Gan, Founder and Director of LMO Consulting Private Limited, Keenan Kwok, Co-Founder of Era.vc, Gordon Tang, Partner at Stevenson Wong & Co. and Albright Law Hong Kong Offices LLP, and last but not least, Diane Fan, Special Counsel to Ortoli Rosenthal LLP, New York. So let's give our panelists a big round of applause.
Hi, good afternoon, everyone. Thank you so much for staying with us. We are the last panel, but I'm pretty sure we will not be the least. I'm so thrilled to have our panel guest speakers here today. Very exciting. I think first of all, I would love to invite our panel guests to introduce themselves to the audience. Maybe we start with Joey.
Thank you, Diane. My name is Jovi. I'm the founder and director of LMO Consulting. We are a regulatory compliance services firm that focuses on advising fund managers and their managed funds, including relevant regulated financial institutions in the likes of Singapore, Cayman Islands, and BVI. Thank you.
Hi, I'm Ted Teo. I'm the Chief Representative of East West Bank in Singapore. East West Bank is a U.S. commercial bank headquartered in Pasadena, California. We have an operating history of 50 years and has been on the Nasdaq over the last 25 years. In the US, we operate out of 110 locations, and in China, we have a bank subsidiary, and in Hong Kong, we have a bank branch. In terms of our size, we are the largest US publicly listed bank in Southern California and the second largest in whole of California. Right, the Singapore office is a representative office. We are registered but not regulated by MAS. Our role in Singapore is to provide client coverage and market coverage for the Asia Pacific region. And some of the area that we spend most of our time in is in the private equity, venture capital, as well as company heading to the US for IPO or for business development. Thank you.
Hi everyone, my name is Gordon Zhang. I'm a partner of Stephenson Wong & Co. as well as Albright Law Firm. Stephenson Wong & Co. and Albright Law Firm are in association together in Hong Kong, and then Stephenson Wong & Co. is a quite a well-established law firm in Hong Kong, and we are ranked number 4 largest local law firm in Hong Kong. And with Albright is one of the largest PLC players, like law firm players as well. And my practice is working on Hong Kong and US IPOs, and for the last 2 years, we have successfully assessed over 10 cases, successful listing in the States. And sorry about my accent, I'm actually born in Hong Kong but raised in Australia, so you can hear a bit of the Australian accent.
Hi, I'm Keenan. I'm from Hong Kong as well. And thanks for letting me share a little bit from the Hong Kong perspective. I guess I'm brought over here to represent a little bit on the business side of things. So even though my first job was at, investment banking, from my first and last job was there, and then I came down to Southeast Asia about 20 years ago and built a business. We sold it to Foxconn, and ever since I've been, running one of my business now called Get Links, and also a climate change VC fund. So it's good to be here today to share a little bit about a very difficult topic at the end of the evening about how Hong Kong and Singapore could cooperate. Thank you.
Thank you, guys. A little bit background of myself. I'm Diane Fan. I'm with the ORY group. We are about to have some exciting news to be sharing with everyone in Hong Kong very soon. Hopefully later this year or earlier next year. So you can see that with the mixed background with all the professional parties here, we have a little bit element adding in from the Hong Kong perspective. We have heard a lot of insightful information and knowledge. I feel myself have learned a lot from all the speaking guests today, all sharing about capital markets in the US and how to, when is a company ripe to list in US, how to prepare. And after the successful listing, we have an awesome ceremony celebration here as well. And I think on panel 3, our guests share something about how to do business in Singapore. What are the attractions? What are the conditions in Singapore? Right now, we want to add in a little bit more Hong Kong element because I think when talking, people are talking about the 2 most important financial centers, financial hub in Asia. It's unavoidable. It's Hong Kong and Singapore right there at the table. So with the in-depth knowledge we have learned from the Singapore senior professions just now, we would love to share a little bit more Hong Kong insightful elements from you guys. But I think our topic, today's discussion will include 3 topics. I think the first one is really like taking a step back. Before you become successful listing, you get the investment funding, you go listing in US. Like when the investors, financial institutions, entrepreneurs, they are choosing the place to doing business, when they are thinking about the investment, which one to choose? Like the first thing, because as a lawyer, right, the first thing you come up is the regulatory consideration. What are the updates? What are the things that are new right now? What's the difference between Hong Kong and Singapore when I'm considering doing asset management, when I'm considering running my business in Hong Kong? So I guess Ted would be the first good one to talk about your thoughts and updates about the MAS, from the MAS. Thank you.
Okay, thanks, Diana. I think if we just maybe take a step back, as Diana mentioned, look at the regulatory regime in Singapore. The banking regulators in Singapore, MAS, has been very much attracting innovations, proactive in attractive innovations into Singapore. Some of the milestones they have made recently is back in 2019, they helped pass the revision to the Payment Services Act, which provided clarity to the payment fintech space as well as the cryptocurrency space. Since then, the industry in this area, fintech area, as well as the crypto exchange, crypto issuers, and cryptocurrencies market has boomed in Singapore because of clarity in their regulations. Then follow very closely in 2020, they passed the VCC Act, which provided the structures and the tax incentive for fund manager, asset manager to set up their operations in Singapore, despite the fact that they might have assets invested globally. So this VCC structure is something new that they have created, and they complement that with a lot of tax incentives so that a professional would choose Singapore as a location for their asset and fund management, right? So these are something that we can see from MAS view, and going forward, they are looking at a couple of areas which is mentioned in their industry transformation plan for 2025. The first area is in the wealth and asset management area, which, we all know that Singapore has been attracting a lot of wealth into Singapore, but in terms of the ecosystem here in Singapore, there's still area where they need to strengthen. One area they are focusing on strengthening is in the insurance and reinsurance area, attracting solutions and players in this area into Singapore. Another one is in the philanthropic services area. This is where they want to strengthen in order to broaden and deepen the ecosystem for wealth and asset management. Very closely related to this sector is the fund management area, especially the PE and VC area. Singapore PE and VC market, or Southeast Asia PE and VC market, is small compared to China and Hong Kong. But there's still area where they can work on to sort of like support the industry. One area they're focusing on is attracting private credit into Singapore, where they would co-invest together with private equity and venture capital to help fast-growing companies grow and maybe eventually get listed locally or overseas. So private credit is an area of focus, and the government is definitely very welcoming for anyone who is thinking about coming into Singapore to play in this market. Next would be the sustainable as well as transitional finance. I believe Hong Kong has a strong emphasis on that as well. Singapore is the same. They have worked with global partners like BlackRock to attract capabilities and capital into Singapore to strengthen this area of capabilities in Singapore. They also provided grants to company who is working towards transition into net zero by 2050. So they are doing all that in order to support this industry. So I think this is an area also, a lot of opportunity if you are in that area in Singapore. Lastly would be the digital infrastructure. They have been very supportive in helping companies to build infrastructure that is based on distributed ledger technology. So not just for payments, but also for trade finance as well as trading of assets. So one example is a company called Partior, which is a joint venture between JP Morgan, Temasek, and DBS, where the three sponsors come together to build a payments gateway that's supported by blockchain. So that is I think this is area where, if you're looking for some opportunity in Singapore, this is the area that I can identify. Thank you.
Thank you, Ted. How about Gordon? What's your thought about the recent regulator update? Because the way I see it, it seems like a lot of new updates happening in both places. It's like, to attract talents, family office, asset management to attract people. They are like playing balls, right? They have some new things happening in one place, the other place kind of like a counterplay. It's a new things update happening so quickly. Can you please share some insights from the Hong Kong perspective? Thank you.
Thank you, Diane. I think Hong Kong do have competitive advantage and opportunities for financial institutions, especially given the latest, updates with regards to the regulations. Hong Kong has always been like a gateway to mainland China, and according to the latest statistics, Hong Kong takes up 60% of the ODIs from mainland China, and this actually amounts to 9% of the total global investments for the whole year. And Hong Kong also takes up 70% of the FDI inflows to mainland China, and that amounts to 7% of the total global investments. So further supported by all the PRC policy and initiatives, Hong Kong has always served as a super connector to mainland China and the world. And also, Hong Kong is always the largest offshore renminbi center, being Hong Kong has a well-established financial system, and Hong Kong using the common law system, as well as have high-quality professional like us. And I think financial institution does takes up an important role to assist Chinese companies to seek offshore fundings. So I would say, given the current regulations, actually provide a lot of advantage and opportunity for the financial institutions in Hong Kong, and in particular to outreach mainland China and the world.
Thank you, Gordon. I think Tech and Gordon have shared some insights about the regulatory consideration. So my next question will be to Joey, because you are actually at the front line, working with a lot of professional parties to help them set up asset management role in Singapore, family office, moving to Singapore, and really making investment. You are the first frontier professional parties to serve all these clients and see all sorts of activities happening here in Singapore. So what's your thought about it?
I think one of the paramount consideration in deciding to set up, I think in Singapore, Hong Kong, or the other part of the world is of course involving tax consideration. So for this also apply to not just fund managers, funds, but also family offices. So broadly in Singapore, we do have a rather robust Section 13 tax incentive. So there are various subclasses under this Section 13. We have the 13O, 13U, and 13D. Broadly, these are the most common ones for the investment asset management industry. So what this tax incentive does, in essence, is to allow investment vehicles to achieve tax neutrality, similar to what you would be getting if you have a Cayman structure. So all relevant income, basically, from your investment activities would be deemed tax-free. So that's how it works. And we do have, of course, there are different prerequisites that you will need to meet beforehand. There's a minimum AUM requirement. There is the number of investment professionals that you need to employ before you can actually apply for the incentive with MAS. And once you get the incentive, it's typically for the lifetime of the vehicle, so there's no need to reapply again. So that is from a funds and family office perspective. However, for the fund manager, there is a separate incentive that basically will reduce their tax rate for their management and performance fee from 17% to 10%. So this is a 5-year award, so you need to refresh this once every 5 years, but you make a lot of savings if you can qualify for that. So these are the broad-based tax incentive in Singapore that's applicable to the asset management industry.
Thank you, Jovi. And last question to Keenan. Keenan, long-term friend, you are our tech guy, really focusing on TMT for such a long time. You have very successful startups in both Hong Kong and anywhere else in Southeast Asia. I think you will have the first insightful handful of information to see the difference to do business in different countries and cities in Asia. Plus, your company, GetLink, is really sending talents to companies in Southeast Asia, like everywhere. So I just wanted to see your sharing with us how you see the regulation trends affecting doing business.
Thanks, Diane. Well, speaking from an entrepreneur's perspective, building the business, whether it's in Hong Kong, East Asia, or Southeast Asia, I think the most important thing to me is money, right? So whether I put my money through my, private bankers, or, we work with the largest family offices, where they choose to put their money eventually needs to come back to the market to build things. So when I'm thinking from an entrepreneur, thinking about accessing capital to grow my business, right? A startup from Series ABC up all the way to the IPO, I think that dynamic is changing a lot now, especially, with the rising interest rate, with the whole market slowing down. But there's massive opportunities right now because of this little slowdown, right? So I know in this conference, we talk a lot about regulations, money flow, and so forth. But the way I see it is there's still a lot of money. But for the entrepreneurs, what we care about is we take any money, right? When we take any money, we, in a way, think about regulation second. Because after we take the money, we have to use the money to grow the sales, hire more people, and so forth. So for this business, for example, like GetLinks I'm building now, we have, the intention is tech will continue to grow, will continue to make a lot of impact. I've got about 10 million of these kind of developers in our database across East Asia and Southeast Asia. But the idea is how do we work with the people that have the money? The people that have the money, they're preserving money, therefore they think about where to put the money, the regulation, and so forth. And then you have that professional layer about how do you deploy the money to actually make impact and put it back into the market. So what I do is, on our cap table, whether it's the Alibaba, whether it's the largest family office in Hong Kong, I think the common theme is they want to put in money, but they need to work with a lot of people across all borders to speed up the growth of impact. So at the end of the day, I think it's a combination of money, technology, and market opportunities. And so hence, when talking about this in a forum between Singapore and Hong Kong, I think there's a lot of kind of these core opportunities around here that allows us to think about capital is around, but what are we doing? What are the business we're injecting in? What are the steps that we can kind of skip over to possibly jump through the traditional VC cycles that possibly access the Nasdaq market a little bit earlier? So these are the exact type of stuff we do. Government's very supportive of us on that. Corporates and family office decision makers are. And especially in a forum like this with all the professional facilitators, they are helping us think about this. But thinking from an entrepreneur perspective, all I care about is how do I get the money and flush that money through, flush and churn that money through positively to make more impact and recycling that. And now we're thinking completely from an East Asia to a Southeast Asia, combined Asia perspective. And I think there's a lot of interesting conversations that are just starting to happen right now.
Thank you, Keenan. He's talking about diversify money resources for investment for entrepreneur, right? It's an interesting topic. So speaking of the investment trend, I have actually another question for Ted, because you're from the commercial bank side, you supervise all these transactions, you see the cash flow. I'm just curious about currently Singapore, what is it like for the cash flow directions?
Well, that's interesting that you mentioned. I think there is right now a sort of the outsourcing and de-risk trend into Southeast Asia. So we do see a lot of activities in Southeast Asia where in the past, where manufacturers tends to be based mostly in China, now they are operating out of Vietnam, Thailand, and Malaysia. And we are seeing that because we're seeing that because we are seeing their profit repatriations into the U.S. In the past, used to be like almost like 100% from China. Now it's like growing from Southeast Asia as well. So we are seeing that kind of trend coming. Yeah, definitely. I think Southeast Asia is at sort of a sweet spot right now. Despite all the turmoil that's going on right now, they are indeed is at a sweet spot. They just need to make sure they take advantage of it, and then maybe add value to the world where they could be intermediaries between two worlds that is not really talking to each other at the moment. Yeah.
Thank you, Ted. Thank you. So I think we'll talk about regulatory considerations. We talk about the general business environment and the vibe in both places. And right now, it's another big topic. I think everybody is talking about it because from the tech side, so many new things happening in the previous few years. It's just one another after the crypto, NTF, Web3, and ESG. There's so many elements here. Like everybody's so afraid, and also the most heated AI concept right now. So everybody's so afraid to be left behind. In terms of Singapore and Hong Kong, like we actually look at the IT and technology innovation and competitiveness. So I think the first question we throw to our TMT guy, Keenan. So would you like to share a little bit more what you see the world right now after all these cool AI, Web3, like the tech innovation stuff in both Singapore and Hong Kong?
Yeah, just to finish Ted's point, I think we're in this time where a lot of the, traditionally in Asia, you have the manufacturers moving down to Southeast Asia, and we're going through a couple of major shifts now, right? One of the major shifts is migration, right? Businesses are coming down to Southeast Asia, they're coming down with capital, they're coming down with orders, they're coming down with people and talents, right? So there's a lot of opportunities for companies like us to help them outbound, inbound, set up team to do things better, right? Whether it's re-exporting or so forth. But a month ago, when I was speaking at the World Bank IFC conference, the theme was, AI on the workforce, or similar to how technology is changing the landscape for Southeast Asia, right? And I think one observation, just to share with you guys a little bit, is in that whole conference, there were only about 10 Asians, okay? And that observation means basically that, one, the world is divided. But when I was there, in a way, supposed to kind of representing, sharing a little bit on behalf of emerging Southeast Asia, which is 700 million people, even compared to only 600 million people in Latin America. The idea is the whole of Asia is nearshoring through the Mexico into America, right? Similar to a similar role of Southeast Asia, what that's doing for the world, okay? So when you talk about the massive economy, the massive money, the massive stuff that is moving, we're still talking about traditional manufacturing stuff, right? But on the topic of blockchain, Web3, all that stuff, I think it's interesting, but then in Southeast Asia, what will happen now is a lot of these technology, like AI, will flush right through, right? In terms of optimizing growth as well as reducing cost. These stuff will happen because all these mobile computer penetration is fully through already, right? But what kind of GDP economic output that would generate, at least a lot of my friends and colleagues will think a lot harder on these things because the VC market might have slowed down a little bit. And so that whole full spectrum of startups to IPO flushing the money back into Asia, that has been disrupted, right? So all of these technologies that are coming into Southeast Asia, before they like US technology. Now it's really a lot of technology from China, from everywhere. But I think something for us to think about is, what are all these technology turning into from a sales number perspective, right? So this is something a lot of us are tracking because we're coming from both investor side as well as us deploying the 10 million people of all of these tech talents that we have to help build things. So yeah, I'll leave it with that.
Thank you, Keenan. So I think panel 3 guests share with us some interesting examples, like how efficient the Singaporean regulatory to check the criminal activities in Singapore. So I think the next question is to Joey, because given the growth of the training AI and all the big data, Web3 transformation, what are some of the challenges that it brings along with it when it comes to doing all the AML, KYC process? Not to mention there's a recently anti-money laundering scandal cases in Singapore, right? So can you share a little bit of that? Thank you.
So given the increasing acceptance of the use of cryptocurrency, and of course the relevant wallets that comes with it as a form of payments and whatnot, which are notable example of the Web3 technology. The thing about this is that Web3 technology facilitates anonymity or pseudo-anonymity. Right? And this basically makes it challenging to identify who is the real user behind it all. I mean, for any financial markets to thrive, there needs to be certain reasonable amount of anonymity in place. But currently, from a Web3 angle, at least from a crypto wallet angle, is getting really challenging to identify who is behind it all. And hence, there's a lot of new regulations that are coming up to deal with this new asset class, not just from MAS, for sure. And on top of that, what makes it challenging as well is that the whole structure is decentralized. So that will continue to be a challenge when it comes to the KYC AML perspective, especially the part on verification on who is the owner of the wallet. And of course, the other part is that there was a lot of hype or discussion around the money laundering case last year. It's definitely one of the biggest globally, and probably the biggest in Singapore history. So following that, what happens is that from a regulatory perspective, there are certain refinement, right? Of course, I must say that in my view, Singapore does have a robust AML framework in place. So what happened could have happened, what happened last year could have happened to any developed jurisdiction, in my opinion. So some of the changes you will be involved, of course, the regulators are stepping up their inspection, not just on regulated financial institutions, but also on corporate service providers. And also, there are certain changes from a regulatory MAS perspective, whereby they recently launched a cosmic platform with, this is the brainchild of MAS with 6 local commercial banks. So basically, it's a data sharing platform on potential red flag associated with clients. So all these changes or updates, what it will mean for businesses in essence is actually higher compliance costs. And not just from a dollars and cents, but from a time perspective. So if you're looking to come on shore, you need to buffer in adequate time for the process to commence and to end.
Thank you, Joey. I guess given that the current situation for KYC AML process, it's more and more complicated. I think we do need to inform all of our clients and companies to be prepared with the right expectation in terms of timing and the procedure. I think it's just a critical issue to doing business anywhere in the world. How about us in Hong Kong, Gordon? So we talk about the financial and tech hub, fintech hub. We have some exciting licensing regulations coming out in Hong Kong, and people are always talking about technological innovation landscape because we have the Cyberpark Fund, like Keenan is quite familiar with, and we have the 科學園嗰個係嚟以前係 TPS, sorry, yes. So can you share a little bit more about that?
Sure. Well, first with the technological innovation landscape, I mean, Hong Kong government has been fostering technological innovation and fintech ecosystem a lot. Since 2017, Hong Kong government has invested over 150 billion Hong Kong dollars in this sector. So in terms of the infrastructure, the landscape, Hong Kong ranked 9 out of 132 economies in the Global Innovation Index. And Hong Kong being devoted to become a crypto hub. June this year, we have a new licensing regime, as Diane just said. It's basically catering for virtual asset trading platform. And this allows well-regulated crypto trading activities, which SFC has already initially approved over 11 crypto exchanges to allow to continue their operations. Amongst those, Crypto.com, which is founded in Hong Kong and operates in Singapore, is apparently one of the largest exchange among the 11. Also, the Hong Kong Stock Exchange has, and SFC also approves the BTC, Bitcoin, and ETH ETFs lately, which also demonstrate Hong Kong's devotion to become a technological innovation and crypto hub.
Thank you, Gordon. I think our guest speakers share with us some insights from their practical experience, from their observe from the market. We talk about enough about comparing Hong Kong to Singapore. What are the difference? What's the advantages or disadvantages? And if you check out, if you Google it, right, just Google the two names of these places, and all the media pop outs is all picking sides. You see that there's a lot of comparisons going on. So I couldn't help when I'm preparing the outline for this panel, because we are sitting here, we have guests flying from Hong Kong, in Singapore. And I think Joey will be the best one to start with the collaboration and cooperation between these two places, because Joey just flying in from Hong Kong to Singapore. He arrived just from the airport to join our panel. Thanks again. And I was so worried that he couldn't make it to our panel, but luckily that's very convenient actually from Hong Kong to Singapore right now. So I think it's a good point to look at what really these two places can do. I mean, like, can they pair up and better serve our clients together as a form of collaboration? And not just to serve the clients from Singapore, Hong Kong, but also from Southeast Asia and the globe.
Thanks, Diane. I will focus a little bit more from family offices perspective, right? There's been a lot of talk around this particular topic, and I must say, we are seated and arranged like this. It's not Hong Kong versus Singapore. It was just randomly assigned, in case you guys are thinking otherwise. So currently, I would say there's 3 hot locations for setting up family offices. We have Singapore, Hong Kong, and of course, Dubai. So each has its pros and cons, of course, but one thing in common is that they are competing very actively to lure family offices to set up onshore by offering very good tax incentives, coupled with strong business infrastructure to set up there. So in my mind, there is definitely, it's not really a competition. What I would say is that where you decide to set up, it comes down on a few considerations. Firstly, there is, the most importantly, where you foresee your future growth to be. If you're focusing on Middle East or Africa, I would say Dubai would be your gateway. If you're going to mainland China, it'll be Hong Kong for sure. And Singapore will be for Southeast Asia. So that should be one of your first few considerations. The second is obviously the lifestyle. What would suit your business, your company, right, and so on, and then coupled with the tax incentive. So in my view, it's never a competition like Singapore against Hong Kong or anywhere else, because for the benefit of the wider ecosystem, we need to have choices. It will be a disaster if there's only one option and everyone goes for that option. It will not be sustainable.
True, very good point. I think it's very important to keep all your options open and be open-minded and really have in-depth understanding of different markets so that you can make the best choice for the variety of different parameter of your investment or doing business. I think it's a very good point. Thank you, Joey. Next, I want to go back to Gordon and maybe tag together because right now we're seeing the two places for collaboration and also just Joey mentioned, if you are sitting in Hong Kong, naturally like half an hour to Shenzhen, 1 hour to Shenzhen from Central right now, like by bus, by car. And of course, Singapore is covered the entire Southeast Asia area. So you have the connecting point and hubs to reach out like a spider net. It's much easier to doing business here. So considering these two advantages, maybe we start with Gordon first, like for the geopolitical advice, how you see Hong Kong.
Well, I think there's a lot of cooperation can be made between, because Hong Kong, I think especially given the recent years, renminbi is gaining its market share in the international payments, and Hong Kong being one of the largest renminbi offshore center. A lot of Chinese companies is seeking to open up a branch and then seeking for funding in Hong Kong as well. So I guess that takes up to allow a lot of collaboration and cooperation with Singapore and the rest of the world. So.
Just from my perspective, if I'm taking a perspective of Hong Kong, I think Singapore definitely is one of the first spot that you should consider when you want to cover the Southeast Asia market. That is, there's no question about it. Another thing about Singapore is that if you want to cover Southeast Asia, it's easier to find a talent in Singapore that can speak Thai, Malay, or Bahasa Indonesia. A Filipino. A lot easier in Singapore to find that talent than you do, I think, in Hong Kong. So that is also another advantage why you want to use Singapore at least as your headquarters to cover Southeast Asia. That's one thing. Second area is that Singapore, as part of ASEAN, has a free trade agreement with Japan as well as with India. So from a business perspective, you might want to leverage that because not that many countries or places have a free trade agreement with Japan and India, right? So that is one. And then the third area is Singapore is one of the few countries in Asia where we have a free trade agreement with US, right? And I don't think you have that in any other countries except possibly Japan, right? So in terms of business and trade, Singapore is also a good place where you can consider using as a point where you export into the US and do trade with the US. In terms of regional, there's another interesting point I want to mention as well. Singapore is the largest FDI country into India. Singapore accounts for 25% of FDI money into India. Right, so that is something interesting as well, which means there's a lot of investment into India is coming through Singapore. So that is something that you might want to take take into considerations when you look at Singapore as a potential partners and stepping stones for you to reach out to the international market.
Thank you, Ted and Gordon. From my personal experience, I can tell that my current clients, they are mostly from mainland China and some local Hong Kong clients as well. Usually they won't put all the eggs in one basket. So people have clients just got the Type 9 SFC license in Hong Kong. They're talking about we should get the same from Singapore, maybe Dubai. So they're actually being open-minded, looking around the globe. So I think I don't try to be humble, but I think Singapore and Hong Kong are the most two leading the places in the world to really benefit together to serve clients from the globe. I think it's really a leading position here. So my next question is to Keenan. How do you see that what the West can benefit from it, what the world can benefit from these two driving horses in the leading position?
Yeah, so I think how can the West or the world benefit from Singapore and Hong Kong working better together, right? So I think we have to first kind of define, right? What we're talking about is money here, right? So there's naturally the facilitators. You're either managing money, right? For catching alpha or wealth preservation, you're one camp, and the other camp, like me, is spending money, right? So depending on which side you sit on, okay? And the second factor, I think it's time frame, right? Are we talking about 1 year, 5 year, 10 year, 20 years, or 30 years, right? I don't think East Asia is going away. I don't think Southeast Asia is going away, right? So I think both Hong Kong and Singapore are very important for one very important reason, similar to how we feel in this particular conference, right? Because I lived in Southeast Asia for 20 years, right? Thailand, Vietnam, Indonesia, Philippines, the market, the language, the culture is highly fragmented, right? But it's super exciting because it's real economy, similar to that of China, right? But I think Singapore and Hong Kong plays a very crucial role, which is Hong Kong and Singaporean, at the end of the day, we speak much more similar languages than the people possibly elsewhere, okay? No matter whether I'm speaking my broken English, my Chinese, my Mandarin, my Hokkien, my whatever, you guys understand, okay? So this is, in conferences like this, I'm already starting to have a lot of these conversations. It's like, really? Hey, Jason, did you really just do a deal like that? Really? Did it work? Who did it? Are you sure it was done? Can it be replicated? Can I bring more people in to do it? Can you give me a discount? Right? We're talking about similar languages to replicate deals, and these are conversations that are happening in these type of Singaporean, Hong Kong dynamics much easier and faster than if it was a Chinese speaking to someone in Indonesia, right? So that level of communication is our opportunity, is why we exist, right? But of course, factoring in the money flow, the technology flow, and the way to be able to broker some of these things with structure and regulation to be able to scale. Then we're basically packaging deals in Asia to the West, right? And so even this topic of West is fresh to me today. I'm learning about it. I always thought we're too small for it. But if the world is changing, and if they think us Asian companies from East to Southeast Asia combined are interesting, big enough with enough growth where they will take us on, then I'm sure the regulators would somehow support us on that as well, because we're seeing that across the board, all the way from the key decision makers from family offices to the regulators and governments, right? So I'm highly optimistic that if we get kind of this Asia straight done, there should be some good stuff happening with the West.
Thank you so much. I think that's the key point that why we're sitting here today. So the ORY conference concept is really connecting the world. So I think we cannot just always look at the differences of different countries and cities. We need to look at the broader picture. I'm pretty sure, just to sum up our topic today, I think there's enough room for both Singapore and Hong Kong. There's more than very exciting opportunities for both Singapore and Hong Kong as well. I think when we discuss about the advantage, about all the considerations in these two different places, we cannot just say one and demise the other. So we need to I really hope that we can, people can look at this together and doing business together. So any last 30 minutes sum up for each of our panelist speakers? We'll start with Joey.
For me, the key takeaway is that I would like to see, at least from my perspective, we are two countries, two economies that need each other to thrive, and we can do so together in many different respects. Like what Keenan mentioned, we have very similarly, from a culture, from a language perspective, I think that makes business generally quite easy. And we have many actually other similarities from an economy setup, from a business infrastructure. So I hope to see, I see this as we can thrive together in this part of the world.
Yeah, I think Hong Kong definitely have its strength, which is very obvious. They are the gateway to China. Their equity market is definitely much bigger and deeper than in Singapore. Well, Singapore is more a gateway sort of into ASEAN, and connectivity into ASEAN is where there's a strength. That connectivity is not just in business, but also in the fintech space. For example, in Singapore, there is a instant payment connectivity to Malaysia, to Thailand, and also to India, and they are building that into other countries as well. So if you are a fintech looking at connectivity in terms of payment from China to Hong Kong to Southeast Asia, Singapore is a good place to consider hooking on so that you can hook on to the rest of ASEAN. All right, thank you.
Yes, I very much agree as well. Like, we do have a lot of things that we can collaborate, and I can see that as a competition. I mean, like all those are all opportunity for us to collaborate together and create more, like even more opportunities.
Yeah, I kind of think of it goes back to this original donut circle, right, that we kind of started with, right? And if we're sitting here, Singapore, the full loop of this whole thing is about whether we can share ideas, right? So when I mentioned when I was, in Mexico, they were sharing, allowing us to take the innovation to bring back if we can. But in Singapore, I actually find it quite interesting because they were not only sharing, but they were sharing very passionately. And this is something I don't see in Hong Kong, okay? So there's probably half of this room that comes from Hong Kong and Singapore, and the rest are some of you guys looking at Hong Kong and Singapore, okay? And Hong Kong needs Singapore because we need a stage like this to allow us to share the ideas, right, to put through to action. And I don't want to compare because we never compare. So I think the only thing we can do in the next 10, 20 years where we can make impact while we can is really share as much as you can and kind of do what you can within the capacity that you're in. But I definitely think Singapore is kind of that playground that allows us to kind of connect the whole Asia up. It is because we're willing to come here, bring everything we have here, to have that conversation, to structure the projects, to take it to the next step forward. So I'm grateful for this conference. Thank you.
Thank you, Keenan. We actually have a few minutes for questions from the audience. I was just wondering, anyone will have any questions want to share with panelists?
Thank you for sharing. That's very insightful. I probably have two questions. The first question is about how the family office operates in both Hong Kong and Singapore. Because I think with my very limited knowledge, it seems like they pick on different parameters, but it actually distilled down to two aspects. One is the cost, and the second one is the variety of products to choose from. So if possible, probably share with us like what is the current comparison in these two aspects on both cities, and what do you see the future trend evolving, like if Singapore is going to be more rich in product variety or the other way around. That's the first question. And the second question, maybe it's to Keenan, because you have been investing and you have been a long-term entrepreneur, and you also mentioned about this AI and frontier tech engagement in the new businesses. However, we also know that it's also a very sensitive geopolitical issue that we're facing. Like if you are a new company that's using the cutting-edge AI technology, what are also the attentions, where should they pay attention to avoid maybe a trap later on, people cannot invest in you because you are using AI that's stepping into the sensitive concern. Yeah, those are my two questions. Thank you.
Thank you. I think I'm going to jump into the family office question from the Hong Kong perspective first, because I think despite all the rules and regulations and legal requirements and benefits, tax incentive, etc., there's always extra credit when you're choosing the family office, because the family office means that it's either single family office or multi-family office. You need to be served by the professional parties locally. So I always look at this, the choose of the location with extra credits from people who's working for you. Say if you set up family office in Singapore, right? You facing the choice of different professional parties, that if you are, naturally my clients are from mainland China, they will want to find someone in Hong Kong who can speak Mandarin, or even Hokkien and Hakka, and then Cantonese, of course, and who will also cope with their working style. For example, you do need to reply to WeChat messages, WhatsApp messages to a client. So I don't know whether that is the same in Singapore. So I think despite all the critical conditions and considerations, I think extra credit, once that happens, it's always how these family offices get clients from Asia. So maybe Joey can jump in a little bit side about the Singapore part. Thank you.
Thanks, Diane. Family offices in both jurisdictions, in terms of their requirements, prerequisites, right, broad-base wise, they are generally rather similar. Right? And the end objective, of course, hinges on the tax incentive, which both are equally the same, the outcome. We're talking about tax neutrality here. That's what we want to achieve. Now, but there's one very huge consideration practically, that is currently working somewhat against Singapore, which is why, at least from what I'm observing, the inquiries about setting up a family office in Singapore is slowing down. And that is, number one, the much longer processing time. I'm seeing cases of, we are talking about 18 months or more for single family office. Right. That's one thing, practically. So if you want it quick, you want it fast, probably you may want to look at other options. The second part is, of course, the stricter requirements that MAS has since put in place. So from initial, there wasn't really an explicit minimal. It was pushed up to 10 million Sing, and then now it's 20 million at the onset, right, at the point of application. And not to mention, part of the AUM has to be invested in certain categories of products that has a nexus to Singapore. So this may not work very well for single family offices that have certain investment objective of their own. So that's my take.
Thank you, Joey. And the second question is addressed to Keenan, right? Second question is to Keenan, like an entrepreneur. And
sure. I'll try to blend those two questions in, but since it's sensitive and we're in like a legal conference, I'm sure the lawyers will protect me and whatever I say, right? But then
depends, but yeah.
Right? Money, okay, a private bank account, okay. I think number one is because of diversification, right, out of one jurisdiction, right. The second is the point. If I was to open a family office in Hong Kong, it will take me 2 years. Do I want to wait 2 years? And it's very expensive, right? And number three, can I invest in a lot of deals, right? If my money is over there, right? So the third point kind of links to this whole AI trend, which I believe is the future, right? So, with this whole AI, Hong Kong, China is kind of shut out a little bit. But then, that doesn't stop at exponential pace. And then you have all these AI application layers that will turn every previous businesses upside down. Forget about whether each one of them are investable. So you're going to have a whole layer of new businesses that are coming. Win or not, nobody knows. But if your money is not in the right place, are you allowed to invest in them? Are you allowed to cash out from them? And if you're allowed today, what will happen to you 20, 30 years later? Nobody knows, right? So I think we're at a very, very interesting intersection, because I'm taking one of the biggest kind of family office that has been set up in Hong Kong to take all the tech entrepreneurs' money that is already offshore outside And it's all coming, a lot of it is coming down to Southeast Asia, right? Right? And these guys know how to invest. These guys know how to preserve. These guys know how to build, right? And they're not going to miss this AI train, right? So, yeah. So, I mean, with the regulator stuff, I leave it with the regulators. Like I said, I want to sit on a side that is spending money. Spending money, making impact, putting the people together, institutionalized, platformizing, putting as many people together as possible. And I'm building bottom up, right? So bottom up, we have a lot of facilitators. Bottom up people, they'll never have a chance to kind of talk to people like you guys, right? Let alone the regulators. So I think, you know, hopefully some of these conferences is, you know, what it takes to kind of connect all the pieces up. Yeah.
Thank you so much. I think I don't want to hold up anymore for our cocktail party after our panel. So you guys are awesome. Thank you. Well done. Thank you so much. Thank you, audience. Thank you.
Thank you.
Thank you so much to all our panelists. That was a really great balanced discussion, you know, talking about Singapore and Hong Kong, really evaluating kind of the other benefits, also kind of the perspectives, right, around, I think we'll take a picture first, Diane, yeah. So very balanced perspectives, and we really appreciate, you know, talking about more in depth of how the interconnectivity, right, of Singapore and Hong Kong is as well. So today it has been a long day of action-packed learnings, and here's some of the things, you know, I caught from our conference today. So first, of course, we had blessings from a white bison, and next we learned a lot from a holistic perspective about our IPO experience, right? The hardware of regulatory restrictions, managing investor relations, but also about the hardware, about sharing stories and the importance of building relationships way before we start considering the IPO experience. And last but not least, today we talked a lot about global trends and explored more possibilities. We touched on AI, we talked about the strengths of Singapore versus the strengths of Hong Kong, and we explored all these in greater details. So I hope today you had a lot of insightful takeaways, and now that we've shared ideas and started connecting all this, right now, it is time for a cocktail hour where you get to connect with one another. So please note that our cocktail hour will start at 5, but before you rush off, I want to share a little bit more about the fun that you'll experience tomorrow as well. Tomorrow for our day 2, we'll meet at Rumors Beach Club. The shuttle bus will start at 5 p.m. The pickup will be from Capella main lobby. There will be a 15-minute waiting interval. Our event will start from 6 to 11, I guess 11 p.m. plus, depending on how excited tomorrow you get. So remember, tomorrow is Bali themed, so we don't want to see any, you know, suits. Please make sure you show up in your best party outfit, all right? There'll be exciting performances and activities. We will also have a shuttle bus back to Capella at 11 p.m. 所以呢，明天我们也为了各位参会者准备了非常精彩的沙滩派对的节目哦。明天呢，我们会在 Rumors Beach Club 见，所以请各位准备好，尽情的狂欢，让我们一起来派对，好不好？接驳车呢也会在下午5点从 Capella 酒店出发，所以请大家准备好，好吗？And last but not least, everybody, if you're driving in, you can use the same QR code you used today to access Sentosa again. And last but not least, the fun, of course, starts now. You can head over to Bob's Bar upstairs, presented by Edgar Agents LLC, for an exclusive networking session. Please note that registration will start at 5 p.m. So in the meantime, you can walk around, network, hang out with old friends and new. And please remember to head up in 15 minutes' time for Bob's Bar. And we want to thank all our sponsors, speakers, but more than that, we want to thank each and every one of you for your active participation, for staying throughout. We're so thankful to have you, and I'm sure we'll see you next year. And once again, thank you for joining us at our ORY APAC-US Conference 2024. I'm Ivy. I'm really happy that I served as your MC today. And I hope you have the best day ahead, networking, and tomorrow, enjoy the Bali-themed party. Enjoy your day, guys. Thank you so much.
going to make this quick because I cannot ramble too much, so I wrote down some stuff. All right? So listen, first off, thank you very much. I just want to welcome everyone to this special cocktail event. Seth Fishman, Steve Yakubov from Edgar Abrams as well. We want everyone to enjoy. Tonight we are here to celebrate not only and to share success and partnership, but also spirits of collaboration and innovation that drives us forward. First and foremost, I would like to extend a heartfelt gratitude to their Telly firm, Jason, Dorona, Bill, Ivan. The hard work that makes this event possible year after year. On behalf of Edgar Agents, we are honored to sponsor this event. Our commitment to excellence and passion for building lasting relationships are central to our mission. Edgar Agents specializes in providing top-tier compliance regulatory filings on Edgar with the SEC, ensuring all our... Ensuring all our clients regulatory complexities and confidence and ease. As we enjoy this evening, let us take the opportunity to connect, share ideas, and inspire one another. Thank you for being here. Everyone enjoy drinks for the next 2 hours. We've got some specialty drinks, beer, wine, and liquor. Thank you very much.